POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open with me, Neeraj Shah, and my colleagues Hiral Daria and Alex Matthew. And well, guys, I have a lot of things happening in the markets, but amongst things that stood out in the last 24 to 48 hours for me, I read in one of the global publications that the El Nino across the world, of course, not just an India phenomenon, but the El Nino phenomenon is on track to be the most powerful El Nino of the past 76 years. Now, if this doesn't cause weather disruptions, then I don't know what will.
Yeah, I can imagine. But the only thing is that this is, of course, around the world, right? And how much of an impact will it have on the Indian peninsula is something that we need to judge. And I think it's primed to have a conversation with the IMD or
SkyMet,
or the SkyMet. Because, I mean, sitting here in Mumbai, you would think that the monsoons are good. But ultimately, it depends on the spatial distribution of the monsoon, which only they can talk about.
Yeah, but in terms of India as well, they're still not talking about
the risk.
No, I mean, they've started talking about the risk as just a potential risk, but we've not got there. And in terms of the distribution as well, they've not 100% confirmed that we will be probably ready to meet at least 95-100% of what we've seen in the past.
Yeah, long term, it's definitely going to be closer to that 90% mark of the long period average. But whether or not the spatial distribution is enough is another question altogether. But let's talk about what's happening around the world, and maybe we'll delve a little deeper into that later on in the show. Talks continue between the US and Iran, according to Trump at least. Trump is saying that there was an all-day negotiation on Tuesday with Iran. He characterized those talks as positives. But he also threatened to hit Iran very hard, or really hard, if no deal was reached. The other thing is source-based information or reports coming through about Iran potentially controlling inbound shipping into the Gulf via the Strait of Hormuz, and that seems to be what is being discussed, at least the source-based information that Reuters has picked up of the proposed deal between Iran and Oman, and they were quoting Iran official as well as other regional officials, which they have not named. And so it remains to be seen. There's no comment from the US on this, of course. There is some element of a fee that both Iran and Oman would levy on all goods that flow through into the Gulf. Iran has warned Gulf states, meanwhile, that any new US attack would trigger retaliation against them. And Tehran is threatened to hit critical energy infrastructure in that region. Let's talk about markets. Oil has remained more or less range bound, and with Brent sub that $80 per barrel marker, very close to it. It currently at, there you go, it's just under $80 to the barrel. But really the big story wasn't gold prices. They've spiked as bond yields eased globally. Bond yields, of course, have cooled on account of geopolitical tensions easing, and also to a certain extent because in the US the expectation of a rate hike has maybe gotten pushed a little further down the road. Spot gold climbed as much as 4% on Wednesday and rose above the June 18 levels. The dollar has dropped to a near 6-week low as well. The dollar index, by the way, cooled to 99.6 from what I saw on the charts versus 101.5 at the end of July. Of course, the dollar index only measures it against a basket of currencies, and you would have to look at other pairs as well. US equities ended mixed. Dow has gained about 0.5% or so. The S&P 500 fell about 0.2%, and the tech-heavy Nasdaq dropped as much as 0.8%. In the Asia-Pacific region as well, it's a bit of a mixed start. You had the Nikkei 225 trading with cuts of about 1.75%. The Kospi is actually sliding considerably more if we have that. Okay, I saw earlier today down as much as 4% or more at one point. Hang Seng down as much as 2%. Tim Waterer, a chief market analyst at KCM Trade, is joining us this morning. Tim, thanks so much for taking the time. I want to ask about risk
assets and potentially the rotation out of them, and the fact that gold climbed as much as it did. Are you seeing the trigger for precious metals as yields coming off, or the fact that risk assets have had quite the run?
Nice to be with you again. Good morning. Yes, it's really a combination of factors. Gold had a very tight range there for a number of months. Obviously started off the year with a bang, but since the war began, that that combination of high oil, high US dollar kept the gold price pinned down. It was really struggling to make much headway above 4,000, but really this week we have seen lower oil prices, like you mentioned. The dollar index, that's made a move over the past week since the intervention last week in terms of support for the yen. Dollar index back below 100 now. And US yields, yes, they've come off the boil a little bit, still elevated, but closer to 4.5%, 4.6% on the 10-year. The threat of going to 5% has alleviated somewhat. Softer ADP private payrolls print last night. So it's really a combination of factors that released the shackles for gold, and that's why it's now trading around 4,300 at the moment. I think if it is to make a return back to 4,500, I think we'll probably need to see oil come off further weakness in the dollar as well. So I guess it ties into how the jobs figures pan out later this week, and what happens with these reported negotiations regarding the Strait of Hormuz at the moment.
Okay. Tim, good morning. Hiral here. Now, you've mentioned about what's happening with gold. My question is, if inflation remains sticky in the US, your oil prices stay where they are. We're talking still right now of $80 per barrel, not heightened to what, 100, 110, 120 that we've seen in the past as well. And you're talking of the way the dollar will move. A combination of this, how big a headwind is that going to become for the emerging markets, according to you, in the near term?
That's right. A lot of variables there at the moment, isn't there? Because in terms of the dollar itself, you would say that was an artificial impact on the market in terms of that coordinated effort by Japan and the US. So it's really fighting against the natural market forces there. So, but what that intervention has done is, I guess, buy some time for some more favourable dynamics for the yen. Inflation in the US, look, the last print we had, it was more tolerable at 3.5%. So I think you mentioned earlier in the intro that some of the expectations for a potential rate hike from the Fed in September, they've been scaled back a little bit. That's helping risk assets as well. I don't think the US, on their part, they want to see a stronger yen, but I don't think they want to really weaken the US dollar too much in terms of impacting the purchasing power there. So it's a bit of a delicate balance they're playing. But in terms of like emerging markets, I think certainly lower oil is a good sign. Like you say, 2 weeks ago, Brent was around about $100. So 80 much more tolerable right now. Whether it can stay there or not, that's another question. We know that the memorandum of understanding, that was pretty short-lived. If there is a
Tim, sorry, can I intervene? Did I hear you say that you think that the US administration wants yen to not appreciate? Because I thought the US may actually want the yen to appreciate, even as they don't want Japan to sell the treasuries. But ideally, they would want the yen to appreciate a bit, isn't it?
They want the yen to appreciate. That's right. But at the same token, they don't want the US dollar to depreciate too much. So that's where the balancing act comes into play. Okay. And hence why there was that swap facility in terms of exchanging Japanese treasuries for the dollar. So it's a delicate balance. How do you get yen strength without dollar weakness? So we've seen moderate dollar weakness dropping from 101 to about 99.5 right now. But whether it drops further, let's see if oil prices continue their descent. Inflation expectations reined in, that could see the US dollar come off a little bit further.
Yeah, the interesting was Scott Bessent's comment, right? The US will do whatever it takes to help Japan prop up the ailing yen. I mean, is a lot of subterfuge out there. A quick question then, Tim, and because you must be looking at emerging markets, maybe India as well. With the dynamics at play right now, is there a risk of an unwind of the carry trade impacting risk assets? Because God knows the risk assets like equities can do without another risk on the horizon.
That's right. That's very interesting comments from Scott Bessent, wasn't it, as you say? And I think that does illustrate the fear of a big unwinding of the carry trade. So I think the Fed are trying to delay that. Bank of Japan, monetary authorities in Japan as well. I mean, we don't have to cast our minds back too far to see a an episode where there was that unwinding happen in August 2024, which resulted in a 12% daily drop in the Nikkei. So I think there's certainly interest on both Japan and the US to prevent that from happening again. Will we see a natural unwinding? Well, yeah, look, right now, the way things stand at the moment is still very much in favour of, shorting the yen, buying the dollar. But if there is a change in that yield differential, that could change the picture there. So, but I think, yeah, a lot of central banks around the world very nervous if we did see another episode of an unwinding of that carry trade, because like you alluded to, that does really underpin a lot of support for risk assets at the moment, is keeping that cheap money flowing to invest in assets around the globe.
So the yen carry trade that comes to the forefront yet again as well. But thank you, Tim, so much for joining in. Always a pleasure to speak to you at NDTV. If you see in terms of yesterday's markets, I mean, we've ended flat, and this is despite the tailwinds when you talk about the gap up start. Now, we've ended marginally positive despite that strong global cues and a sharp fall in crude prices as well. Nifty opened with a gap up but encountered strong resistance in that 24,660, 24,680 zone. And in the last three sessions, Nifty has consolidated within that range of 24,774 and 24,428. That's that broad range that you've looked at. We saw more than a 50-point spike in closing auction session yesterday, but it has been lower versus what we saw in terms of the previous two sessions. In terms of the cash market volumes, they were higher by 5% versus the previous session in terms of the NSE. If you talk about Bank Nifty as well, the closing price post the closing auction session came at 57,740, which is almost 110 points higher versus the price that we saw at 315. Sectoral performance, an absolute mixed bag. Metals, auto and real estate ended with the biggest gains, whereas media, private banks, FMCG, these were the stocks that were amongst the top losers. It was interesting to see the broader indices also outperforming, wherein the mid-cap 100 ended with marginal gains of 0.2%, whereas your small cap actually advanced nearly 0.8%. So the breadth also turned positive, with the BSE advanced decline ratio at 1.2 kind of a level. Now, there has been renewed buying interest that we're seeing in the mid-cap and the small cap space that has continued, and this is again after that mild profit booking that came in a couple of days ago. So I think the moat still continues to remain, I think, Neeraj, in the broader markets, where sell on rise, buy on declines is what is happening. I think, I don't know for how many sessions.
Yeah. And once again, we reiterate, ignore the percentage moves on the Nifty. Just look at the levels per se. But I think that sums it up. So 2-3 points here on the trade setup today. One, that the bottom-up ideation will continue, and therefore, even if large caps were to flatline, you will see bottom-up ideation continuing, and that is actually a positive sign, because that's what you want. You don't want the markets to falter too much, that people don't make money per se even at the broader end of the spectrum. As we speak, the Nifty small cap index at all-time highs speaks volumes, right, about what's happening in the market, even if the Nifty is actually flatlining about 2,000 points lower or 1,500 points lower than all-time highs. We are the other interesting thing from a trader's perspective is that we are starting to see increasing instances of results getting sold into big time. So there's a lot of pre-buying that is happening into names now, because suddenly the market seems to have developed the confidence that results in a lot of sectors will be good, and therefore there is a lot of pre-buying happening and selling on news that is happening. So be mindful of that if you're trading good results after they have come. But a sector that is really standing out in terms of results is chemical companies. I think Alex is going to talk about one or two today, chemical and pharma, but just the kind of blowout numbers that almost every single chemical company is dished out this quarter is quite stunning. The trick, though, viewers, is to figure out where is it that quarter two as well might look good. I don't think too many people will be able to predict what happens for the whole year in this space. But if there is a commentary given by companies around quarter two looking okay, then there might be some sustenance of this bounce, because they are trading at valuations or levels that they maybe traded 3, 4, 5 years ago as well. So be mindful of that. A positive, though, for our markets, I think Hiral enumerated it. I'm just laying it out again, that FIs have just completed a 6-day net buying streak in Indian equities, the longest since April 2025. So that side of the puzzle is looking Okay.
And just before you get to that, one more point, which is the paper that is getting into the market finally, right? IPO is coming through.
Yeah.
We're talking about 1 or 2 every day. There's a listing today. There are a couple of IPO announcements or conferences
That's
today.
we have two
QIPs, FPOs.
LIC, OFS is taking place. So quite a bit of paper coming into the market and being absorbed as well.
Absolutely. So there is absorption happening in the primary markets. Secondary markets, just a thought. Because of CAS as well in the last 3 sessions, is that becoming a moat for FIIs to somewhere come and look and make money?
I
just a thought.
I mean, I don't know.
I think the volumes are a little too low to think that they're going to make a significant amount of, because the turnover was what, 1,300, 1,000.
I've not seen that number, but close to, I think thereabouts.
Just over 1,000 crore rupees. So, I mean, in the larger scheme of things.
No, I'm saying as a deployment, will that be potentially
I don't know.
a higher game? A bigger game later
I will
on.
say that there's a lot of theories right now about how the cash should be done. And I'm sure that there is conversation right now between the regulator and brokers.
A lot of brokers,
we've extended an invite too. Let's see how this goes.
This is going to be interesting. Okay, but very quickly, to add to what Neeraj and Alex have been talking about as well, and what is expected today in terms of what markets are looking like, you have seen that consolidation after the recent rally, but the technical structure continues to remain bullish as well. Now, if you talk about the momentum indicators, positive, and you have India VIX as well, which is slightly subdued, right? So a decisive breakout about 24,800 can actually open the gateways towards 25,000 as well. While if you break 24,400, it may trigger a deeper correction. The resistance comes in at 24,670, and your key resistance band is 24,700 to 24,800. It's a 100-point range that you should be tracking. On the support side, the first level is 24,530. Major buy on dips base is what is being formed at 24,500 and 24,400 as well. In terms of Bank Nifty, you're seeing resistance at 57,890, and the resistance band comes in at 58,100 and 58,200. That's the range. And if there is a sustained move, you could open up levels of 58,600 and 59,000 as well. And the support is coming in at 57,530. The critical demand floor for Bank Nifty is being built at 57,400 to 57,300 as well. So watch out for these levels pretty closely in trade. But let's also head across to my colleague Puneet, who is standing by with what the FNOQs are actually indicating in trade today. Puneet, good morning.
Good morning, Hiral. We have seen these, the Qs. Good morning here.
Yeah, I've been wondering about that for the last couple of days. Huh?
Good morning to all three of you. But there's been the volatility that's seen on Nifty 50, but also... Pardon me.
See, that's the point.
Yeah.
That's why you should say good morning to everybody.
The curse from the main table is visible also on the screen right now as well, because as we have seen on Tuesday, because of cash, there was some volatility coming in on Nifty 50. Expect that to come through today as well. So Sensex expiry today, and hence a lot of those moves will be important to watch at this point of time. The implied open in the green, the Nifty at 24,600 odd is where we closed out yesterday, and hence it's a decent zone at this point of time where we built in, but also important to look at the Bank Nifty too. 57,700 is where we are. We talked about the levels, but 58,200, 58,800 continue to be levels that we are monitoring as well. But if FCNRB is the trigger, is something to watch, because we've had earnings as well as the MPC meet now done, and hence the next leg of trigger is something to watch, at least on the Bank Nifty for now. For investors, sold off roughly 940 crores on Wednesday. They were buyers in the previous 2 sessions, but the index long that we've been highlighting, almost 88 to 89% kind of a short position that they've built in. It's some momentum built in, but not too much as of now to form a trend. And finally, in terms of what we have seen on open interest distribution as well, here you started to see these elevated levels now come into our screen. So 25,000 is seeing the most active call open interest at this point of time. 24,600 also continues to be the near term in the money open interest that we are watching out for. But overall, seen some reduction in put positions between 24,200 and 24,400 as the index has moved towards that higher range. And finally, for stock-specific action, you have seen Within this, BSE as well as MCX both seeing some build-up of shorts. Marico, despite good results, and it's the point that Neeraj was making, that all good results getting sold into as well at this point of time. Marico definitely a candidate in that. Sona BLW, the momentum just continues yet again post results, up now above that 800 rupee mark. Finally, in terms of what we've seen for the open interest loser side, LIC and Pidilite, the top two ones which have seen covering of shorts. TVS Motors yet again at elevated levels, seeing some short covering, but not too much to form a trend for now. But it will be a day yet again for benchmarks. Expect some volatility because of the Sensex expiry, and I think what happens at the last 15 minutes also will be very crucial today.
Absolutely. All right. Thanks so much, Puneet, for that. Now, CDMO companies and chemical companies on my list today, chemical and fertilizer, but actually the chemical component of that company is the one that has done incredibly well. I'll get to that in just a bit. We're talking about the three stocks that each of us have picked in. On top of my list is Newland Lab. Custom manufacturing solutions, generic drug substances, both those business lines have done pretty well for the company, have bolstered growth. The company's margins actually bottomed out in the first quarter of FY26. So therefore, when you look on a year-on-year basis, the margins do look absolutely spectacular. They have cooled off from the Q4 levels though, but they remained very close to that 35% mark. So in Q4, they stood at about 40%. It's cooled off to about 35%. What has aided this? This is something that's been in the works for some time. It played out in the fourth quarter. Operating leverage, better mix, both of those have aided the margin performance. So the PAT number at 147.7 crore rupees compared with 14 crore on a year-on-year basis, that certainly looks absolutely spectacular. So too does the top line growth, 642 crore versus just under 300 crore rupees, and the EBITDA growth has been substantial. Margins stand at 34.7%. If you thought that was fantastic, take a look at Navin Fluorine. It's seen strong growth across product lines and the segmental growth. Take a look at this, right? The high performance products, 33%, specialty is 48% growth in revenue, and CDMO as much as 82%. The margins have remained flat on a quarter-on-quarter basis, but they improved sharply on a year-on-year basis. Remember, even for this particular company, the base quarter was significantly lower, and so that low base effect has played a part. Capex is announced in its advanced material products as well, and that's something that can add going forward. I'll come to one brokerage call that will give you a sense of how brokerages are also seeing it. There was actually one sell call and one buy call. Sell call broker has also had to increase the target price. Let's talk of that in just a bit. The PAT number 243 crore versus 117 crore year on year. Revenue growth of 44%, EBITDA growth of 73%, and margins at 34.2% compared with 28.5%. And the capex that I was talking about, 90 crore rupees at their Surat facility for advanced material products. Jefferies on Navin Fluorine has maintained a buy and hiked its target price to 9,045 from 8,700 earlier. So even from this price, there's actually, according to Jefferies, quite a bit of upside. They're saying that the Q1 review indicates a beat. The earnings upgrade cycle continues. A strong pipeline in CDMO and cooling products, and participation in new molecules in Spec Chem anchor the medium-term growth. The new capex in advanced materials will create another growth engine in the medium term, and they've upgraded their FY27 and 28 PAT expectation by 8% and 4% respectively, and they project also 23% EPS compounded annual growth rate over the course of FY26 to 29. The valuation, they say, is below the long-term average. The other brokerage note, I can't remember who exactly, I'll come to you in a bit, but they're pointing to the possibility that you might have a pricing pressure on refrigerants going forward, and that is something to bear in mind. But, well, you should watch out for Navin Fluorine in trade today for certain. GNFC is the third stock on my list, and it saw compression in margin on quarter, but improvement on a year-on-year basis. Margin looks elevated on account of the low base of last year. Strong performance in the chemical business has aided performance. The fertilizer segment has actually seen just moderate on-year growth and degrowth on quarter. That is where the problem lies. In fact, the fertilizer segment saw loss widen on quarter to 85 crore rupees, and that is something that has dragged the performance overall. Outlook on fertilizer segment therefore continues to remain cloudy for obvious reasons. The PAT number is 312 crore rupees, revenue uptick of 40%. So despite that underperformance of the fertilizer segment, they've done well, and that's because chemicals have done well. EBITDA margin at 17.6%.
Okay, so I think likewise, multiple brokerages is what we're looking at. Earnings is what we're looking at. Now, PB FinTech, thumbs up. Insurance premium growth has been led by health and lifetime insurance. You have revenue growth that has been driven by strong growth in insurance segment. Your core insurance profitability has also improved. And your core credit dispersals, a 33% growth is what we've seen there. And your credit business has returned back to growth. If you talk about the UAE business, that has remained resilient with premium growth of almost 31% on a year-on-year basis. So now the focus remains firmly on growth rather than margin expansion, and the intent to invest renewal-led gains into customer acquisition and business growth. That's what they've indicated. So total insurance premium, that has seen a growth of 26%. Your total disbursals are down around 37%. Revenues have seen a growth of 40%. Adjusted EBITDA is up, it's almost doubled. And your adjusted EBITDA margins are at 10% versus a 7%. A very strong set of numbers that has been reported by PB FinTech in trade. The second one is Cohance. Interesting one. I don't know whether to take this with a pinch of salt and whether this is going to be a one-off quarter, because the numbers, yes, absolutely weak, but they have come, it's on expected lines as well, that there would have been weakness this time around. Now, it's significantly weak performance with operational slowdown, which is sequential. You're talking about sequential stabilization that is expected to come in from the second quarter as well, and that is what was indicated. The clearer commercial recovery project is what is projected for the second half of FY27. Net loss of 24 crores versus a profit of 48 crores. Revenues down 23%, EBITDA down 99%, and the margins literally negligible. There's nothing versus a 20.4%. Now, this is what the street was expecting. Management has also indicated. In fact, they did have a couple of USFDA inspections. So remediation is something that we'll be looking at. And I think commentary from the management post Umang Bora joining in is going to be interesting if they learn, if they plan to speak to the media channels as well. But that is what we should be watching out for. Aurobindo Pharma, another one, a very strong set of numbers. There has been broad-based performance where it was mainly driven by an acceleration in volume gains across international markets, and notably the European markets were very strong. Now, there has been steady expansion in the domestic API and global injectables business segments. Net profits are up nearly 25%. Your revenues are up nearly 16%. EBITDA is up around 17%. And in terms of margins as well, we'll just correct that. It's a thumbs up and not a thumbs down. Your EBITDA margins at 20.6% versus at 20.4%. And there has been an other income component of 264 odd crores versus 105 odd crores. But overall, a good set of numbers by Aurobindo as well.
Yeah, I was a little confused because you were saying all the good things and I saw a big thumbs down on the screen.
Yeah, and I would love to talk to our technical experts about it today. I don't know if Kush is there, but even if not the case, others, because it's kind of broken out after being stuck in this 1100, 1200, 1300 range. Aurobindo has had a bit of a uptick as well, so in line with some of the other pharma names. So good going for this one. Let's see what it does in today's trade. That is Aurobindo. Watch out for Hindalco, and this is a difficult world to call from a trade perspective, simply because one, Novelis, it was expected to be good, and which is why you had a bit of a rally in Hindalco in the last few days. And it is difficult to call because Hindalco's own numbers are slated to come on Friday. However, Novelis does determine 50% of Hindalco's fortunes, and these are the numbers. The Q1 results exceeded estimates. There's a sequential recovery at Oswego, which is a key plant for Novelis, of course, and a net positive insurance impact that has been seen. The adjusted EBITDA per ton for Novelis improved to $563 per ton, which is about a $19 per ton quarter-on-quarter uptake, which is actually pretty strong. Right in the con call, they've discussed this at length. Of course, I don't have the time to do all of that, but in principle, the numbers look good, which is why JM Financial, one of the notes that I saw, revised the target price to 1200 versus 1150 earlier on Hindalco, ahead of the numbers already on the back of Novelis numbers. So, but I repeat, it's difficult because there's been a bit of a rally. Novelis is good. It was anticipated it will be good, and Hindalco is yet to come. So be careful if you're trading this. There might well be an undercurrent leading into Hindalco as well. There might well be a bit of profit booking because there has been a bit of a rally. Difficult one to call really. Pearl Global though, nothing difficult to call about this one. Very good set of numbers here. Revenues were up 24% at 1528 crores versus 1228 crores. Operating profit margins at 10.8 versus 9.1 on that base to increase operating profit margins by 170 basis points. It's quite stunning. Net profit as a result up 48% at 101 versus 68 crores. Keep an eye out for this one today. They've approved a bonus issue as well in the proportion of 1:1. And all cargo, revenues were up 11%, nothing too dramatic there, but EBITDA margins expanded 13 versus 10.4 as a result of which net profit at 14 crores versus 10 crores versus a loss of 10 crores, excuse me. So pretty solid set of numbers. Let's see what this one does in the session today as well. So, well, 3 names, all of which have optimism around themselves. So let's see how these go. And by the way, just before we take that break, there are a clutch of other names, guys, which might have actually very interesting reactions. So just quickly enumerate them. I know we marked GNFC, of course. Datamatics, the profit after tax was up 43%. Operating margins expanded to 19 versus 16. Aris Infra revenues were up 37%. Operating profit margin was 10.5 versus 8.6. So pretty good going there. What didn't do well was Ion Exchange. Profit after tax was down 91%. Operating margins came down to 4.5 versus 10.8%. So some names might not have a good
Biocon
one.
also we should be watching out.
Yeah.
So
quite a few numbers, quite a few names, yes.
lots of things. We'll discuss all of these with our experts, right? I think.
Yeah.
But maybe take a short break for now.
We should.
Come back and talk about all the numbers. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean.
Welcome back. You're watching India Market Open. How do we start today? And again, we'll reiterate, you shouldn't really pay attention to the percentage change on the benchmark Nifty 50, particularly because of the cash sessions that we've been having at the end of trade. Let's bring in Harshal Dasani, who's business head at Invaset PMS, as well as Kush Pora, founder of kushpora.com. Gentlemen, thanks so much for taking the time as always. Kush, I'll start with you. What are the key levels that you're monitoring for the benchmark Nifty 50 as well as the Bank Nifty, and what is the trend that you're witnessing?
First up, a very good morning, guys. And I think this does deserve a mention that today is Thursday.
Yeah.
You know what that means.
Sensex
right?
expiry.
That's the Sensex expiry. And if the last 3 days of the cash closing has been any trend, you need to be a little watchful today as well. So I would still suggest don't go into the expiry with your trades open. Close them out, settle them significantly, or rather much before 3:15. That would be a very serious point to note on today's Sensex expiry. Now, that said, so far we're in that consolidation mode. Now, okay, that's a beautiful graph. So for Nifty and Bank Nifty, by the way, both the 20 and the 200 DMA become very important. You know why? If you see the Nifty, it's right now between that 20 and the 200-day moving average, which means the 20 DMA is the immediate support, 200 is the immediate resistance. Right now, we're seeing some consolidation. The Nifty is going sideways. There is still some divergence between the futures and the cash and the spot price for Nifty. But we'll take it as long as the 20 DMA, the 24,400 level is intact. By the way, remember I've been talking about the FII index short positioning. That's actually gone up from 87 to 88. Now it's not crossing that 85, 84 threshold. Something that you just need to be a little mindful of. PCR's cooled off from 1 to about 0.91. That's okay. That's a healthy sign, but also suggests that there could be some supply pressure at higher levels, and you're seeing lower highs on the Nifty. But like I said, 24,400. That's the level to watch. Bank Nifty, 20 and the 200 DMA.
Sorry, I'm going to have to pause there because the Aurobindo Pharma con call is on. Let's listen into what they have to say.
Growth markets revenue increased by 38% year-on-year to 1,063 crores or 113 million, supported by strong underlying performance across key markets. ARV formulation remained stable at 35 million for the quarter, driven by stable volume. Our biosimilar and biological CMO strategy continues to progress well and represent important long-term growth drivers along our base business. Operational and financial highlights: gross margin remains resilient at 60.4 compared to 58.8% of Q1 FY26, benefiting from an improved business mix and operating efficiencies. Our gross contribution amounted to 5,523 crores. Net capex for the quarter stood at 78 million. Capital expenditure remained focused mainly towards Theranim Biologics. R&D expenses for the quarter is around 350 crores, amounting to 4% of the revenue. We expect the current rate to continue, driven by research costs towards the pipeline and the higher base of revenues. Further, since multiple clinical studies are at advanced stage, we expect slightly lower development costs for the upcoming period. Our balance sheet continues to remain strong with a strong net cash position of 42 million after payment of 85 million towards buyback and 247 million for Lanet acquisition, reinforcing our strong financial resilience and focus on various accretive growth opportunities while maintaining a disciplined capital structure. Our average finance cost declined to 4.8% from 5% in the previous quarter, reflecting prudent treasury management. Our net effective tax rate is 31.9% on account of not taking the tax credit on loss-making subsidiaries. However, we expect the tax rate to normalize around 28 to 29% by year-end. Profit after tax stood at 1,032 crore, reflecting a healthy operating leverage and efficient capital management. Return on capital: the investments we have made in the past decade are now approaching an important inflection point. Many of these platforms are transitioning from an investment phase to milestone monetization phase, which we believe will progressively improve margins, cash generation, and returns on capital over the coming years. As we look ahead, our strategic focus is increasingly centered on enhancing the quality of growth rather than simply pursuing scale. Over past several years, we have consciously allocated capital towards high-value businesses, superior margin profiles, and structurally high return on capital. Whether it is complex generics or specialty pharmaceuticals or injectables or biologics or CDMO services or backward integration, each investment is guided by a common objective: building durable competitive advantages while steadily improving capital productivity. We believe Aurobindo is steadily transforming into a more differentiated pharmaceutical company with
Okay, all right. So watch out for the reaction for Aurobindo Pharma. and Hiral has already taken you through the key levels, or not levels, but the key line items in that earnings picture. But Kush was making a point before we cut across to the management of Aurobindo. You want to reiterate that point?
Yeah, sure. I was talking about Nifty, where as long as the 24,400 levels is intact, you could stay long. Just quickly moving to Bank Nifty, here also the 20 and the 200-day moving average, by the way, have a significance, which is that 57,500 level that I've been talking about. That's where the convergence is there for Nifty, 20 and the 200-day moving average. Here too, there are consolidation signs, momentum indicators going flat, but still to neutral to positive right now. So you could stay long. Immediate supports 57,200, 56,800. But like I said, you could stay long. I wouldn't advise going long now. Get some momentum building up for the last 2-3 sessions. If you've listened to us and got that long position in place, it's all right. With these support levels as your stop loss, you could stay long on Bank Nifty.
Okay, and can you very quickly talk about the ideas for the morning as well, Kush?
Yeah. So
also, maybe if you can couple it with Aurobindo, because we just finished the con call.
Very interesting setup on Aurobindo. I'll come to that in just a bit. Let me wrap up the ideas also, like you said. So LTF is a new idea that you can look at. There is a good recovery underway. 20-day moving average being taken out. 326, 336. These are your targets. 310 is where you keep that stop loss. Now, a couple of ideas are more of a reiteration of the yesterday's calls. Sunflag Iron. This one's actually moved up. Target one was hit on this one, so you could still stay on with the second target in mind of 392, and keep your bump up your stop loss to about 369 now. CAMS consolidated with a positive bias, so the levels continue 835, 865, and 785. That's your stop loss. Artemis Medicare, by the way, was a call that was given yesterday. Target 1, target 2, both of them hit. I would suggest you could book about 75-80%. You might just want to leave some quantity in your portfolio. It's actually doing well and can pick up. Again, a quick word on Aurobindo Pharma. If the team can bring up the 2-month chart for Aurobindo Pharma, you will see that there is a rounding bottom formation, breakout that is imminent on this one with 1650 levels as, if you can just focus on the, second half, So 1650 is the level that you need to watch for. But now, bring up the 2-year chart for Aurobindo Pharma, and you will see that the rounding bottom formation breakout on the long term has already happened, and that resistance was at 1580. Just focus on the last bit there, right? 1580 was the resistance, so it's already broken out above that on a long term basis. I think this is very much a hold. I wouldn't suggest a fresh buy. You could have some volatility, but with 1580, 1575 as your stop loss, you could continue to hold.
Okay, so continue to hold in terms of where Auro Pharma goes. In fact, a whole host of other pharma names also that we've been talking about, Cohance, Biocon, Newland Laboratories that Alex just spoke about. Let's actually get in Harshal Dasani as well to talk to us about what he thinks of the pharma pack that has reported numbers overnight. Harshal, good morning and welcome to the show. Always a pleasure to speak to you. What do you make of Aurobindo, and along with an Aurobindo, anything that you would want to add with regards to Cohance, Biocon and Newland Laboratories?
Well, firstly, very good morning and thank you so much for having me. Pharma is one of those sectors that I've been tracking very closely for all this while, because there are multiple parameters that have been supporting pharma as a whole. If you look at USD INR has spiked up to all-time high of 96 and 97, which is apparently very good for pharma because they have been one of the biggest exporters. And if you also look at the pharma sector, I feel that 2025 to 2028, I think 2028 as the whole is going to be very bullish for pharma, because a lot of patents at this point of time are expiring in this phase, and it is going to open up a lot of opportunities for Indian pharma companies, specifically in biosimilar and generics. So I think overall my view on pharma as a whole is very bullish. Aurobindo being one of the leading companies in the same sector, I feel that Biocon as well. Biocon has been working extensively on the drugs that have been losing patents, I think, in the next couple of years. So overall, I think pharma as a sector looks very bullish to me and very promising to me for the next couple of years from here.
Okay, the other big talking point today will be what's happening with aluminum stocks, considering what Novelis has done. Now, it's posted a strong Q1 as higher aluminum prices and cost efficiencies lift the earnings. Parth has the nuance around Novelis numbers. Parth, good morning.
Good morning, Neeraj. Novelis has reported a very strong quarter with both revenue and EBITDA beating the estimates by a comfortable margin. And this was mainly because of the higher aluminium prices and the better spreads that the company has seen in its scrap that drove profits for them. Also, the Oswego hot mill has finally restarted in June after the fire disruptions that we saw in the last couple of quarters. Another interesting thing is that insurance recovery for them has turned positive during this quarter, and we'll speak about that later on a bit more. Now, first of all, if you look at the reasons behind this strong quarter, then higher aluminium prices has lifted realizations for them, with the lower scrap prices also helping on with the margins. However, volume still saw a small downtick of 5% year on year to reach 916 kilotons overall. Now, coming back to that insurance point, the Oswego fire impact turned net positive this quarter by $18 million. This benefit was mainly due to the favorable timing of the proceeds, as it has more than offset the production loss that was seen during this quarter. But there is one concern in the overall numbers, and that is the operating cash flow, which has turned negative, turning into an outflow of $455 million. Also, adjusted free cash outflow has widened sharply to $1.1 billion, driven by higher working capital and Bay Minette capex expansion that is going on right now. Net leverage is standing at 4.5 times trailing EBITDA, and as per CFO of the company, Novelis will return to positive free cash flow by the fourth quarter of FY27. Lastly, if we quickly talk about the brokerages, then Morgan Stanley has maintained an overweight rating with a target price of 1,140 rupees, that is on Hindalco. The Bay Minette expansion will remain the key catalyst to track, and it will drive margins and cash flow in the coming years. Also, Macquarie has maintained a neutral rating with a target price of 1,080 rupees. They see an upside risk in FY27 and FY28 if the aluminium prices remain on the higher levels, and Kotak maintains a buy with a target price of 1,120, and they believe the worst is behind for Novelis. And let's also listen in to the president and CEO of Novelis on the quarter gone by and the cost efficiencies they achieved during the quarter.
Adjusted EBITDA increased 24% year over year to $516 million, and adjusted EBITDA per ton increased 30% to $563. We are starting to receive substantial Oswego fire-related insurance recoveries, and this favorable timing resulted in a net positive fire impact in the quarter. But even excluding this net positive $18 million impact, adjusted EBITDA per ton would have been a solid $525. The underlying business continues to perform well. Market demand remains broadly stable, and we are seeing the benefits of both our high recycled content business model and disciplined cost actions. Through our global efficiency program, we have achieved more than $225 million in run rate savings by the end of the first quarter, and remain firmly on track toward our target $350 to $400 million of total savings by the end of the next fiscal year. On the operational side, we restarted the Oswego hot mill in early June and are transitioning back toward a more normal operating cadence. Meanwhile, our historic capital investment in Bay Minette also remains on track with the commissioning process underway. Overall, we are encouraged by progress across the business and look forward to the completion of Bay Minette, a cornerstone of our long-term growth strategy.
All right, that's Novelis. And Harshal, I wonder if you got a chance to look at the Novelis numbers and what could happen. Also, I mean, the near term for a Hindalco stock, considering that there is some bit of a movement that has happened ahead of the numbers there, and Hindalco's own earnings are slated for Friday. But obviously, the Novelis numbers will have a bearing.
Well, if you honestly ask me about aluminium and other metals, I feel that the bad for metals is already over. Last year was fantastic for metals. You look at aluminium, you look at copper, you look at gold, silver, zinc, every other metal was outperforming, and we saw a minute correction on the basis that the crude was spiking up. There were fears of inflation and Fed looking for a rate hike. But I think that at a $40 trillion US loan, I think Fed is not going to do a rate hike anytime soon. We saw that Fed maintained a neutral stance and RBI also maintained a neutral stance yesterday. I think overall for metals, if you look at aluminium specifically, aluminium had made a high of $4,000 in 2022. And right now, also, I think in the last year, it made a high of around $3,700. Overall, I think that finally aluminium has corrected around 15% from its all-time high, and finally aluminium is about to reverse. We also saw a massive rally coming in gold, silver, copper the other day. So overall, my view on aluminium is very bullish, and Hindalco's, I think, majority of the business, 80% of the business is into aluminium. So with National Aluminium, they are doing fantastic. We also saw a rally coming in copper yesterday. Hindustan Copper, I think, was shot up by 9%, and copper is trading at its all-time high. So overall, I think metal is one of those sectors that I've been tracking very closely for all this while, and I think metals could really do well. Aluminium also has its use in AI semiconductors and the cooling systems. So I think overall the bad for metals is over and aluminium is entering into another cycle of run.
Okay. All right. Yeah, absolutely. So to take a call on Hindalco and some of the other metal companies, you'd have to have an opinion on where the commodity itself is heading. Let's head across now to my colleague Somit Sarkar, who's joining in to tell you what he's hearing from the dealing rooms. And there's quite a bit of action, actually. Somit, what's on your list today? Good morning.
Good morning, Alex. The first couple of counters are Lenskart and Dr. Agarwal Eye. Now, the buzz on the street is that there could be a potential block deal very soon in both these counters. Then there are the Bajaj Twins, Bajaj Finance and Bajaj Finserv. There are buy flows on the institutional desk. Dealers indicate that large long only funds have been accumulating this counter in trade. And on the flip side, there is Infosys and HCL Tech after the sharp run up. Dealers indicate that few domestic funds have been trimming their stake or selling their stake in both the IT names. And lastly, when it comes to Blue Star, there are sell flows on the large HNI and the PMS desk. Dealers expecting a weak Q1 earnings. And on the flip side, there is Electronic Smart, Wellspun India and Green Lamp. Dealers are seeing buy flows on the large HNI and the PMS desk. They are expecting strong Q1 numbers to come in from all the three names. So keep an eye out for these counters in trade.
Okay, so interesting names there, Wellspun, Green Lamp, and you are seeing some interest that's coming in the textile names as well over the last few sessions. But I think Lenskart, Dr. Agarwal Eye, dealers expecting a block deal soon. On the charts, Kush, what are you seeing for both of these names?
Very strong setup on Lenskart. Very strong setup. There was, an immediate resistance at about 555, 560 zones. That's been taken out. Volumes also fairly healthy. Nothing that excites me. But the price movement, clubbed with decent volumes. I think this is a good move. More of a hold right now. Immediate resistance at 575. So maybe once it takes that out, this journey actually could resume. I would be keen on buying at declines. Again, closer to the support levels of 555, 560. Dr. Agarwal's limited data, very limited data, but it is consolidating like anything, 5,200 on the upside, about 48, 4,900 on the downside. A breakout above this, which could very well come about. Oh, this is Dr. Agarwal's health, right? My bad. I've been referring to the Agarwal Eye Hospital. Maybe we'll come back to that a little later. But
yeah, but we were talking about Dr. Agarwal Eye only.
Eye only.
Yes.
Perfect. Yeah, perfect. So this one's above 5,200. If it sustains, then I think you could actually see this breakout. Very healthy consolidation on this one. Not been like one of those IPOs which rose and then just fell off the cliff. So something definitely to watch for.
Okay. What else? There are a lot of stocks which have come out with some very good set of numbers, and Harshal, out of the 3 or 4 that I'm saying, tell us which one stood out for you, if at all, because PB Fintech came out with what looked like, or what is looking optically like a very good set of numbers. Pearl Global, fairly good set of numbers, and the duo of Newland and Naveen Fluorine, both of them delivered what looks like very exceptional numbers. Any of these that you guys track actively and have a view on?
Well, I think Pearl Global is one of the stocks that I have been tracking for a while. Okay. And it's into the textile sector and it is one of the leaders into that. If you look at the results, it has given a fantastic set of numbers. And I think Pearl Global itself was ready for a breakout from its all-time high in 2024, 2025. But because of the India-US trade deal uncertainty, we saw a sell-off in all the sectors that were China plus one. You could say all the sectors where India was a big exporter to US. But I think right now, the froth around the India-US trade deal has settled and the the companies are getting value for what they're actually delivering. So I think Pearl Global is one of the bets that stand out for me in all the fours that you've mentioned.
Stands out. Okay, these are the numbers, of course. 24% uptick in revenues, operating profit margins at 10.8 versus 9.1, and net profit at 48% higher at 101 versus 68 crores. Kush Bora, they've also approved a bonus issue, by the way. Kush Bora, a textile company, Pearl Global, and there was also a note recently, I think, from a brokerage, if I'm not wrong, Motilal Oswal, on 3 other textile names and looking optimistic. How does the space look? How does Pearl Global individually look?
The space is exciting. You're starting to see some traction on some of these names, but Pearl Global is a clear standout winner. I mean, what you're seeing now in the last few sessions is just consolidation, but other than that, what a massive run this one's had over the last many years. Continues to face immediate resistance at about 2100, 2200 zone. But I think once in the clear of this, the stock would resume its upward journey that it's had over the last, like I said, 5-10 years. So beautiful run up on this one. Stay positive. Take any kind of declines as an opportunity to accumulate up to about 2,000 rupees. So maybe you could consider buy on declines, but the structure looks very strong.
Okay. We've been speaking about chemical companies as well, and the question ultimately, Harshal, is do you have enough confidence to say that some of the results that you've seen in Q1 would mean that Q2 would also remain robust? So, for example, you talk about Navin Fluorine. They've had a pretty good Q4 and Q1. Will that extend into Q2 as well? What is your call?
Well, I think even if you look at chemical companies historically, after the run that they had previously, I think they have been consolidating in a range for a very long time. And finally, they have started delivering the results that are matching their fundamentals. They are coming at their all-time high. So I think, yes, this momentum in terms of price and result should continue in the next couple of quarters. Quarter 4 was fantastic. I think even the quarter 1 results that are coming out are giving a good set of numbers. I think this momentum in terms of price also should continue and in terms of the fundamentals.
That's with regards to where a few of the chemical companies go. On the charts, are you seeing any moat in any of these chemical names?
Yeah, so I was actually tracking Navin Fluorine. I think we'd given out as a call as well, previous specialty also. But after that initial spurt in the last 3 to 4 weeks, they've actually gone sideways. So for me, a breakout is something that I would look for. So for example, a Navin Fluorine above 7750, something like a previous specialty above 3700, 3725. A lot of these, stocks are showing traction, but the follow through is missing. I think that's been the case for a lot of for the entire sector for a while now. So once you get this follow through, I think the primary trend is intact. So more of a hold rather than a fresh initiation on any of these names.
Okay, so that's with regards to chemical counters. Now, HDFC Bank, let's pull up that one on the screens as well. Yesterday was the AGM where the chairman, that's Rajiv Kumar, who's come out and reiterated that the bank's ethos, internal control systems are pretty strong, and they're assuring that it will be further strengthened and empowered. In fact, we'll have the highest level of corporate governance standards, and the board is conscious of this approach as well. Large banks like ours face issues from time to time, and it is important to resolve such issues in timely manner. The bank has showed it has strong control systems which flag deviations, and bank fundamentally is strong with pristine balance sheet. There is no governance related concerns at a systemic level. In fact, you had the CEO as well, Shashidhar Jagdishan, who said that they are well positioned to face any lawsuit in the US, and the merger benefits will accrue over a longer period of time. AI digital investments will help improve the ROAs, and they're expecting the cost of funds and net interest margins to improve from April-June FY27. In fact, let's also listen in to what they had to say, taking recovery in companies' NIMs and the cost of funds into consideration. Let's listen in.
We acquire more and more customers. We will have more and more low-cost funds, more and more granular deposits to be able to fund our asset deployment. So this should lead to a better low-cost fund ratio, which one of you did mention that's been steadily coming down. I see my forecast say that, or simulation says that maybe by mid of calendar 27 or end of this year, between April and June of the next year, we should start to see the trajectory move upwards. This will itself, and over the next 2 to 3 years, I think we should see a very significant change in the low cost fund ratio, which will also have a favorable impact in the net interest margins. Now, when these two very key matrices have a kind of a trajectory which is moving upwards over a period of 2 to 3 years, you will start to see the return on asset.
Okay, all right. So that's the word coming in from the chairperson of HDFC Bank, and that's not really reflected in the stock. It's underperformed considerably, and for a frontline bank, the largest private sector bank, to have fallen as much as 11.4% in the last 1 month, when foreign institutional investors seem to be coming back to the fore, is quite telling. Harshal, for long-term investors in HDFC Bank, what does this really indicate? Because you look at the last 6 sessions, and it's clear that foreign institutional investors, or 7 sessions, and foreign institutional investors have come back to the fore, but there seems to be no buying interest in HDFC Bank.
Well, honestly, if I just go a little beyond the 7 sessions, and even if I look at a longer horizon, right? For the last 5 years, if you look, HDFC Bank has close to given a negative return of 1.5%. So probably investing into an FD of HDFC Bank would have given you more returns. But overall, I feel that it's one of the classic cases where the company is growing fantastic, but the stock price isn't moving. You see, the HDFC Bank, I think, is still bloated with the HDFC merger and is picking up. And overall, even if you look at the ratios at this point of time, the ratios are fine. But the recent corporate governance issues that we saw in the HDFC Bank has caused a little bit selling from the FIIs, because HDFC Bank once used to be the darlings of FIIs. And whenever we used to see buying from FII, we always used to see a splurge in HDFC Bank buying. But I feel that at this point of time, when there's a corporate governance issues, FIIs are generally a little away from it. And that is the reason why we're probably seeing a non-stop selling in HDFC Bank, because if you compare it to other banks at this point of time, I'm not talking about Kotak, because Kotak has also been the same underperformer for all this while. But if you look at ICICI Bank has been doing fantastic. And even if you look at something like your SBI has done fantastic in 2023, 2024 during the PSU run. We saw all the PSU banks also performing well. I think HDFC Bank overall has become so big, and the growth rate also, I think, has been fine. But the corporate governance issue has created a massive sell-off in this bank, and it's not able to recover from the lows.
Okay, well, it's almost 9 a.m., so we'll get the opening rates going in just moments from now. Keep an eye out. We'll, of course, closer to 9:10, 9:12, ask our experts, Kush Bora, for his top call. I think Rudramurthy BV also joining in, and we'll talk to him about that as well. But since it's 9 a.m., I just want to mark what's happening to the markets. We may not have a 0.5% uptick on the Sensex or whatever, 150 point uptick on the Nifty, but we will have some uptick on the Nifty, presumably. Oil prices have stayed low, that is positive. Let's look up the usual suspects and see what they might be doing. The first up of the block has to be Hindalco, and wonder if Novelis's numbers are giving that bit of a spurt to Hindalco, or is it some bit of profit booking? Well, about 1.5%. This might actually be realistic as well, never know. PB Fintech, kudos, superb set of numbers. Maybe that stock is duly reacting, 10% higher. It may not be 10, but it'll be good. Pearl Global, good set of numbers, should be reacting positively. Newland Labs, Naveen Fluorine, a couple of stocks that Alex marked. Again, very strong set of numbers, so should bring them up. Well, yeah, I mean, it'll be green for sure for both of these, so keep an eye out for them.
But they have run up.
They have run up too. Cummins though, and a weak set of numbers. The MD is resigned. There's a call today at 3 p.m. But Cummins could well turn out to be the accident of the day, so keep an eye out for that. And then a lot of other smaller names. So the initial reactions are on expected lines. Anything else you guys are spotting?
Nope.
So let's go across to Rudra.
Rudramurthy BV. That was a quick answer. Rudramurthy BV, founder, director, Vachna Investments, and is joining us as well. Rudra, what do you think about the setup today? Are you positive heading into the start of trade?
Good morning. Thanks for having me in the show. I'm very, very positive on market. For the first time yesterday, you are seeing open interest built up on the long side in Nifty. And after short covering, we are seeing this long build up, which is very positive. And next, if you see Brent crude below that $80 to $85 per barrel, and even if you see the interest rate and the yields in US coming down, dollar index below 100, FII for the last 6 trading sessions, except yesterday, they have been buyers. So all this tells to me that yes, this is a buy on dip market. You have to be sector specific and stock specific if you want to make more money. And let me put my neck out and say, this year we will see Nifty going to all-time highs, and I am very, very, very bullish on market. Right now, we are below the 200-day moving average, which is at around 24,800 on Nifty. And yes, Bank Nifty is not supporting Nifty. But then if you see the mid cap, small cap, and even the broader market, lot of opportunities are available. Sector wise, if you see, look at platform and new age sector, which I'm very, very positive. Stocks like Paytm, stocks like even Eternal, and even Nykaa looks very good to me. After that, look at NBFC as a sector. Again, look at results from Bajaj Finance, look at Shriram Finance. They're all very good to me. And yes, private banks, especially, I saw the discussion happening on HDFC Bank.
Okay, but specifically, what is the call today? You've named quite a few of these stocks, but what is the conviction, high conviction idea that you have for us?
Okay, Alex, my trade for the day will be a buy on Hero Motor Corp. I know today results are there, but I'm very positive on the stock even after the move up what you have seen. So for me, Hero Motor Corp is a buy. Looking at initial targets of 5,850 and then 6,000 to come. Have a stop loss of 5,640. Stock available in futures. One can definitely even go long in futures. For me, Manappuram is another stock which looks very strong. After touching levels of 380, it consolidated, came down, and then it gave a strong support at around 350 zones. So for me, at current market price and on dips to 360, I will be a buyer in Manappuram. Looking at targets of 375, 380 to come, have a stop loss of 358. And just yesterday, metals have started performing. Hindalco for me is a buy. And it's a choice again between Hindalco, Vedanta, Nalco, and so many other stocks. But Hindalco can be bought at current market price. Look at targets of 1,075 and then 1,100. Have a stop loss of 1,025. So a buy on Hero Motor Corp, Manappuram, and then Hindalco.
Right. Okay, so those are the stocks that you should look at. Hindalco, by the way, for the last couple of days has been looking positive. I think Kush also identified it in trade yesterday. That's something that I remember. We're joined by Ashish Chaturmutta, and on that note, I'd like to thank you as well, Harshal, for joining us this morning. Pleasure speaking with you as always. What's the view though this morning based on the numbers that you've seen? A few stand out, Ashish. The chemical companies are looking good, but Cummins seems to be a bit of an accident. What is your reaction to the latter first, and we'll come to the chemical companies in a bit.
So first of all, as far as Cummins is, good morning, and I think as far as Cummins is concerned, I think it's a weaker than expected, particularly from the margins front. There has been some disappointment, and with this MD resigning, it's going to be a little hiccup because you know she was responsible for very strong growth from the particular segment. So our belief is that this will definitely negatively surprise investors, and obviously today there's a con call, but definitely there could be a short-term knee-jerk reaction on downside, and at this point of time we would like to keep a hold on this stock rather than any buy on dip strategy. But as far as chemicals and specialty chemical or CDMO as a space, we look into this space. I think entire space has surprised very, very strongly, whether it's Navin Fluorine or even for that matter Divi's Lab posted its numbers couple of days back, and very, very strong set of numbers coming even from Divi's Lab. Newland Lab on the smaller cap segment has also done extremely well. So if we have to pick one name, then I think Navin Fluorine, which has surprised us not just on the CDMO space but also the kind of work they are trying to do on the defense side and trying to create a chemical for the DRDO. Even the ref gas business is also doing extremely good, even though prices are expected to come down, but the volumes is going to take care of the margin of the EBITDA. So overall, our belief is that there is going to be very strong positive surprise from Navin. On upside, 9,000, 9,500 is something which we are looking for Navin Fluorine, at least in the next couple of months. And one more name, I think Divi's Lab. So I think it has also got re-rated significantly in the last 1 week. But our belief is that any downward correction, Divi's Lab is an opportunity to go long, because the kind of capex, 2,200 crore capex they've been doing on the small molecules plus peptides. Our belief is it's going to be a very, very strong growth trajectory. So Divi's Lab is also a very good opportunity to look into on any kind of dips.
Ashish, fantastic talking to you. It's been a long time, but I'm glad you're here. And I would want your views on a few others as well, fundamentally. And Rudra, great having you as well, by the way. Thank you for those bevy of calls. Both of you, again, our viewers will benefit from that. But I'm glad we've been able to add focus to it as well. Adding focus to the brokerage community today, Goldman Sachs has a note on Newland Labs. Sharad joins in with details of the same. Sharad, good morning.
Good morning, Neeraj. And of course, this stock is a retail and a brokerage favorite as well, and a strong set of numbers coming in. But look at the upgrade coming in from Goldman Sachs. They have maintained a buy rating, but the target price has been hiked from 20,550 rupees. Good significant hike coming to 23,300 rupees per share. Q1 numbers have been good. CMS has led the beat, and the CGD has shown improvement as well. Now, just to give a perspective, CMS means Custom Manufacturing Solutions and GDS means Generic Drug Substances. Also, there's an improved development coming in the pipeline visibility, and as we were talking earlier, peptides, that's where the expansion is happening in the capability, and investments are also happening, especially in the complex molecules. So overall, the street is quite bullish after the results for Newland Labs.
Quite stunning 9% up move as it looks right now. Thanks for that, Sharad. In fact, can we just mark the usual suspects again and just see what are the kind of rates? Because Newland is up 9% as we speak. Wonder what Cummins is doing at the end of the pre-open session. It is down for sure. I see Kushbora indicating that. I'm just trying to figure out how much. 5% lower for Cummins. And Hindalco, Pearl Global and Navin Fluorine. The other three that I just very quickly, maybe even a GNFC, but Pearl Global 2%. Hindalco should come up on your screen. Hindalco, well, just about 0.38%, and Navin Fluorine and GNFC. Okay.
Also look 4%. At a GE Vernova TND. From the capital goods space, both of them. Both
GNFC is just about 1% higher. You were saying GVTND, it's losing ground.
What's the news in GVTND?
Earnings only.
Earnings impact. Okay. Ashish, any thoughts here on a Cummins or a GVTND?
Hi, good morning, Neeraj. Thank you for having me on the show. I think, as I mentioned, Cummins, there's a negative surprise on the margin front. And with this MD's resignation, market is going to take it quite negatively. So at least in the shorter term, I think there is going to be some liquidation, which people will try to do in this name and maybe try to switch it to something like GE Vernova or Siemens Energy for that matter, because there we believe the earning growth trajectory is going to be very, very strong with very strong order book till 2030. So our sense is, at least from an earning growth perspective, I think Siemens Energy, GE Vernova looks quite interesting. Cummins, I think there could be some sell-off, and it will take some time for the stock to really see some re-rating. So we'll avoid at this juncture, Cummins.
Okay. Avoid at this juncture as well. In fact, Parth is just quickly standing by to decode the quarter and what brokerages make out of it. Parth, 40 seconds, give us the highlights.
Absolutely, a weak start for Cummins in the first quarter of FY27. Revenue has beaten estimates, but gross margins are the lowest in the last 13 to 14 quarters. And these margins were actually impacted due to higher commodity cost and supply chain issues that they faced during the quarter. On the demand side, the domestic demand has stayed strong at growing at 22% year on year, but exports have stayed flat year on year. And also the resignation of the managing director adds an overhang in addition to these weak earnings. Now, if we quickly talk about the brokerages, then JP Morgan has maintained a neutral rating, target price of 5,882. They have said that the weak earnings are a surprise because they have lower exposure to copper and silver commodities. Citi has maintained a buy rating, target price of 6,700. They await clarity on any one-off expenditures in the earnings call. And lastly, HSBC maintains a buy rating with a target price of 6,500. They believe that the management has given the commentary of steady business momentum across the key segments. So that's the quick outlook of Cummins.
So much for that. In fact, what I want to also look at is a few of the other names which are Suven Pharma is down, Aster DM is reacting to numbers, Godrej Agrovat also reacting to numbers, LIC seeing some bit of profit booking again today, Hitachi Energy, E-Clerks are a few of the other names one should be watching out for. In fact, in terms of couple of names which actually had news in terms of order wins, you had names like Sterlite Tech. That was one counter that was in focus as well on the back of news. Let's just pull up that one. 2.5% up move coming in there on the back of an order win. So anything that you like on the charts, Kush, with regards to Sterlite Tech? Because if you just pull up a long-term chart, there has been an upside, but there is no conviction yet for this counter.
And the reason is it's a circuit-to-circuit stock. For the most part, the circuits have been on the upside. If you see the initial part of this calendar year, where it's already been a multi-bagger this year alone, right? From 100 odd level, 125 odd levels to 600 right now, it's gone circuit-to-circuit. But with this kind of a move, becomes very difficult to give a fresh buy recommendation. I would suggest an add or rather an hold to this with a deepish stop loss close to 600. Just a quick word on Newland. There is a breakout, or there was a breakout, but now it's very close to overheated territory. So if you do have a position, it's not a bad idea to book partially and hold the rest with 19,500, which was the erstwhile resistance, now support as your stop loss, but it's already run up quite a bit, and this is a healthy gap up to book profits partially.
Okay, what about Naveen Fluorine? If you have a view on that one, because I think here too your opening gap up 4.5%. Pull up the slightly longer term charts, because this is a stock, if I'm not mistaken, year to date has done incredibly well. Yeah, 6 months chart indicates an upside of 24%. Would you take money off the table?
No, in fact, remember we were talking about how the momentum's missing in this. If this comes about, if this sustains, and if the stock sustains above 78, 75, 1700 levels, then that breakout is confirmed, and then you want to hold and ride the momentum because it's seen consolidation, it's seen profit booking, and then you want to just ride the wave. So I would suggest, if you have a position 78, 75, 78, 50, put that as your trailing stop loss and let the stock ride. By the way, I also like Gujarat Fluoro in this space. Was a weekly pick that we had given, achieved target 1 target to about 9-10% in the same week. This too could have an uptick from here in, because it's seen some sort of profit booking. Support levels on this one close to 43.75.
Okay, quick view on PB Fintech if we can. Rudra, on the charts we have 20 seconds.
Really strong, and I will be a buyer in this stock. Any dips, if you get, add to it. If you have it with you, hold on. So PB Fintech is a buy to me even at current market price. Look at targets of 1,800 on the stock. One can have a stop loss of around 1,600 for the same.
Kush, anything that you're liking on the charts right now just before markets open?
Yeah, we'll go with Sunflag Iron. Yesterday target 1 was hit, target 392, and a stop loss at 365. Maybe you can bump it up a little.
Kush, very quickly, gold prices have rebounded. Can gold NBFCs bounce back?
Manappuram, for sure. Muthoot, avoid for now.
Okay. Manappuram, keep an eye out for Manappuram Finance. Kush Bora believes that is one stock that could actually trade well to 368 and counting right now. So keep an eye out. Let's see what happens to those stocks. But stay on, gentlemen. We're just taking quick opening thoughts from you post-market open, but just looking to see how we start off trade and what do the large cap banking names do and what do the result boys do in particular. So here comes the first trades. Flat as flat can be. For the Sensex as well, it's absolutely flat. So no big changes, but the breadth is positive, which is a great thing. So banks will be quiet, mid caps will be quiet, maybe small cap index. Bring up the small cap index and see what that is doing. No, it's deceptive, the advanced decline ratio to what the indices are doing, both the mid cap and the small cap indices as well. But good start, which is not bad. Let's get the heat map up on the screen, show you what's moving, what's not on the large cap indices. Almost even, Stevens, maybe a bit more red, but what's moving higher? Reliance is giving that bit of support to the markets today, by the way. Tech Mahindra, Asian Paints, Nestle, so a bit of a consumption thrown in. Geofin2 in the green, interestingly. HDFC Bank, well, it's a heavyweight dominated rally today. I don't mean a rally really, but hold out today, because Reliance, TCS, HDFC Bank, very interesting. Okay, what's not doing well? Airtel, the heavyweight which is dragging the indices lower, and a bit of a banking flavor out there because Kotak Bank I see is down, Maruti is down, M&M is down, so large cap auto might be having a bit of a stress. And normally on such a star you don't look at point contributors, but I just want to mark because all three of the key heavyweights except for Airtel are in the green. So Reliance, HDFC Bank, TCS, Infi. Well, you can see where the support for the market is coming from. Airtel contributing to the downside. Alex, maybe you have more luck. I didn't mark a Hindalco because it started absolutely flat.
Yeah, actually these were underperforming in trade yesterday. So it's pretty much a reversal of what you saw in trade yesterday for some of these heavyweights. And specifically on the auto pack, they've done particularly well in the recent past and the run up today. And so maybe some money being taken off the table. Let's look at the sectoral indices and see what's moving today. Won't be surprised if there's very little green on the screen. Okay, it's actually more than I thought it would be. IT is doing okay, 0.9% higher. Defense is up about 0.6%. Pharma is up 0.2%. Not anything very dramatic in the way of big winners. On the losing end as well, it's not big losers. So ho-hum, as Neeraj likes to say, for something like this, right? So 0.7% lower for energy, 0.6% for CPSE, 0.4% lower for auto. Let's jump straight into the stocks that you should watch out for. And here's where the action lies, right? So let's talk about the earnings winners. Aurobindo Pharma had a pretty decent Q1, but it's starting off with cuts about 0.4%. PB Fintech, both on the results as well as on the charts. Rudra likes it, so you should keep an eye on this. Newland Lab, understandably so, starting off with gains of about 7.4% or thereabouts, but you might want to take money off the table based on the technicals. Naveen Fluorine, strong numbers. Okay, no, you're talking about Oro Pharma. If we can pull up Naveen Fluorine, please. And let's talk about Novelis as well. Hindalco is down about 1%, despite the fact that Novelis is proven to be a bit of a beat. Let's look at Aris Infra, Datamatics Global. It's a bit of a turnaround quarter for this one. Let's pull up the next list of stocks if we possibly can. Datamatics Global, Mayur Unique Quarter is trading cuts of about 0.8%, despite the fact that the PAT is up as much as 38%. On the losing end, don't be surprised if Cummins is the accident of the day. The stock is down about 3.5%, not as much as the pre-open session had indicated. Surprise, surprise, JK Lakshmi Cement, weaker profits and margins have reduced, but despite that, you have the stock that's up as much as 3.5%. Sri Renuka Sugars, higher other expenses and loss from commodity derivatives is playing on the stock, down about 2.2%. And Cohance Life, despite the fact that it had a weak quarter, I guess because it was expected, the stock is up as much as 1% or thereabouts. A few other stocks to watch out for. Sterlite Tech, it's an order win for this particular counter, 2.4% higher. You have RMC Switchgears that has gotten a 330 crore order. It's up about 5.5% or thereabouts. Deccan Gold, quite an interesting update, produces its first gold ore in Kyrgyzstan. That's where its mine is, and it's up as much as 3.5%. Cohance Life, we've already spoken about. Allcargo Logistics has a resignation from its chairperson. And finally, let's pull up Naveen Fluorine. We missed that in the list. It's up as much as 5.6%. What else are you spotting, Hira?
You've mentioned them all. Absolutely. I don't think so we've missed out anything. So that's an interesting list that we're talking about. But Kush, I would want to come to you with regards to Naveen Fluorine as well. Strong moves there, 5 to 6% is the upside for the moat.
See, this is exactly what we spoke of, right? Only because the stock is opening 4.5% higher does not mean कि जाके profit book करना है, right? There was a breakout above that 7,900 mark. We said the momentum was missing, will come, if you actually do get that opening and if the stock sustains. It's gained another about 75 or almost about 100 points at the high point of the day from that position onwards as well. So I remain constructive on this. Maybe you can now actually bump up that stop loss from 78 to 50, 78, 75 to further 7,900 also. But book partially even if you have to. Momentum is strong, breakout is there. You could see some volatility today, but the setup for this is strong, and 7,900 will act as a strong support zone at least for today or in for the days to come.
Rudra, opening thoughts, any stock that stands out for you?
Neeraj, for me, Manappuram still looks good at current market price. So I'll be a buyer here on Manappuram. Look at targets of around 380, 85 to come on Manappuram. Gold prices are also reversing, and this stock, having seen that move from 380 back towards that 360 zone, now again it is consolidating and making a move on the upside. So I'll be a buyer in Manappuram. Even Eternal looks a very strong stock to me. Again, after a move from 260 to 310, stock consolidated and continues its up move. So for me, Manappuram and Eternal looks very strong. Hero MotoCorp, even at current levels or on any dips, I will be a buyer. Hindalco looks good after a last 2 days move. It is consolidating. Now look at entry on Hindalco if you are yet to buy metal space. So for me, Hindalco, Hero MotoCorp, Manappuram, Eternal, these are all very strong ones to buy at current market price.
Okay. Hero, Manappuram, and again, not surprised
Hero
that the
will be
gold
reporting numbers today as well.
But Rudra said that he knows that it is reporting numbers, but still he likes it so much that he's willing to go out and stick his neck out and buy it. So interesting out there. Chemical names, because those are standouts, right, per se. And if you look at Maybe what Naveen Florin is doing is 1 and 5.5% higher, but almost everybody has delivered some very strong numbers. Kush Bora, leave Naveen Florin out, that's an event-based stock today. From the rest of the pack, and it's a very wide bucket, is there a chemical name that stands out? I can give you a few options: a Vinati Organics, a Deepak Nitrite, an Aarti Industries. Anything that stands out on the charts?
So a couple of them I did actually put out as calls. For example, Deepak Nitrite was something that we put out as a call some time back. My concern is that you're not getting that follow through in some of these names. You know, there is traction, there is build up, and I think we've seen the story play out a couple of times over. So I'll be very, very, very selective, you know, in these names. In fact, to the extent that you have to go out and book profits, even if it has to be full, book profit and then maybe re-enter at lower levels. Vinati consolidating, Deepak Nitrite gave you that move and then fizzled out. Naveen Florin right now, as we said, has been doing well, given that breakout, continue to hold. And again, to reiterate, Gujarat Fluoro. This one gave you that breakout about 2 weeks ago when it was our weekly pick. Last week, whole of last week, it consolidated, saw some profit booking. That's healthy. You take those kind of moves, right? So remain constructive on Gujarat Fluoro. 4350, 4400 remains your stop loss if you're entering now, or if you have a position from the much significantly lower levels of about 4,000.
Okay, so that's a Gujarat Fluoro. 4,500 is where that stock is trading at right now as well. So very interesting moves. A lot of stock specific action is what you're witnessing as well. But thank you, gentlemen. We have Kush, not Anirudh will be joining us, but Kush, Rudra, thank you so much for joining in. It's always a pleasure to get your calls as well. And Ashish. Anirudh Sarkar, co-founder and CIO at Equinova Investment Managers, coming in. Anirudh, good morning. Always a pleasure to speak to you as well. My question to you right now is, how are you actually reading the market momentum? Because earnings so far, I think the street is happy with what has been reported in the first quarter. The question now is, what is going to be coming in terms of the remainder of FY27? Does anything change from an estimate or expectation perspective?
Yeah, hi, good morning, Hiran. So I think everything remains as it is. I think, what we have been talking about for the last couple of months, or rather the last 6 months, rather, that we need to focus on sectors where earnings are. And I think last 2 quarters, and in fact, the first quarter numbers also of FY27, it's very heartening to see that the high conviction bets where we have been playing out, they have been reporting very strong set of numbers. But what is more important is the guidance for the next 1 year and for the next 2 years remains very, very strong. So I think there's nothing change in our view and the outlook on the market. It's, I would say, the bottoms up ideation kind of a market wherein now what you buy really is making a difference. And I think there are sectors like, say, for example, auto ancillaries, defense, they are reporting very, very good set of numbers. And I think the bullishness continues in the market for us.
So the bullishness should continue in terms of markets as well. Anirudh, what do you make of the pharma companies that have reported numbers as well so far? I mean, you have Lupin that will be reporting numbers today, but from a Newland Laboratories or Aurobindo Pharma, very interesting set. Would you say this is getting you to an opportunity to even enter at current levels?
No, I think you have picked up the right sector. I think the sector is looking very attractive. In fact, we have been underweight on it for a long time. But I think for the last 1 month, we have been incrementally adding our exposure there. And even as we speak, I think the mid-cap pharma and the small-cap pharma is more exciting. And many of companies there, they have done a lot of capex over the last couple of years. And that capex is coming on stream, which is getting reflected in the numbers. You saw some good numbers from some small-cap pharma companies yesterday and day before yesterday also. I think that's an indication that many of these have gone through that capex cycle, and basic economics says that the capex cycle is the basic thing says that the capex cycle is a good indicator of.
Yeah, no, make your point. Make your point. We can understand you're commuting, so there must have been some. You must be dealing with traffic as well. Yes, you are. So you were making a point on the capex cycle.
Capex, yeah. So I think the capex cycle is always a good indicator of where the earnings are coming from, and I think the pharma is the sector wherein the last couple of years, many of the mid-cap, small-cap pharma companies, they have done capex, and that is now getting reflected in numbers. So I think that's an interesting space to explore for investors.
extend that to ask you about the chemical space, Anirudh, because we've seen a couple of companies report stellar numbers in the first quarter as well. Do you think that that can be extrapolated to the rest of the year, though? That is a question, because a lot of companies have already decelerated margin-wise, even though, like, for example, a Naveen Fluorine, I was looking at the numbers, right? A Q4 EBITDA margin of close to 40% has decelerated or contracted to about 35%. But if you compare it with last year, it was sub 30%, the margins, right? So, therefore, it's significantly better than last year. Can that be extrapolated to the rest of the year? Some brokerages saying that the refrigerant prices might face pressure in the rest of the year.
No, I think I'm in that camp wherein, I would not want to extrapolate it like, this will be kind of a trend which might continue for a long time. But I would say that as a sector, like without commenting into individual companies, as a sector, I think chemicals is again a sector which is coming out of the woods. Margin improvements are visible across different mid cap, small cap chemical companies. And something which is also helping is, I think, a lot of the dumping of the chemicals, which was a concern from China, that is also getting arrested to some extent. And I think, even the domestic demand is kind of picking up. So I would say chemicals is one space wherein margin improvements is playing out. But I would say I'm not a big positive bet. We don't have any major positive bets in that space.
You, if I remember correctly, Anirudh, please correct me if I'm wrong, have a strong view on consumption, right? And auto and auto anks, if I remember correctly, please correct me if I'm wrong on this, is something that you like.
Right.
Yeah. So therefore, what say you based on the earnings that you've seen? And of course, the large two-wheeler makers is going to put out numbers today. Some of the EV makers have also reported pretty stellar numbers, Ather not too long back. So what do you think about the OEMs and in extension the auto anks?
No, I think you got it right. Like, I've been very bullish on autos, and that's been our top sectoral allocation in our portfolio for the last 8 months. And to be honest, in this month, our allocation has in fact gone up more in autos. And it has become like almost 1/5 of my portfolio as of today, which is a pretty large overweight stance compared to what is the weight of auto and auto anks in the index. Having said that, I would say the bullishness continues because we are betting on the EV space in the two-wheeler companies. And in fact, the two companies which we own in the EV two-wheeler space, they make up almost 45% of the market share in the two-wheeler EV space. And I think that is something which is growing exponentially higher compared to what the IC engine growth is there. Having said that, I think auto ancillary is another very interesting space. In fact, for the last couple of days, I was traveling and I was meeting a couple of companies in the auto anc space. I have not seen the auto ancillary companies in India being so bullish about their both domestic and export opportunities. So I think, that reiterates our conviction in the space that this is not a 1 quarter, 2 quarter or a pent up demand or a GST impact benefit playing out, but it's a multi-year theme which is now unfolding.
Okay, Anirudh, good morning. Just we have a management from a healthcare firm which is made very good runs recently of the bempedoic acid uptake, and that seems to be how do I say, a current theme right now, right? That there are deficiencies around certain chemical supplies as a result of which Indian manufacturers are making hay. We saw that with Naveen Fluorine, we saw that with Deepak Nitrite, Aarti Industries numbers were good, and pharma chemical, etc., turning out very well. Is it, how do I say, would you be away from betting on this space simply because identifying the trending ones might be difficult right now?
We have some small exposure among the names you mentioned. We have some small exposure in a couple of the chemical names there. But I would say that that's also not an overweight kind of an allocation. It's a very small allocation of the low single digits. So yes, we want to keep our foot in because that sector is definitely out of the woods, as I mentioned. But it's not an area where I would want to build a large position. But yes, I would say the sector which was underperforming for the last 2 years, I think it's definitely out of the woods, and allocations should be seen because, as I mentioned, margin improvements are happening. But yes, we have to be very selective in that chemical space. Like, you can't go out and buy anything. Like, for example, in auto ancillary, I think it's across the basket growth which is happening, but the same cannot be said for the chemical industry. So you have to be very selective in the chemical space, which companies you're buying.
Okay. Anirudh, appreciate you taking the time out and being with us on the car, in the car, and giving us your
Always
conversation.
a pleasure to connect. Always a pleasure to connect.
Thanks. Yeah, you were in the car and on air at the same time. I mean,
that's called multitasking, and that's called best utilization of time.
I know. Okay, Nijas, but thanks for that. And since we're talking of healthcare and specific drugs, etc., I think Blue Jet stands out too, right? Quarter was impacted maybe by select pharma intermediates not doing well, but bempedoic acid numbers for a lot of others have looked okay. I think the Blue Jet management has remained confident of recovery through FY27, led by contrast media growth as well. Before we get the management, let's get in Sharad with the details. Sharad.
Well, yes, largely mixed set of numbers coming in, but if you look at the guidance, especially on the inventory issues getting sorted for the PI business, which is your pharma intermediate business, that is where the street is finding a little bit of bullishness. The pharma intermediate revenue did fall 43%, and there's a reason on high base. But if you look at the other businesses, the contrast media and high intensity sweeteners, that business has actually done well, and the gross margins has also been stable on a year-on-year basis. It's up almost 480 basis points, and management commentary is also quite bullish, especially on the new product launches. So of course the question is going to be, when does this inventory issues get solved for the core PI business?
Okay, thank you so much for setting that up for us. In fact, VK Singh, CEO at Blue Jet Healthcare, joins in. Welcome to the show, Mr. Singh. Always a pleasure to speak to you as well. If you could help us understand, in terms of business, there is strong momentum as well. If you have to take cues from this quarter and look at FY27 as a year, are you expecting this kind of strength to continue, or do you see it normalizing somewhere in between?
Hi, good morning, and thank you very much for having me on your show. I think we opened the year at an encouraging quarter. And this quarter was some sort of an endorsement of the resilience that we have in the business. At the outset, in the introductory remarks, we very clearly mentioned and correctly mentioned that the issue was with certain products in the cardiovascular segment in our PI vertical. We are at the tail end of the destocking cycle. And the plant has started, production has started rolling out, and we have a strong order book. So I see a normalization as far as PI is concerned. Contrast media is a very steady state type of business. And this year particularly, we have a couple of new launches that should give a further fillip to the business. And high intensity sweetener is quite steady and sticky as well. So I think the momentum that we see building up, given the Q1 results of the current financial year, we should be able to carry this forward.
Good morning, Neeraj here.
Hi, Neeraj.
A couple of questions. Good talking to you as always, of course. Bempedoic acid, you guys are the unequivocal leaders, but now there is competition, right? Even Morpen has amped up its capacities, its numbers, maybe, and that's what the street is talking about. Does that bring about lower volumes or pricing pressure, or both, or none of that will happen in the year to come?
See, normally we don't like to get so specific because we have very strict covenants of confidentiality. But Neeraj, now that you mentioned, particularly with the name of the product, the prescriptions are rolling out very well in most markets, particularly US and Europe. And there's a very high growth of this product. And you see, let us say, it's about 40 to 50% on an annualized basis and 12 to 14% sequentially on a quarter-on-quarter basis. So there's a huge opportunity sitting out there. We did hear from friends like you about Morpen, but we have not really seen volumes rolling out at this point of time. But the space is large enough, and we need to understand that Blue Jet is more on the intermediate side, and these other companies that you mentioned, they are more on the API side. I don't really see a conflict, and I don't see our volumes going down given this. Given what's happening at the front end, at the molecule level, it's growing excellently well. New markets are opening up. There's certain couple of very large markets which are opening up. More importantly, it's about our order book because we get orders for 10 to 12 months in advance. So we have a very robust order book, and we are quite confident that there is steadiness and growth in the business.
Good to get that clarity, really. Yeah, and at least I didn't have that clarity. That's a slightly divergent segment in which you are present versus maybe some of the others. But really good answer. Thank you so much for that, Mr. Singh. The other quick question: CDMO. The street is obsessed with every company doing a line out there or the line of work there. For you, which therapy or treatment line or product basket will be a focus area? And is this going to be a multi-year growth piece for you from where you are right now to where you can be in FY29 as far as the CDMO angle goes?
See, we are not one of the largest in India or globally, but then we are, I think, one of the very few CDMOs which have got a very small generic play or hardly anything, and it's mostly innovator or patent-driven business. So we are in a slightly more niche type of space. The opportunity is huge, but then to monitor this sequentially may not be the best idea. Quarter on quarter, you may not see the type of numbers that you see in FMCG. Given the sectors that we are in, like we are, give me the liberty of saying that we are the pick and shovel of the medtech industry. And in the medtech industry, the diagnostic business is very highly underpenetrated. And it is going to have secular tailwinds. So there'll be growth in this business, and we'll be one of the companies that will benefit from that growth. Similarly, the second sunrise sector that we are in is the sweetener sector, where we are looking at certain new launches as well. And because of this obsession with, healthcare and wellness, I think this sector is poised for a healthy growth. Thirdly, our pure play PI API CDMO sector, what we incubated a couple of years back, that will start fructifying. And we also have a foot in the door as far as the peptide and GLP-1 opportunity is concerned. Overall, I think this sector for India is poised for excellent growth, given the China +1 tailwinds, and particularly for Blue Jet. Given the incubation that we have done in the past, and given the niche segments where we have leadership position, particularly contrast media, where I said that we are the pick and shovel of the medtech industry. Given this, I think we will get very good traction and growth in the coming few years.
Interesting to hear that. Mr. Singh, good morning. Alex here. I want to ask about the pharma intermediaries business, and from what we can hear, the destocking is easing. Could you give us an update on inventory levels and how they look, what the outlook is for the rest of FY27? That's one. And the second is your gross margins have improved quite considerably, and they stand at over 50% at this moment. Is that something of a peak, or do you think that there is more juice to squeeze?
See, Alex, as I mentioned about the PI segment, the couple of products that were not doing that well, and we had 2 tepid quarters. The reason particularly was the channel inventory. The channel inventory had been built up because of certain new markets opening up. So we are at the tail end of the destocking cycle. So hereafter, we think that there'll be a very clear uptick and very, very steady business. More importantly, for us as we speak, we should be more concerned about the order book, and I think the order book is extremely robust. Coming on to the question of gross margins, we have been very consistently maintaining gross margins in the range of 53 to 55%. The last couple of quarters have been extremely uncertain because of the war condition. But since we were on a growth path, whatever we lost a little bit because of raw material prices going up and gross margins coming under pressure, we made up through operating leverage. So this quarter, you would have seen that sequentially, the operating revenue grew up by about 25%, but then the operating profit, it grew 50% higher than the operating level revenue. And the growth in operating profit sequentially was about 38%. And the reason is what I mentioned, that the top line grew and the gross margins were preserved despite the adverse situation in the market. And operating leverage was another added benefit.
Yeah, fair point. Mr. Singh, always a pleasure speaking with you. Wish you all the best in the rest of FY27 and lots to talk about, I think, through the year. And we look forward to catching up with you again.
Thank you so much. Thank you so much, Alex. Thank you, Neeraj.
All right, well, let's stay with earnings and talk about Inventurous Knowledge Solutions. Relatively new listing, posted a 21% growth in Q1 in revenue, and profits are up 28%. Stability in margins has been achieved. We're joined by Nithya Balasubramanian, who is the whole-time director and group CFO of the company. Thank you so much, Ms. Balasubramanian, for joining in. Can you give us a sense of whether this met with your own internal assessments and expectations, and what led to the performance on the margin front in particular, with regard to the pricing, I'm guessing, which has stayed resilient for you?
Thank you for having me. In terms of margins, we've always guided that we would be in the early to mid-30s range in terms of EBITDA percentage. And I think we've been consistently been able to achieve those levels in the last several quarters. This quarter as well, our reported EBITDA was about 33%, but we did have some one-time acquisition costs. As the street is aware, we have announced completion of the TrueBridge acquisition. There was about 20 crores worth of acquisition costs sitting in these numbers. Adjusted for that, in fact, our EBITDA was actually closer to 35%. So the underlying improvement in profitability is largely driven by the operational improvements that we're able to achieve as we continue to deploy technology in the services that we offer our customers.
And from what I can see, growth was driven in that care enablement platform. And if what you're saying holds true heading into, and obviously it will, so therefore I'm trying to understand what the trajectory for EBITDA margins would be Q2 onwards. Would you say that now that cost is out of the way, it would head higher to the mid-30 levels?
So in Q2, we would have integrated TrueBridge into the financials. So we closed the transaction on July 9th. TrueBridge, of course, has a very different margin profile. Before we acquired them, their adjusted EBITDA margins were in the range of 20-21%. So if you look at the combined pro forma EBITDA of the two entities, therefore, it'll actually the pro forma EBITDA will actually slide down to a 26% range. From where, again, if I look at the medium-term outlook for the combined business, we have communicated that by FY30, we'll be able to bring the combined business EBITDA to a very similar early to mid-30s range.
Yeah, about $300 million odd. So, Nithya, good morning, Neeraj here. Just, there are a few numbers and I've written them down just so that to get the perspective from you. What is the revenue EBITDA contribution that you anticipate, the synergy realization timeline as well? And, two numbers in particular, the path to bring net debt back to FY26 levels, because I think one of the calls earlier, it is your stated goal that you want to do that, right? And I heard you mention this 30% EBITDA. Does that also mean that the targets of $300 million EBITDA by FY30 remain sacrosanct?
So absolutely, I think we stand by the...
Nithya, sorry, could you just restart? Nithya, sorry, couldn't hear you. Can you restart, please? Yes.
Am I coming through clearly now?
Yes, loud and clear.
So I was saying that we just reiterated the North Star target that we have set for ourselves by FY30. So by FY30, we do believe that we should be able to reach the 3,000 crore EBITDA target. And that 3,000 EBITDA target will help us achieve approximately the early to mid-30s EBITDA range for the combined entity as well. The path to that is we do see significant scope for cost synergies. There is potential to continue to optimize the onshore-offshore mix of employees in TrueBridge, as well as some meaningful G&A synergies that we hope to be able to achieve. Through that, we believe that we'll be able to achieve the target that we have set for ourselves. And of course, we do believe that there'll be significant cash generation in the time frame as well. Again, if you go back and look at our equity acquisition, we started out with a debt of about $120 odd million. And in a matter of 2 years, we were able to pare down our net debt levels to approximately $25 million. So we do believe that this will continue to be a cash generating business, and we hope to be able to accelerate it through the synergies, which is why we have also put out a target for net debt. And we have assumed a $600 odd million term loan facility to be able to fund this transaction. But through cash generation, we hope to be able to pare it down to very similar $25-30 million levels.
Okay. Nitya, that's on the debt side as well. Now, from an operational perspective, the question I have for you is the revenue that I'm seeing from your repeat customers, that is on a higher side as well. So, are you seeing growth which is driven by cross-selling opportunities that are coming in within existing clients, or are you seeing an inflow of new client wins as well?
Oh, absolutely. I think our strategy has always remained land and expand, which is work with large customers and continue to increase our share of their wallet over a period of time. Traditionally, even if you look back and go back several years on an annual basis, approximately 80% plus of the growth comes from mining our existing relationship with the customers. There's about 2-3% that's supported by currency, and the remaining comes from new customer logos that we win in the year. So it's always tilted more towards expanding a relationship with existing customers, and that is true this quarter as well.
Specifically on TrueBridge, what is the kind of client profile and concentration of top clients as things stand right now? And if it is indeed a little concentrated, Nitya, by what you're comfortable with or your company is there going to be an intention to broaden that scope?
So the customer base is not concentrated at all. They operate in the rural community health segment market. In that market, customers tend to be rather small. So if you look at the customer base, they've got about approximately 700 plus customers on the EHR side, which is the electronic health record business. And they have a similar number of customers in the RCM side as well. So it's actually a very large customer base that they operate with. And given the nature of the market and the end market dynamics, we continue to believe that the customer profile in the TrueBridge segment will remain similar going forward as well.
Nitya, just a follow-up on costs, and you've laid out the trajectory for, of course, that Polestar or North Star EBITDA of $300 million. But in your business, you're going to have to continue to invest in technology in order to stay ahead of the curve. And so from that perspective, what is the kind of spend that you anticipate you're going to have to set aside on building in more artificial intelligence integration into the product that you're selling?
No, absolutely. It is very important for us to be able to stay ahead of the curve when it comes to technology and technology investments. We do believe we spend we're one of the highest spenders on technology as well. If you look at legacy IKS, we spend anywhere between 5 to 6% of our revenue on technology. These are technology resources, R&D, product development, and design. And we would expect to continue to make similar investments in the future as well. So as we make these investments, you will realize that there is operating leverage that starts to show up as I deploy this automation at the customer. And that operating leverage, some part of it, we will be reinvesting back into the business in terms of technology investment. And this is something, again, you can go back and look at the last several years. You will see that our headcount growth has always been a lot lower than revenue growth. There has always been this non-linearity, which is the operating leverage that I'm talking about. And some part of it will definitely get invested back into the business for technology.
Nitya, that's an interesting point that you make. So, if AI is delivering the productivity gains that you're describing right now, right? And if you have to look at the divergence between revenue growth or the gap between the revenue growth and the profitability growth, this time I would say 20% revenue growth versus a 28% profitability growth. Do you think that spread could widen further, and that in turn goes back to your gross margins as well, which I know you've been talking about. But I mean, what's that gap that you could actually watch out for?
So there are multiple drivers, right? One is, of course, operating leverage. We do expect to see as we're deploying more and more technology, but it'll be balanced by the investments that I need to make back in technology. As well as, I think, over a long period of time, we do tend to see some price compression. We do need to be able to pass along some of those benefits to the customer as well. So netting out all of these factors is where we believe what is a sustainable level for the business is the early to mid 30s range of EBITDA margins.
Okay, and I'll come back to TruBridge as well. Now, TruBridge is helping you increase that scale that we're talking about, but does that actually fundamentally change the economics of the business as well? And if IKS succeeds in this over the next 3 years, will it be because it's selling more technology, or is it because it's selling more AI?
So, yes, I think one of the most important strategic rationale for us to buy TruBridge was to be able to combine the might of the underlying longitudinal patient records, that de-identified data, of course, that we have access to through the EHR, and then be able to slap on the product and services in the care enablement platform that IKS has. So yes, we do believe that the business model will become a lot stronger in the future, because we will be able to offer to a customer a one-stop shop, if you will, where we are able to provide them the underlying clinical record as well as financial record, as well as provide all the services on top of that. So yes, the business model itself, we hope, will be a lot stronger and a lot more resilient when we are able to put the two together. In terms of economics, if you mean EBITDA, we do believe, as I said before, that even for the combined pro forma entity, we believe that we should be able to hit the similar early to mid 30s range.
So I might have missed it, Nitya, and just a quick clarification therefore. You've said that glide path for net debt, you'll bring it back to 25 million. When will that take place by?
It's the same FY30 target. By FY30, we are saying 3,000 crores in EBITDA and a similar $25-30 million net debt.
I understand. All right. Pleasure speaking with you and wish you all the best.
Thank you so much.
All right, let's talk about Aegis. The company is in focus as it strengthened its position as one of India's leading precision aerospace manufacturers, backed by integrated manufacturing rather, and a growing global customer base. My colleague Sharad Dubey actually did a ground check of their Belgavi facility. This you might know as Belgaum, as it was called earlier. He spoke with Arvind Meligiri, who's the chairman and chief executive officer of the company. Listen in.
I can call it as simple when I look back, but we all grew up in Hubli and did my undergraduate in REC Surathkal in mechanical engineering. Then post that I went to US for my higher studies to Penn State, and post that I worked at Ford Motor Company for a few years. And then at that time we had this idea of starting some business, and my partner Ajit Prabhu, also from Hubli, and his brother Ajay Prabhu was my classmate, and he's also from Hubli. We studied from all the way from first grade, Kannada medium school.
Okay, that was Kannada medium school.
Kannada medium all the way to the engineering, and went to US. So Ajit and myself, both being mechanical engineers, started this Quest Global back in '97 in US to provide engineering design services to customers, global customers, and from there. Fast forward, as we were set up India Engineering Services, then later we basically saw the opportunity that, hey, we are doing all this engineering and customers are taking these products, designs, and giving it to somebody else to manufacture in the world. And it didn't make sense. Why we cannot do this? And we already started seeing this. India had already skipped manufacturing growth phase and jumped into services completely. And we felt that there was an opportunity to do it, and aerospace was something we were already supporting to customers like Airbus.
Right. So there's a big need for India's manufacturing to step up, actually.
Absolutely.
So very interesting conversations, and now we'll be heading towards the factories to understand, what's actually happening. Everybody's curious about it, and Dalal Street wants to understand what is this precision manufacturing, and going ahead, what it means, the aerospace as well. So come, let's go and try to understand. So Arvind sir, the India's aero ecosystem manufacturing story, it's still very, very nascent. How is it playing out? And now we enter the factory also, we are going to see that. So what's the entire story about?
Look, aerospace is like a $90 billion global industry, and India is basically the supplying about 2% of that, and we are like going to be like a 10% of the aviation market in the future.
And this is India, right?
India.
Okay.
Okay. So our goal for India has to be to get to close to 10%, which is what the market
Currently,
is.
what is it?
About 2%.
There's a 5x opportunity here.
Opportunity exists. That means, but aerospace doesn't come out, it cannot just happen overnight. It's a very slow process because highly regulated, highly globalized. There are processes and systems which takes years sometimes to get approved, and a journey once starts early will reach there early.
Okay.
That's how it works, pretty much.
So you are like a first mover advantage, I can say.
Yeah, I mean, we started 15 years back this journey looking at the opportunity, and we knew that to be most efficient, you need to be operating from a single cluster kind of ecosystem. If you really
So
look at
this SEZ is a single cluster.
in a sense. If you look at in the west, Wichita, Kansas, as a city is a cluster, as a town is a cluster. Toulouse, as a town is a cluster, and that's how the whole ecosystem has developed around there. And India, we have, Bangalore has got an ecosystem, but it's a big city, that used to happen in London, Paris in the past. They have all moved out of there because economics doesn't exist in manufacturing to be in a large
Pretty
city.
interesting here. We are surrounded by so many machines and so many processes. Let's try to understand them one by one. Come. So sir, what will be the process? We are talking about the titanium product. There was a block coming in.
Yeah, I mean, if you really look at it, this titanium block comes from most probably Russia or US. They are basically titanium producers right now, and Europe also for that matter. Then that block basically goes to the various operations, machining operations. Typically, it could be each of the operations could be several hours. So first operation in this case is about 3 hours. And it has to be remove 80% of the material, and basically that comes out as scrap. Chips, and those chips are pretty much, recycled.
Okay, and you resell it to the
outsiders. Today, we don't have much recycling in India in titanium, so it goes out of the country for recycled and again becomes a part of the original block, in the future.
Wow.
Here is one of the long bed, a machining center from Deckelmacher, German one, and pretty much I would
so
say
this product is used also in aerospace?
Aircraft. Basically it's fuselage product. It's part of a fuselage. It goes into Airbus.
Right.
Airbus A320.
Okay, these products go into Airbus today.
Airbus A320 in Germany right now.
That's an interesting on-ground report from Equus, and aerospace continues to remain the key focus area as well in terms of business, and you can catch the full conversation sometime on NDTV Profit as well and on our social media platforms. But two kids on the block that get listed, Juniper Green Energy and MV Electro Systems, both of them listing on the bourses. You have MV, which is listing at an uptick of around 26% right now as we speak. Juniper Green, 7 to 8% is what you're seeing. So clearly you have MV Electro Systems, which is seeing a solid listing. Alex, 26% is the kind of listing gains that are coming in on the back of the debut. And Juniper Green, which is at around 7 to 9,
It's
8%.
so good to see listing pops, isn't it? After what we saw last year with the number of IPOs that were listing and seeing a drop on the first day, that just means that mutual funds and other large investors are pushing back when companies are coming through to sell paper. They say we won't accept it if you don't give us the right price.
Yeah, we may not have CXMT and a 400% pop, but this is good enough.
Come on, you can't complain about a 30% pop. Yeah. All right, so we'll speak about some of this in more detail, and we've got a very interesting conversation lined up about a Goldman Sachs note. We'll tell you about that in just a bit. On the other side, though, we'll be speaking with Mahesh Palawat of SkyMet Weather Services to discuss what we began the show with. The fact that this is probably the strongest El Nino in 76 years? 76 years. What are the implications for India? Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss.
Welcome back. You're watching India Market Open, and we started the show with Neeraj informing all of us it was a did you know of epic proportions, because he pointed out the fact that this year's El Nino, which is the weather effect that has a bearing on the southwest monsoon winds, is the worst in 76 years. It's on track at least to become the worst or the most powerful in the last 76 years. This is a global phenomenon though. What are the implications for India specifically? Let's ask, Mahesh Palawat, who is the Vice President Meteorology and Climate at SkyMet. Mahesh, thanks so much for taking the time. Not to be alarmist, but it sounds pretty alarming when you say this is the worst or the strongest El Nino phenomenon in 76 years, and the worry about the fact that there has been lower rainfall in several pockets of the country. What is your initial reading and how do we understand this?
See, yes, you're right that this is one of the strongest El Nino in recent years, but until now, the peak has not reached. Temperatures are around 1.4 degree above normal over eastern and central parts of Pacific Ocean. That's why the impact of El Nino is not very pronounced over Indian monsoon until now, because in July we have seen surplus rain, and now during August the normal rainfall is going on. But yes, it will peak in its intensity by October and November. So until then, our monsoon will be over. But second half of August seems to be slightly below normal. The El Nino effect will be more visible by second half of August and during September. But until now, we have seen the monsoon, overall monsoon is 11.5% deficit. And the rain distribution is also very much uniform over most parts of the country, except South Peninsula, particularly if you see interior parts of Karnataka, Tamil Nadu, Rayalaseema, these areas have been witnessing a lesser rainfall. But we have seen the flooding rain over Gujarat and Rajasthan as well as over Assam. So we can say the impact will be more visible by second half of August. Yeah.
Mahesh, till recently, and none of us are experts in weather phenomena, which is why we're speaking to you. But the layperson understanding of this was that there is this positive Indian Ocean dipole, which counters the effect of the El Nino. Can you help us understand whether this is at play, and what does this mean for the continued rainfall in this season and sowing?
The El Nino usually impact our southwest monsoon adversely, and if there is Indian Ocean dipole which is positive, that is equatorial Indian Ocean, western parts of equatorial Indian Ocean, the temperatures when they start warming up, then it means that Indian Ocean dipole is positive. So southwesterly winds from that area increases the rainfall over our subcontinent, Indian subcontinent, and they counter the ill effect of El Nino. So now the forecast is saying that in second half of August, or you say later part of August, the Indian Ocean dipole will be positive. Around the temperature will be around 1.2 to 1.4 degrees Celsius. So this is very good scenario because El Nino will peak during that time, and simultaneously the Indian Ocean dipole will also become positive. So there are chances that some of the ill impact of El Nino will be countered by Indian Ocean dipole. So that's why we are counting on that this deficit, rain deficit, which is at present at 11.5%, it will maintain. So average rainfall will be reached during later part of August as well as during September. So there is no panic for farmers and farming community because the rainfall distribution seems to be sufficiently good around across the country. Yeah.
Okay. The other question I have for you is then what are the kind of reservoir levels that you're tracking right now and where do you see it settling? And number two, historically as well as you were mentioning, not every El Nino translates into a drought kind of a situation when it comes to the Indian markets as well. So how are you seeing this episode differently, or do you think, what we're talking about absolutely should remain on track?
Yes, this El Nino is slightly different because it is evolving El Nino and now peak has not reached.
Okay.
We think that it will be reaching in the month of October and November, by the time the monsoon will be over. So the major impact of the El Nino will be, say, in the fag end of August and September. So until now, there is sufficient rainfall over central parts of the country, which is rain dependent, particularly Chhattisgarh, Madhya Pradesh, Gujarat, Rajasthan, Maharashtra. All these states have been receiving sufficient rainfall, and the deluge-like condition is also being witnessed since last 1 week or so. Now the weather activities will be over Indo-Gangetic plains, eastern parts of the country, northeast India, and eastern parts of central India, particularly East Rajasthan, Chhattisgarh, Odisha. All these areas will be receiving good rain during second half of August as well. So we think that the reservoir level, I don't know actually because we are not tracking the reservoir level. But yes, because rain was fairly decent over these areas which are rain dependent. That's why I think that reservoir levels will be good enough to sustain the ill impact of El Nino if it happens during fag end of August and September.
So, Mr. Palawat, as of now, you're saying there are no major risks that one should be tracking. But if this develops into a situation which we saw back then in, say, 97, 98, or even for that matter, some amount in 2015, 2016, what would be the first warning signs that one should watch out for, which are clearly visible on the ground?
Yes, if the development of low pressure area or weather system, which we have been witnessing during first half of August as well as during July, if they start reducing due to El Nino, the rise in temperature over India, Eastern Pacific, then the impact will be more visible over Rajasthan, Gujarat, Maharashtra, interior Karnataka. These areas will see deficient rainfall in coming days. So impact will be more visible over these areas. However, I think that sowing has been is completed over almost entire country. There is a deficiency of say 4 to 5% of sowing across the country. So we think that this El Nino, though it is one of the strongest El Nino, but its impact is not as pronounced as we have seen, as we witnessed in 97, 98 and 2015. Because the Indian Ocean dipole is going to be positive during fag end of August, which may counter the impact of El Nino. So that's why I'm saying that we need not to panic. Although the monsoon will end on the lower side of normal rain, below normal rain. Say it may end around say 90 to 91%, or at the most 89% of deficiency. Yeah.
Right. Mr. Palawat, thank you so much for taking the time out and being with us. Really appreciate your time this morning and these insights that you've given us. Well, for the insights that around today and El Nino being the strongest or the worst, however you put it, in 76 years for the world, the policy, and a really good report that the Goldman team led by Santanu wrote about Gen AI in India, and the title is "A Job Crosswinds and Productivity Tailwinds." Absolute delight to welcome him on the show to talk about that and more. Santanu, great having you. Thank you so much for taking the time out and being with us today. Neeraj here. Good morning to you. And we are going to go to your report in a bit, but I just want to talk about two issues to start off with. And before the policy, since we are talking about monsoon and what's happening to inflation, agrarian economy, etc., is there a stress, Santanu, to your mind, or with the rainfall being what it is in the recent past, for India at least that part is taken care of? How do you see it?
Yeah, thank you for having me. Look, for the Kharif crop, we were not of the view that this will be a major impact for the long cycle crops, because rice and wheat inventories are very strong as we are getting into the Kharif cycle. You can have some external related risks to inflation, food inflation from, let's say, edible oils. But our concern was that if the rains don't really come out, come through, then the reservoir levels will be low by the time you get into the Rabi season, which is the more irrigated crop. And, you can have a problem with the Rabi crop if you don't have the water in the reservoirs. But it seems to us, and, you're in the earlier program also you're mentioning, that it seems like the rains are catching up. The reservoirs are the positions are getting better than what it was earlier. And therefore, the risk is lower than what we were anticipating about a month and a half back.
Okay, which is good to know. And of course, the proof of the pudding will be, I think, as the season goes away. The other piece is, I read some of your comments post policy with interest, Santanu. You are deferring any possibility of a rate hike, if I'm not wrong, all the way till December. So presumably, until then, no rate action by the Reserve Bank of India. And I believe their comments on inflation, or maybe the lack of it, and growth, etc., lead you to believe that that will not be the case. Would that be a fair assessment? And if there is anything else that really stood out for you in the policy, because we were scratching our heads, it didn't seem to be a really standout announcement policy.
Well, what stood out for us was it was dovish. It was the governor's statement was decidedly dovish. I think the press conference was relatively more balanced, and therefore, if they are mentioning that inflation is not broad-based yet, the governor mentioned core X precious metals about 2 or 3 times during the speech, and also after that during the press conference. And if you think that core inflation is peaking out by Q3 and then coming down after that, our sense is that there is no real urgency to tighten monetary policy in the immediate future. So we have deferred the hike call to December. It's likely that it goes to February if inflation, especially core inflation, surprises on the downside compared to what we have or where the RBI's forecasts are, which are quite similar. We are just a shade below the RBI on the overall inflation forecast. So, yeah, I mean, I would say that risks on the horizon in terms of El Nino, in terms of obviously the geopolitical tensions if it flares up again, in terms of what the Fed does. But our call right now is that at least up to December, we are not expecting monetary policy tightening action.
I want to talk about this report that you put out, which has to do with the implications of AI adoption, and you've looked at the workforce. And you've also studied, I think, the IT services space and the implications therein. You're expecting there to be a net positive implication or impact. Can you explain that to us?
Sure. Our point is that the adoption of Gen AI, and the word adoption is very important because you need to diffuse it across the economy, is going to be a medium-term positive for India's macro outlook, although the labor market effect in the interim period will be uneven. I think currently the focus is very much only on the IT sector and services exports. there too you have sort of differing, conclusions. You're seeing the very large IT firms shed jobs. We've seen about 60,000 odd jobs being shed on net from the top 6 IT companies. Whereas if you look at the overall tech workforce data from Masscom, they have actually added 0.7 million jobs in the last 3 years. So all of this is over the last 3 years. And therefore, the labor market effect in our mind is uneven. But more so, even if you look at services exports, while the large tech companies are growing revenues at sort of pre-pandemic trend, all of us know that services exports on aggregate, especially led by the GCCs, is materially higher. Now, clearly, that kind of growth rate cannot sustain, but services export, which was earlier at about 7% of GDP in the pre-pandemic period, is now at about 10.5, 11% of GDP. And then if you think about the diffusion of AI beyond this sector, which is not really being talked about right now, but beyond the sector in the other knowledge services, be it education, be it media, entertainment, financial services, and so on, we think the net impact of that from the complementarity that AI gives to the workforce is going to outweigh the labor market outcomes that you will have in the interim period. And it's going to be a net productivity positive. That is, you're going to produce more dollars, likely at the same or maybe a little bit less number of people, but the overall net growth impact, in our view, is going to be positive.
Okay. Shantanu, good morning. Hiral, that's an interesting point you make, and when you're estimating that AI could probably add good 4/10 to 8/10 percentage points to labor productivity growth is what I read. How significant does that actually become in the context of India's long-term GDP growth, number one? And two, what needs to actually happen for India to go ahead and capture this upper end of that productivity gain versus taking the lower end?
Right. So I think the first point is, as I mentioned earlier, adoption. If the adoption is only in certain sectors, I mean, when you look at the overall economy, you're going to have some amount of substitution, some amount of complementarity, and some sectors are going to be unaffected. I mean, if you're not really using technology in your job, you're basically out of benefiting from AI, so to say. But if the adoption is only in sectors or in job functions which is getting substituted, then the labor market impact will dominate beyond the complementarity, right? Because you'll not really get the complementarity impact and the positive impact on growth. So the adoption and the diffusion of AI at a relatively cheap cost for the overall economy is very, very important. And in that, we point out two key points, which is we need the infrastructure to be there. And to be fair, some part of it is happening. You can see the data centers, including some of the global companies wanting to put up data centers in India. But along with that, you'll have power requirement, you'll have the cooling requirement, and so on. So do we have the physical infrastructure capacity for that to manifest overall in the economy? And lastly, this has been a concern with overall services exports for us over the last 2 or 3 years and less under India's control, which is that if the exporting destinations turn more protectionist about services exports, like you've seen in goods or merchandising export in the last 2 or 3 years, that can be an impediment or sort of a headwind for India's services export growth overall, rather than AI coming in and completely disrupting India's services export. So that's sort of the medium-term view that we are taking.
Okay. Shantanu, just broadly, because there are too many sectors attached to this, right? And understand the productivity gain argument completely. But even before the AI issue, if I can call it an issue, started, there was always this talk of whether the quantum of workforce entering into the workforce age every single year in India will find adequate jobs or no. If IT doesn't provide that white-collar jobs at scale that it used to pre-AI, even if IT were to grow, is manufacturing as a sector that adequate alternative for providing high-quality jobs in India? And does India have no other option but for a manufacturing renaissance for the large labor workforce to find jobs in the first place?
Right. So two parts to this. One, I'll be careful about IT. It's about 2% of the overall non-agricultural workforce in India.
Okay.
It has been a significant provider of jobs and relatively higher paying jobs in the last 2 decades, I would say. And maybe the bottom end of that will start getting lesser in terms of a growth impact going forward. So it'll flatline or possibly decline. And some of that you've already seen, as I was mentioning, in the large IT companies. If you're smaller and nimble, and if you are capability centers, you're growing, is the evidence that we have until now. Until companies really think that they're going to nearshore everything, which is not really what we have seen, at least in the last 1 or 2 years. So that's on IT. Separately, on the overall services, even before I come to manufacturing, the whole argument we are making is that for healthcare, education, media, financial services, this whole services ecosystem, it can actually act as a boost in terms of creating those jobs. So, we should not forget that. Finally, in terms of manufacturing, look, our sense is that manufacturing processes are getting a bit more mechanized than in the past. So if you look at the factory worker, the advent of robotics, which we really haven't covered in this report because this is very much focused on AI rather than robotics, is going to sort of act as a headwind in terms of employment in the manufacturing sector. That said, if you're growing capital expenditure across some of these spectrums, so power being one of the very big, or the energy resilience being one of the big themes that we are thinking about, along with, let's say, defense and some others, that can act as a boost to overall employment in the economy. But I would not forget the rest of the services sector or the services ecosystem. Final point, we will be good at predicting what kind of jobs can be automated right now, but the kind of jobs that can come up in the next 2 or 3 years because of the technology revolution is not something that we will really be able to predict. So we'll have to, we are taking that glass half full view of the 3 years to 5 years out.
Shantanu, 3 years to 5 years out. Okay, but in this time frame, and ultimately our audience is primarily looking to invest in companies to ride on that growth. So the question really is, in this productivity gain that you are envisioning, how much of the share of that is going to be for companies in the listed space? Is that something that you've done as part of this exercise?
Yeah, great question. We have not yet, but our sense is that large part of this is right now in the unlisted space. Some of these smaller tech companies are also in the unlisted space, and you're having sort of private capital interest, private equity, private credit interest in those segments. We think that is going to grow at some point of time, come to the listed space. But if you look at the shape of AI, the very top end consumption, what our consumer analysts earlier have called as affluent India, that has seen significant growth. The growth rate is flatlining, but that segment or that cohort sort of remains intact in our view. So some of those segments should benefit. And finally, this is less to do with the AI point, but more generally, if you see the energy shocks that India and more generally the world has been witnessing, we think that energy resilience and energy security across the spectrum is going to be a very big theme. That starts right from exploration to thermal to renewables, solar, batteries, EVs. That whole segment we think is going to be very ripe for capex also going forward.
All right. Interesting times that we live in. You can say that at the very least. Shantanu, thanks so much for taking the time and for speaking to us today.
Thank you.
All right, quick check of where the markets are. Again, don't look at the percentage change for the Nifty 50 at 24,630. We're certainly better than we were at the start of the week, and so that's something to focus on. The broader markets are reasonably okay as well. The mid-cap index just about flatlining at this point, having recovered from the low point of the day, and the small-cap index up about about 1/3% or thereabouts. But that brings us to the end of this edition of India Market Open. From Neeraj, Hiral and myself and the team that put the show together, thank you so much for watching. Stay tuned. Up next is Ask Profit, and this is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना प्लीज। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts?
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Well, Bitcoin remains range bound between the $64,000 to $65,000 levels. India's tax authority issues guidance formalizing crypto reporting. And SEC Commissioner Hester Pierce remains upbeat on crypto reforms. Lastly, S&P gives BlackRock tokenized reserve fund top stability rating. Well, the Bitcoin remains in a narrow range between that $64,000 to $65,000, especially on the deadline for the Digital Asset Market Clarity Act to play out. It's very near for the Senate to decide. Volumes actually are on the lower side, and if you look at the volatility, that's also expected to reduce going ahead as well. Consolidation likely if you're following the charts. Well, India's tax authority has issued a 198-page guidance note which requires crypto service providers to collect the detailed user tax data and file annual Form 167. Now, these reports are ahead of joining CARF, which is nothing but Crypto Asset Reporting Framework. It's a global framework, and this aligns India with this global standard reporting framework for the digital assets. So yes, it is sentimentally positive. Also, the Securities Exchange Commission SEC Commissioner Hester Pierce says that US crypto reforms can continue even if Congress fails to complete the Digital Asset Market Clarity Act. That means the regulatory progress continues and is alive while the lawmakers are divided over the bill's final shape. This shows regulatory optimism from the regulator's point of view. And S&P Global Ratings has assigned its highest principal stability fund rating to BlackRock's new tokenized money market fund. The ratings provider cited the creditworthiness of its investments and counterparties, and remember, it's a mature structure. This action gives moral support to institutional participation in the tokenized asset classes. And before we wrap, here's a quick check to the changes to the crypto prices over the last 24 hours. Largely, they have been in a very narrow range. If we talk about Bitcoin and Ethereum, slightly on the positive, but a bit of sell-off in XRP as there is a churn happening in certain crypto. Also, the support and resistance range is much narrower between that $64,000 to $66,000 mark. Well, here's what's there to keep in mind today. The crypto strategy, the market sentiment for the second straight day is cautious but stable. Lower leverage positions are there in the system right now, and you can expect, if you look at the technical charts, consolidation is likely to continue. No major news flows are coming in unless something surprising comes from the Clarity Act. Just 2 or 3 days left for the August recess in US. Bitcoin trade range would be $64,000 to $66,000. That's what you should be noting it down. Also, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
You're watching Ask Profit here at NDTV Profit. I am Mahima Vasharjani, and with me as always is Puneet Zaveri, and this is a show, of course, that gets all your stock related queries answered. For viewers who are tuning in by now, I know that you know the drill, but just in case for somebody joining us new, you can either call us or WhatsApp us on the numbers that are flashing on your screen up there. While you do that, a quick look as to how the markets are doing. The Nifty 50 right now is trading almost flat around the 24,600 levels. Let's try to pull up the heat map also and see as to what are the counters that are keeping the Nifty in check and contributing positively. You have Eternal topping that chart up 2.5%. Shriram Finance continues to do very well, up 2.4% as well. Cipla, RIL, Titan, just Titan ahead of the numbers. Tomorrow is when the company posts its numbers doing well. There is BEL, Sun Pharma, Apollo Hospitals also doing very well. SBI also, in fact, numbers expected tomorrow doing fairly well. But on the flip side, you have something like a trend just ahead of the numbers. We've seen that the business update was not very positive. Today is when it's expected to post its numbers. It's down almost 2%. Power Grid, ONGC, NTPC, Hindalco are all trading in the red. Hindalco, of course, we post the Novelis numbers. Not much of an action actually per se there. Let's also take a look at the Nifty Bank. It's around the 57,800 levels. I think the next 58,000 levels is something that we will be watching out for the Bank Nifty. But the broader end of spectrum, the mid cap 150 is almost mirroring Nifty 50, just up by about 0.08%. The small cap 250 slightly doing better, up by about 0.3 odd percent. Though come off from the day's high point, but doing better than the benchmarks and the mid cap 150. Let's also pull up the BSE 500 and see as to what are some of the names that are doing fairly well. You have something like a Naveen Florin on the back of strong Q1 numbers doing very well. There's something like, so in fact the defense pack as a whole is also doing very well. You have HAL, you have Mishra Dhatu, etc. doing fairly well. But on the flip side, you also have something like a Sheela Foam, PNC, Infy, Clux, etc. That continue to be under pressure. But let's start taking all your stock related questions. And today, of course, being Thursday, we have Kushbura with us in the studio, and we're also joined by Tapan Doshi, research analyst at Tapan.in, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start by taking the first question. In fact, before I do that, Kush, I'll quickly come to you. In terms of it's been now 3 days in terms of how we've witnessed CAS, right, in closing. But your quick take on how today things could pan out, considering that it's also expiry, because it's going to be a scary one today.
First of a very good morning. And I don't know what's scary, it might be a little tricky.
Yeah.
I think I'll be around for the closing show, maybe a portion of it, just to perhaps discuss that, because it's the expiry. So we'll perhaps confirm that. But yeah, I might be around for that discussion also today. I have advised, on Monday, on Tuesday as well, don't be writing call options right now with the way, things are moving. Don't go out and buy also, because we could see some volatility. Let things settle. It's not necessary for you to participate in every big change. So yes, it is starting to settle. We are seeing some divergences, in the Nifty spot and the futures, perhaps cool off a little every day. Yesterday, the gap was a little lesser. Perhaps it'll improve today as well, but like I said, let things settle. Don't let your options go into expiry. The STT that you pay on that is higher, the other charges also, plus you don't know how big the change could be and in which direction. So yes, be a little mindful of that.
All right, okay, so that's the view coming in from Kush. But let's start taking your query. The first one that we have is from Aarti, who's writing us from Bengaluru, asking about Electra Green Tech. She's got 8 at the levels of 1198 and wants to know if she can continue to hold this one or sell out and book profits. Tapan, a very good morning to you. I'll come to you on this one. What's the view?
Good morning, Mahima. So if you see the results and all that is for this company has been okay. The outlook is quite good. If you see the e-bus demand is quite good. Again, you can see order execution will be accelerating from next quarter. Capacity expansion is there. Though one thing one has to keep in mind that already the stock has a premium valuation and competition is increasing. But looking at the strong order book, I think hold this stock for a little bit longer.
That view, but let's also look at a couple of key stocks that got listed on the exchanges today. Jupiter Green was one, and you had a mild start in the green for that particular counter. There's also MV Electrosystem that got listed and a very strong reaction. It's actually built on, so it opened almost 22% up at almost 520 rupees per share. Now trading at 581. It's an interesting case, this of MV Electrosystems. We spoke to the management. Because they've recorded just revenues of 49 crores in the last year, EBITDA loss making, but they have an order book of almost 19 times of that revenue. So important to get into the perspective of why and how the street is liking this as well. Let's also, and I had a chance to speak to the management, let's listen into what they had to say, especially on this order book progression, as well as what is that the key new product they've developed that the street is liking. Let's listen. We are being now joined by Mohit Vora. He is the non-executive director at MV Electrosystems Limited. Mr. Vora, very good morning to you, sir. Thank you for joining us today. Let me just start off with, with something that is very central to your, to your company, and that's the three-phase drives propulsion equipment that you have been developing. You have an order book for that too. Talk to us about the importance of that product, as well as what it means for the company in the next 3 to 4 years.
Wonderful. First of all, thank you very much for having us on this show. Thank you very much. MV Electrosystems, as you know, is an emerging railway technology company. For the last 5 to 6 years, we have been dedicatedly working on development of this three-phase locomotive propulsion system, which you talked about, you named about. So, Last year, September 2025, we received the qualification after 2.5 years of rigorous inspection, testing and field trials by railways. And recently we have started our revenues from this. 2-3 batches have already been shipped, commissioned, and payments also received. So this is a very important technology, the core part of the rolling stock. Rolling stock means locomotives, EMUs, metros, train sets like Vande Bharat trains or the bullet train. So it is the central or the core part, or I should say it is the heart or brain of a train. So that it pumps the blood in the form of the current or voltage into the motors, and also all the electrical devices or electronic devices in a locomotive or the train continually speak with each other or communicate with each other through this medium. So that is the main nervous system, you can say. So having developed this, we are virtually the first Indian company having developed this kind of IPR for the country. We were largely dependent on foreign countries for the development or production of our locomotives or of our train sets. So having this technology in the country, we can give priorities to our projects which are central to India, central to the country. Indian Railways, as we know, is going through a very significant phase of modernization, very big scale. This ambitious program is nowhere in the world as such. We are talking about high horsepower locomotives, a lot of freight corridors are coming in, the density of the cities are increasing, the size of the cities are increasing, so we'll be needing more number of locomotives and more number of train sets also.
Most certainly. Sir, I just wanted to put in perspective about this particular order as well, because you also have, because when I look at the numbers, you recorded 49 crores in terms of revenue. Now I'm sure based on this approval that you got in last year, this new product is not reflected too much in revenues, but you have an order book, and I think the number that I have is 1163 crore. So the question being, what is the execution timeline of this order book, and how are you seeing that in FY27 and 28 reflecting in your revenues?
Great. So as you rightly mentioned that the future is in front of us. We have clocked the order book, which is generally an annual order book. You need to complete the entire order book within next upcoming financial year. So as such, it is expected from MV Electro Systems to complete this order book within next 12 months time frame of the time when we receive the order. Unlike propulsion system for EMUs or MEMU trains, wherein you are given sometime 2 to 3 years or 4 years also for the execution timeline. So this is an annual timeline, and that is how we say that we will scale up fast. You will see a significant multiple growth in the company. This was one reason of coming up with this IPO. You will see out of 290 crore.
Well, that was the management of MV Electro Systems. Of course, they spoke about why that revenue has been in that very range around 50-60 crore, but I think it's the future of the company that's more in focus, and I think that's what the street's liking at this point of time too. But let's continue with your stock related queries. This one's coming in on Metropolis Healthcare. Our viewer Sumant has actually bought these shares at 590, so attractive levels that she got into, but wants to know and has been range bound today, coach, despite good results. Wants to know actually the short term view of this counter. What should she do with 170 shares?
No, fairly positive on Metropolis. In fact, if I recall, I had given a call on this about last week or maybe just before, right, with a stop loss at about 567. The stock has a tendency of coming to the 20-day moving average and rebounding from there. Last week, this week, it's already done that twice. It's holding ground. So yeah, there was already a bit of a run up, and hence perhaps the stock is consolidating. But on the whole, if you ask me, the stock has, the primary trend for this one is intact. Now it's very close to the support levels. I don't see a reason for you to exit. Maybe if not 567, you might want to keep a stop loss slightly lower at about 558, 560, just rounding that off, and continue to hold Metropolis.
Okay, so that's the view coming on Metropolis. In fact, we're also going to speak to the management in the second half, so you can listen to that conversation as well. But the next one that we have is coming in on HDFC Bank. Sai Karthik from Dallas wants to know if this is the good time to buy HDFC Bank and good targets that you can expect on this one. Good or bad, I don't know, Kush, but what is it that you're expecting on the charts?
This is such a difficult one to call, isn't it? I mean, men wiser than myself have tried and failed. Let me still give it a shot, right? 720 to 730, that's the long-term support zone for HDFC. We've seen the stock rebound multiple times from there on. Now, I'm not saying that, this is the area where you buy and hold for the long term. The stock's disappointed on that front multiple occasions, on multiple occasions. But given that kind of a record, given that even recently we've seen the stock rebound from those levels, I think you can still consider that. I would suggest a stop loss slightly deeper, maybe 700 kind of levels. But yeah, if you want to play for a favorable risk-reward ratio, you can consider HDFC Bank. On the way up, look for targets of 765 and about 795, 800 plus levels also. So risk reward ratio is favorable right now. We all know momentum is not something that has been going for HDFC Bank.
Most certainly at this point of time, lack of momentum there. But let's go across to Hyderabad now. Ajay, who's dialing in for a stock related query. Ajay, very good morning. Welcome to the show. What's your query?
Happy morning to all. My query is about Officer Solutions. For 1 month nearly I have been holding this at 305,000 quantity.
Okay.
I don't know about when the results are. Can you please tell me like fundamentals and technicals for short term period, how this stock is performing?
Got it. Kush, yet again, a short term query on Office. What do the charts suggest?
Not very encouraging, I'm afraid. The stock has been in a downfall after that initial bump up. It got from listing, went to 950 plus 950 odd levels, and then from there it's just been in a steady decline. Right now it's trying to find its feet. 260, 265 support zone is acting up, but I wouldn't remain too constructive on this. However, given the oversold nature of the stock, I would say you can hold, keep this 260 level as your stop loss, but as and when you get your buy price or closer to it, you're better off exiting.
Okay, the next one that we have is coming in from Gautam, who's also writing us from USA. Wants to know about two counters, Tapan. He's asking about either AB Capital or IndusInd. Where can he go ahead and invest for the next 12 to 18 months? Where do you think our fundamentals better placed?
Well, I'll go with AB Capital because still I think IndusInd, of course, the result was okay, but I still feel AB Capital is a better option, quite diversified. AMC in insurance, broking business is doing good. Again, digital lending is scaling for them. Cross-selling is improving. Yes, competition is there, but I think if you see the earlier, the way they were operating now, it's been changed and management is quite positive. So yes, if he wants to go, I think AB Capital will be a better option, a safer option than IndusInd Bank.
Got that view, Tapan. But the next question coming through, and this one's very well capitulated by Shiv Kumar, because he's mentioning about the EV frenzy that's currently going on, and wants to know if it's still a good time to enter Ather Energy at this point of time for the next 1 to 2 years. Tapan, we've seen, of course, almost 4x move in just the last 1 year since the IPO. But how are you looking at this counter? We're going to have a very big capacity coming for the company. New launches also expected this month. How are you looking at this counter now?
Well, great performance now. One of the exceptional performance, but of course, the valuation is too high. Still, EBITDA is, you can see it is negative, but the way they are operating now, I think it will turn positive over the time. But already valuation is taking care of that. Of course, retail expansion continues. Battery ecosystem for Ather is going up. Family scooter launches, new launches are coming. So that is helping them. Strong technology platform is there. Cash position is okay. But looking at the valuation, no, it's too high to enter it. So from my side, I think it will be a buy on this, maybe 15-20% down from here, not at this level.
All right. Okay. So that's the view on Ather. The next one that we have is from Shankar, who's writing us from Bengaluru, asking about Jyoti Labs. He wants to know whether this is the right time to make an entry into this one. He's planning to buy around 1,000 odd shares. And if yes, what could be the target price on this one? Kush, what is the view on the charts?
He's looking for fresh entry, you said,
Fresh
right?
entry, yes.
Yeah, you know what? This has been on my radar. This has been on my radar precisely for this reason that, the fall from grace has been staggering to say the least, right? In the sense, 600, odd levels about, 2 years ago, now at about 200. But it seems like the selling is over. I'm seeing early signs of accumulation on this one. Positive divergences. Also, stock has consolidated and respected that 190 support zone for a long time. Just purely from that recovery angle and a massively favorable risk-reward ratio, I would say you can consider Jyoti Labs at these, at this price point. If, however, the support zones are broken, then you're better off exiting. So just be mindful of that as well. So yes, buy, at the current juncture, keep your stop losses at 185 strictly. On the way up, like I said, the risk-reward ratio is massively favorable. So about 235, even 260 kind of levels on the cards, once the recovery starts.
Got that view, and most certainly I think that partnership with Henkel not getting renewed took the sheen out of the stock, and hence back in focus now. But Rajesh, who's from Hyderabad, wants to now know between Sona BLW or Lumax Auto, what's a better pick to enter for the long term. Here again, Tapan, similar auto pack, right? It's gotten the EV beneficiary, but for Sona, the last 2 years has been stagnant until you saw the last 3 to 4 months and that up move. So do you feel that there's still a lot more to go now?
Yes, Sona BLW, this outlook is much positive now. If you see the export is quite going again, their margin stability is there. That is the best thing. Capacity expansion is there. Again, if you see the order book is quite healthy. And cash generation is also, cash flow is also okay. Compared to Lumax, of course, that is also doing good, but there is because raw material volatility, there is a pressure on the margins and all that. I think valuation is much more premium for Lumax. So I'll go for Sona BLW if he wants to go for a little bit longer.
All right. Okay. The next one that we have is coming in on Greaves Cotton. This is from Subabel, who's writing us from Tamil Nadu. Here she's got 24,000 shares, bought at the levels of 250, and wants to know whether to continue to hold this for the next 6 months or not. This the price has come down to 202, but Kush, your view on the charts, it's up 3% today.
My God, heavy quantity.
Yeah.
And at an elevated price, right? Okay, so from the near-term perspective, the stock's actually seen quite a bit of fall. The good thing is that the selling seems to be coming to an end. Also, even with this fall, the stock is still respecting the 200-day moving average, which is at 185. So I would say you can hold right now. It's approached oversold territories, and hence you could see some sort of rebound. But if 185 is broken, I'm afraid the dip could be deeper as well. So that's the first thing. Hold with a stop loss at 185. On the way up, look for targets of 225. And then again at about 240-45. May not see your buying price or profits at least anytime soon. So yeah, on the rebounds, you might want to keep exiting.
Got that view, but let's go across to Chennai now. Lakshmi dialing in for a stock related query. Lakshmi, very good morning. Welcome to the show. What's your query?
Very good morning to you, sir. Thanks for answering my query. So this is for Kushal sir. I would like to ask what is the best transformer stock to pick this time, and what is the price to enter, or what is the short term and long term view on that?
So you want
Taril or different anything?
Got it. So you have a couple of already. So Kush, which space to enter, and within that space, do you like anything?
Well, actually, this space has been fairly volatile to say the least, right? So I will actually, for now, stay out of it, because even Taril, which was starting to show, some kind of traction, is cooling off a little bit. So I would suggest wait up, somewhat. Even the other names, in this space are starting to see correction, but the recovery has not been as sharp. So I would suggest in this space, wait up for some more time. But yeah, keep Taril itself on your radar. I wouldn't suggest buying right now or getting into this space right now. The momentum or the follow through is missing. The fall has halted. That's a good sign.
Okay, all right. The next one that we have, I think it's time for a rapid fire round now. Tapan and Kush, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on Jio Finance. Our viewer wants to know from a long-term perspective, is it a good buy right now, Tapan?
Yeah, they can buy.
Kush, on PTC India, it's the next counter. Our viewer Somik has bought at 197. You had the results yesterday and that big dividend come through. Our view on the stock now?
Book partially, hold the rest with about 190 as your stop loss.
Okay, the next one is on Balu Forge. Dilip from Kolkata wants to know as to whether this is if this is a good counter to kind of enter into right now from a long-term perspective. Tapan?
Yeah, but on dips.
On dips, got it. The next one is between JK Tyre as well as Apollo. I think you have the results for Apollo today as well. But what's a better pick, Tapan, for the next 1 year?
I think JK Tyre.
Okay, the next one is on Irida. Vishwanatha Reddy has bought 500 shares at an average price of 179. Should he book his losses, continue to hold? Kush?
Yeah, you can book out. There isn't a recovery underway in this one.
The next one's on Canara Bank. Our viewer Sanjay is holding shares at 132. Wants to know if he can still continue to hold for the next 1 year, Tapan.
Yeah, please hold.
Karnataka Bank is the other one. Murli from Hyderabad has got 50 shares at the levels of 196. From a 1 to 2 year perspective, good hold. And what should be the target price, Tapan?
Yeah, currently hold maybe 15-20% growth may be there for me.
Got it. The next question is on Bandhan Bank. Our viewer wants to know if it's a good time to enter the stock right now. Horrid results, course guidance cuts as well. But on the charts, is that momentum similar or as we see in the fundamentals?
Yeah, absolutely. Avoid Bandhan.
All right, the next one that we have is on Bajaj Finance. What do you make of the results is what our viewer wants to know. But Tapan, overall, a long-term view?
Yeah, okay, but wait for the deep to enter.
Okay.
The next question coming in, and this one's on advanced enzymes. Jake from Kochi wants to enter this for the next 3 years. Tapan, any view?
Yeah, he can enter.
Okay, the next one is on BSC. What's your view on this on the charts? Kush, Ritik wants to know.
It's consolidating. You can enter right now. Keep your stop losses about 3300, 3350 levels.
Okay.
The next one is Lemon Tree Hotel. Our viewer Abdul Rashad, and he's paying attention because he's mentioning that the results are tomorrow. But is it a good time to enter, Tapan, before the results, and if not, what to watch out for?
The valuation is okay. I think if result is okay also, I think this is the level to enter. I think this may go up in future.
Okay, Engineers India is the other one. Our viewer Ashok Reddy has bought 600 shares at the levels of 200. Good time to book profits, Kush?
You could book partially. I mean, I don't see a reason why you should ideally. But if you want, you can book partially, but still continue holding on to the rest. 230 is your trailing stop loss.
Got it. The next one's on Sterlite Tech. Sumesh from Kerala wants to know if it's a good time to enter for the long term, Tapan. I think they got an order win today as well. But your view, is it elevated?
Yeah, too elevated. Wait for the dips.
Okay, the next one is on Sona BLW. I think we took a technical one on, I think the fundamental one on this one. Kush, on the charts, what would you recommend? Rajesh is asking this question.
Book profits, buy closer to 750 odd levels.
AKS is the next one. Rajesh from Delhi wants to know for the next 1 to 2 years if he can continue to hold. He's bought shares at 243, so close to the current market price. Tapan, what's your view?
Hold.
Okay, the next one is on Sterlite Tech. A 3 to 6 months view on this one. Raghuram Patra from Bhubaneswar wants to know. By the way, he's also asking about HFCL. Kush, what would you recommend?
No. Both of them. If you have, you should continue to hold with trailing stop losses. I wouldn't recommend a fresh entry.
Okay.
Also on GE Shipping, Kush, Dr. Lavanya has bought shares at 1560. Wants to know what's the target and a stop loss that she should watch out for.
Yeah, more of the stop loss right now, 1290. That's your stop loss. If the stock does recover, then you could actually look at 1480 and about 1590, 1600 levels on the rebound.
Okay, the next one is on MCX. This is for you, Kush, from slightly long term frame. Kunal wants to know if he can continue to hold the 10 shares that he's bought at the levels of 3204.
Yes, you can hold this. A deepish stop loss close to 2400.
Sameer from Gwalior actually is holding on to JK Cement, but at elevated levels. Tapan 7158 wants to know if what should he do? Should he hold, average down, or just sell out?
Sell on rise.
Tata Tech, Rajesh has bought 110 shares at the levels of 886. Short term view on this, Kush?
You can hold the stocks giving you a breakout. So I would say yes, hold. Keep a stop loss at 750, but yeah, sell closer to your buy price.
Marksons is the other counter for Kishore. And Kush, so he's mentioned that he bought 500 shares at 272 in February 2025. So he's been holding on for a while, and stocks come back to that level now. Should he continue to hold?
Yes, you should continue to hold. Breakout will happen above the 280, 285 mark, and the stop loss on this one 255.
255. Got it. Well, that was the last question of this edition of the Rapid Fire. But stay tuned. A lot more stock-related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं।
Welcome back. You're watching Ask Profit right here on NDTV Profit. Before we go ahead, let's take a quick check of how the markets are doing as well, because we've seen consistent moves, of course, since the morning, but absolutely flat at this point of time. Also pull up the Sensex as well. Big expiry day today. We spoke about it in the morning show as well as this one. So we are watching out for a 130-point uptick right now visible on this particular counter, and hence something to watch out for. Also look at the advance decline ratio, see how that is progressing through at this point of time, and steady state, at least the advances are having a good day today, and let's see if that momentum continues. But also pull up Metropolis Healthcare, came out with good set of earnings today by the company. Stocks not reacting too much, but there continues to be that strong growth momentum as well as guidance to increase margins to 27 to 28% in the near to medium term. But let's speak to the management and get some more perspective. C. Surendran, he is the managing director of Metropolis Healthcare, now joining in. Mr. Surendran, good morning, sir. Thanks so much for joining in. Always a pleasure. Just let me start off with, in this particular quarter, we have seen good growth come through both on the specialty side of things as well as your acquired entity. Talk us through how that margin progression comes through to start with to that 27 to 28% mark. Will specialty continue to lead that momentum over the next 2 to 3 years?
Well, good morning, Nathan. Good morning to all your viewers. Yeah, we have started off the year pretty well this time. Quarter one was a very good quarter. And the highlights of the quarter is that, it's a very broad-based performance. Both revenue and margins have done very, very well. And B2B and B2C has done well. True Health and Specialty have done well. All our 4 regions have done well. And also we could see that it's a tier 2, tier 3, tier 4, every other geographies have done well. So overall, I think it's a very broad-based performance. That's the first highlight I would like to share it with you. And the answer to your question on our margin projections, right? We have done some structural corrections in our cost management, in the last 4-5 quarters. And every time when we met, I kept sharing about it. And that's what is really now helping and started, coming into the P&L now. And also, we are also seeing good productivity improvement from our existing centers and our labs. And we have not added any labs in the last 5 quarters. So the lab additions have actually, halted for the time being. So more productivity is coming from all the labs that we have put in, and all the centers we put in has started doing well. Tier 2, Tier 3 expansion that we had in the last couple of years has started becoming productive and started getting more patient volume growth. So all this put together, the margin trajectory is looking very bright for us. So the next, 6 to 7 quarters, we would definitely like to see a 27-28% EBITDA margins coming up.
That's exactly my next question, Mr. Surendran, because, when I look back at the laboratory network in 2024, it was at around 199 labs. Has been consistent there, and last year you ended at almost 209. So for the last 4 years, you've had this network, but you will require that to expand to go to those targets that you mentioned. And if yes, how are you looking at opening up of these new laboratories? Will this be more in regions where you're not present, or how are you looking at the utilization of the existing ones too?
Good. So last 5 quarters, we have not added any new labs. I think as per our strategy, 90 labs were added, during the 3 years prior to that. And then our current effort is basically to make sure all these labs gets more productive. So the number of labs that we have today, 220 odd labs that we have today, is good enough for serving 750 towns of this country, right? So going deeper, getting more and more centers open in these towns, and also tying up with the smaller labs and hospitals in these towns is the next focus area. So, for example, we had a lab to center ratio of 1:20 about a year and a half back. Now it's at close to 1:25. We would like to take this lab to center ratio to 1:30 in the next 4-5 quarters. So that's where it's going to be the productivity and the growth is going to come from.
Okay.
Hi, sir. With regards to where your revenue growth goes, you've guided for revenue growth of around 14 to 15 odd percent. If I'm not wrong, you've said that near term you're not going to consider any price hike. So just want to get a breakdown as to how this revenue growth will come from, and is it going to be in terms of volumes and versus your mix? How is that going to improve?
Yeah. So 9 to 10% of the growth is going to come from the patient volume growth, and 5 to 6% will come from the realization. Now, realization, of course, will come on the back of the acceleration of True Health as well as the specialty portfolio. And patient volume growth will happen on the back of the expansion into the rural tier 2, tier 3 areas, and also further, stepping up the actions in the key towns as well. So a combination of all this is going to get us the growth of 14 to 15% during the medium term.
And specialty diagnostics is something that now contributes around 40%, right? Which you plan to take it over to 45%. Because, this entire space is getting very competitive. What are the growth plans looking like? And beyond that 45%, do you expect that this could, further go beyond that 45%? And if yes, what could be the levers?
See, Metropolis is a specialty company. This company was built on the back of a very strong science excellence and good quality reports and access to the clinicians, to our doctors to basically to discuss about the reports and decode it. So that's the strength. And, there are competition coming up. We are aware about it. But, the right to win here is only on the back of the good endorsement that you have from the doctors. Doctors will only prescribe your product when they are very confident about the company helping them to diagnose the diseases better. So I think Metropolis been a very strong right to win in this segment, and 40% currently. We are growing at around 17-18% year-on-year basis. We will further strengthen it. I mean, in the last couple of quarters, we have added genomics portfolio. We brought up the center of genomics for us in Gurgaon, and also with the acquisition of Core Diagnosis, we have added the oncology test capabilities. So specialty is going to be another big growth engine, and we really like to see this going upwards of 40% in the next few quarters.
As we wrap, Mr. Surendran, just a quick clarification, because you mentioned on your 9 to 10% volume growth for this year and your 14 to 15% growth that you're expecting in revenues. How is that split between B2B and B2C? Because we are seeing that the B2B growth in this quarter was much higher compared to the B2C growth. So how are you, managing that split as of now?
So B2B has grown by 15% and B2C has grown by 18%. So B2C definitely ahead of B2B. And the volumes are largely growing on the B2C segment. The B2C segment has got a 13.5% volume growth, and B2B has got about 6% volume growth. See, whatever volume growth that you get in B2B will be all specialty, because at the end of the day, we are picking up the sample from the smaller labs and hospitals, etc. So the volume growth of 6 to 7% from B2B segment is a very good, number. And so it's a mixed performance from both B2B and B2C that's going to happen in the quarters to come.
And just one last quick one in terms of your center expansion. If I'm not wrong, you've said that you remain open to bolt-on acquisitions as well. Can you give us more perspective as to what that plan is looking like in terms of acquisitions and even mergers possibly?
See, we have cash in our balance sheet, as you can see. Yeah, and we are always focused on good quality acquisition. We do a great amount of due diligence before we are acquiring any asset. But in terms of our criteria for acquisitions, Geography is one of the criteria. We would like to get good assets, good B2C, good quality assets in the northern part of the country or the eastern part of the country where we want to further expand. And the other criteria for our expansion is if any of the acquisition can add into the skill set, the technology or the test skill set that we already have it, we will go for those acquisitions. So we are on the hunt and we have a pipe available at this point of time. We are pursuing it.
Okay, so thank you so much for taking the time and all the best for the rest of FY27.
Thank you.
All right, so that was, of course, the management of Metropolis. But let's, start taking all your stock-related questions now. The next one that we have is on LIC. Our viewer, Pradeep Kumar, has bought 300 shares at the levels of 395. From a medium-term perspective, wants to know, let's try to pull up the charts. 395 is the buying price. Today it's trading at 388, though the OFS was overwhelmingly subscribed. But Kush, from a medium-term perspective, what do you make of the charts?
Yeah, so LIC has been an underperformer. The momentum obviously has been missing. If anything, it's been a downward momentum. So I remain a little cautious from, from let's say a medium-term perspective. But yeah, from a near-term perspective, because there's been a sharp gash in the stock and it's coming close to those long-term support zones of 370 to 380, there could be a rebound. That is likely. His buy price is also fairly attractive. So I would say you can continue to hold. Keep your stop loss at about 370, 375 levels.
Correct. Well, the next question is from Sundar from Madurai. He wants to know about Vedanta. And Tapan, if it's a good time to buy into these shares from the long term, you also actually now have a few options within that, Tapan. So is the main holding company the preferred pick, or within that do you like something?
Well, among the Vedanta companies, I think Vedanta Aluminum is the best one too, because there I think demand will be a secular one, and in future EV, data center and everything is coming. So Vedanta Aluminum is the one. I think one can go for it. But looking currently valuation, I think one can wait for a little bit longer, maybe 1 quarter more, because the prices are going down. So not now, but in future, I think Vedanta Aluminum he can look for in next 3-4 months.
Okay, all right. The next one that we have is between Kalyan Jewellers and Titan. Kumar from Chennai wants 8 months to 1 year view on both of these, whether he can go ahead and invest 50,000 in one of these. Kush, where is the chart looking more attractive? Is it Titan or is it Kalyan?
It's not even a question. It's not even a question for me. It's not even a question. You have to, if at all you have to invest, you invest in Titan. Right now, slightly elevated, so maybe closer to about 4,700, 4,800. You can consider buying. But yeah, if you're looking for that kind of time frame, Titan's significantly better placed. On the way down, stop loss is close to the 46.50 mark.
Also, question on Maruti Suzuki as well. Jay Krishnan, who's from Kerala, wants to know a 6-month view on this counter, and there are bouts, right, for this counter where it comes through. We saw that just a few days ago where it crossed that 14,000 mark, now around that again. But what's a 6-month view also if you have a longer one as well? Because we've corrected from that 16,000, 17,000 mark, but what's your view?
You guys know, right? You can ask me questions off air also. You're asking me FMCG, you're asking me auto.
We are not asking, our viewers are asking.
I mean, through your viewers, right? I hope it's the viewers and not you, right? No, of course it's the viewers. I'm just kidding. I don't like Maruti for precisely that reason, Puneet. It's got fits and starts, it's got the momentum, but it fizzles out and you see selling pressure on it. 200-day moving average भी touch नहीं किया. March, Feb में जो 200-day moving average छोड़ा था, right now that stands at 14,600. It's not even coming close to that, or maybe occasionally once or twice it does, but not even hitting that mark. So I have my near-term concerns on Maruti. If you ask me, I prefer M&M over that. We've given calls also on that about 2 weeks ago or so. Second target's been hit. The recovery is rather interesting on this one. So if I had to pick, I would still pick Mahindra & Mahindra. Maybe again on declines close to the 3350 mark, but Maruti maybe above 14,600 we'll see, not now.
All right, okay, so that's the view coming in on Maruti. The next one that we have is coming in from Ray, who's writing us from Bengaluru, asking about Precall. He's bought it at the levels of 633. From a medium-term perspective, and he's holding 100 shares, by the way. He wants to know whether he can continue to hold this one, book profits, or still ride the momentum is the question. Tapan, what would you recommend?
Well, if you see for this company, hopefully export growth will be there and a few launches are coming. So that we have to see how the realization will be there. Of course, competition on a higher side, but capacity expansion and the main thing is how they are going to execute. Overall, auto ancillary beneficiary will be there. So currently at this level, I think he can hold the stock.
That the big demerger also coming through on pre-call and precisely that, my co-anchor can also take auto questions, so it's, that's okay. But the next one coming through, and this one's on Keystone Realtors. Our viewer Manohar Kher from Mumbai wants to know about this particular counter, Tapan Holdings, shares at 600 and he's holding 60 shares. What's your outlook, Tapan, on this one? He's currently sitting on losses. Should he average down, continue to hold?
No, don't average down. No, if you see, of course, the valuation is still on the premium side, and project approval risk is there for this company. Again, high capex needed. And we can see the luxury housing demand is strong, but still, I think company has to get new, you can say, customer and collection. Hopefully, should improve over the time. But so at this level, I think just hold the stock, don't add. But you can wait for next quarter also and just see, then you can take a decision.
Okay, all right. The next one is on Morpen Labs. Our viewer has the buying price is 94.5 thousand shares is what I think this is from Senorita, and she's been holding this and wants to know whether she can continue to hold. She's saying that last time when she gotten this, the price was at 70. And wants to know if it can further see an upside from here on. Kush, what is it that you recommend on the charts?
What a lovely name.
Yeah.
What a lovely name, right? Senorita. The buy price is 94?
No. Yeah, the buy price is 94.
Buy price is 94.
Yeah,
okay, fair. So I think that we know for the last 3 sessions, the stocks had a massive run, right? And still not reached your price. The momentum is there. Of course, it's starting to get overheated now. So my suggestion would be, hold this with a trailing stop loss, because if this momentum continues, you might actually see, your buy price or at least significantly closer to that. Does it have legs to go beyond that? I have my doubts, because major resistance is at 88, 94, 96 levels. So around your buy price, there are resistance levels. So my suggestion would be, with a stop loss at about 77, 78, hold right now. As it approaches your buy price, you might want to start offloading gradually in this one.
Got it. Well, the next one's on Sharda Motors, and our viewer has been holding these shares at 1,071, and this is Senthil from Tamil Nadu. Tapan, his question being, he's currently sitting on loss and has been holding for a while. What should the strategy be for him to do now?
See, for this company, of course, there is a lot of volatility is there, but hopefully, if you see BS4 demand should be strong from here, and the new product additions are there for this company. Of course, now you can see the competition is there, but there are new launches. They are going to come. EV components also for them is scaling up. Order pipeline is healthy overall. Cash flow remains robust. So at this level, I think it's better to hold only, wait for one more quarter. I think things should move up. Overall valuations are okay.
All right, so that's the view on Sharda Motors. I think the next question is from Harjeet, who's writing us from Mohali. He's got HAL 330 shares that he bought at the levels of 1343. So a very attractive price that he's bought at. He's sitting on a profit of over 11 lakh rupees and wants to know if this is the time to book partial profits. He's waited for 4 years patiently. Tapan, do you think he should book partial profits or should he continue to hold?
I think for long term, I think HA will do well. Of course, the execution is a problem for this company. Very slow execution. But looking at the order book and the company is working on it, I think things will settle down in next few quarters. So please hold at this level, as is a long term player. And again, congratulations to him. But I think this will do well over the time.
The big massive move that we've seen just in the last 1 month. Hopefully, Q1 gets some update on those pending orders. But HBL Engineering, Kosh, is the next one. Prashant has been holding this counter at 730. He's holding 500 shares. So close to the current market price. What should he do? What's your view on the counter?
Rather mixed, I would say. and there has been range contraction on this one, and typically what happens is after a period of contraction, you get a range expansion, could be on the upside, on the downside. Right now the way things are shaping up, there's a possibility that it could be on the upside, and plus your buy price is fairly close to the current market price. So I would suggest, with that probability in mind and with the kind of recovery that the stock has shown from 695 odd levels, you should continue to hold. Keep that as your stop loss. On the upside, targets of 775 and then about 800 plus. So yeah, for now you can continue to hold HBL Engineering.
All right, okay. The next one that we have is coming on GE Shipping. Ram from Hyderabad is holding 260 shares, bought at the levels of 1560. Wants to know if he can continue to hold this one or book losses. Tapan?
No, hold. No, because if you see the last few months, in last few quarters, things are settling down. Of course, still the revenue profitability is not going up, but I think there are many things happening for this company. Again, fleet modernization will be happening. Again, offshore business is improving. Energy demand is supportive for this company. So yes, my take is currently hold and just wait for a little bit longer.
Got it. Well, the next one that's coming through, it's on IKS. Our viewer has been holding shares at 1695. We also had the management today come through, Tapan, and some bold EBITDA projection targets that they have. Stocks down almost 5.5% today. What's your view, Tapan? Is it a good long-term bet?
We're currently at this level, no. I'll wait for a little bit more clarity on this. Again, there is some integration execution risk is there. Again, volatility is also there. We have to see how the things will be setting on the margin front also. Of course, it's a asset-light model, but I'll wait for a little bit longer, then only enter.
All right, okay. So that's the view on IKS, but I think we've got Yogesh calling us from Jaipur. Yogesh, a very good morning to you. Go ahead, ask your question.
Good morning, Mahima. My query is kuch bora, Kamagani.
Okay, now I know. Okay, Yogesh always calls us on Thursday. Go ahead.
4,000 shares I have by PNB. Today is a 114 price. What I do for that? I had already 10,000 shares in my side. This is a new purchase for May 2026. What I do for that?
Okay, okay, got your question. I'll take this up with Kush. Kush, good profits he's sitting at. Should he book out? Continue to hold?
Wow, and decent quantity as well,
yes.
right? First up, Kamagani Yogesh, good moves on this one. अच्छा रिकवरी दे रहा है. थोड़ा सा आपको शायद वेट करना पड़ेगा. 116 के आसपास ना रेजिस्टेंस है जो पिछले 5-6 महीने से ब्रेक नहीं हुआ है. 116 के ऊपर जब जाएगा तो यहाँ पे मोमेंटम मुझे लग रहा है बहुत तेजी से आ सकता है इसमें. तो कोई ऐसा इशू नहीं है. यू कैन वेरी वेल कंटिन्यू टू होल्ड दिस. स्लाइटली डीपिश स्टॉप लॉस एट अबाउट 105, 107, बट या दिस इज सेटिंग अप वेल, अ स्टेडी अप मूव ऑन दिस वन. सो कंटिन्यू टू होल्ड PNB.
Got that view. Hopefully, Yogesh, that answers your question. But let's now start the rapid fire round in this edition of the show. Kush as well as Tapan know the drill. First one's coming from Shruti, who's from Bengaluru on Bansal Wire. Tapan, she's sitting on a 15% loss. Wants to know her holding price being 390. What should he do with this counter now?
No, it will sell on rise from my side.
Okay. The next one that we have is on Eternal. Shrikant from Hyderabad has bought it at the levels of 69 and he's been holding it since then. He says that he's a long-term investor and he wants to remain invested for the next 5 odd years. Tapan, what would you recommend?
First of all, congratulations to him. Of course, hold.
The next one coming through and it's on Power Grid, but the InvIT. Our viewer is holding shares at 115, stocks down right now. I think it's the InvIT one which I'm talking about. But Tapan, should he continue to hold?
Yeah, hold.
Okay, the next one is from Raghavendra, who's writing us from Bengaluru, asking about Thangamayil. Kush, this question is for you. Found its bottom, right time to buy?
Yeah, not surprised. I was in fact waiting for this one. Bottom formation, perhaps in place. Do you go out and buy an average? No. Wait up.
Got it. The next one's on Avari Renewables. Our viewers holding shares at 1100 rupees per share. So currently sitting on a loss. Wants to know if he should book out, Tapan, or still continue to hold.
I am not too much bullish on Vari, so it will be sell on rising.
Okay, the next one is on Bank of Maharashtra. This is from Krishna, who's writing us from Chennai. Bought at the levels of 64. Continue to hold, sell, Kush.
Oh yes, continue to hold. Stop loss around 73, 74 kind of levels, consolidating, hold.
Kush, between Hitachi Energy as well as Bosch, I mean, both global names for different segments. Rakesh Gupta from Delhi wants to know which one is better, You also have the results coming through for Bosch on the 10th. What's your view?
Technically, Bosch is better placed and on the verge of a breakout. So this 4200, 42,200 is the zone. If it closes above that, you could see further upswing on this one.
Okay, the next one is on Amara Raja. Rohan has bought it at the levels of 865. Wants to know if he can wait for the next 6 months. Kush, on the charts?
Absolutely. In fact, the recovery is underway. Continue to hold. Stop loss at about 900.
The next one's on Birlasoft. Madhu Babu from Hyderabad has been holding. Wants to know if it's a good time to enter, Kush, for the next 6 months. Been very beaten down. Good time to buy?
It's not a good setup in the IT space, which is already underway. So I would say for now, avoid.
Okay, the next one is on Bellrise. Anand from Goa wants to know if this is the right time to enter for the next 5 years. Tapan, any view?
Buy on dips.
Buy on dips, got it. The next one coming through, it's from Ronak on Wipro holding shares at 200. Tapan, should he exit or should he continue to hold? What's your view?
Exit.
Bata is the other one on which Jaswant Singh wants to know. He's got 365 shares at the levels of 1156. Long-term view on this, Tapan?
Sell.
Next one's on Restaurant Brands Asia. Our viewer holding shares at 75 and has been holding for the last 2 years. So it's come back Tapan after a really long time. Wants to know if you should still continue to hold for the next 3 to 5 years.
No, maybe around 100 start getting more.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Thank you so much, Tapan, as well as Kush, for helping us solve 56 queries that we have, along with 2 management chunks. So it's a good number to come through, but out of time on this edition of the show. Thank you so much for watching, viewers. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies and also interestingly companies which are not tracked by the analysts and to see whether there is an alpha to be made or not. And today is a very interesting company I've got for you. But before that, try to guess it. It manufactures power electric components. Also, the second hint I would like to give you, and that is Mukul Agarwal, ace investor in Dalal Street, has 1.41% stake in the company. Yes, the list is narrowing down. Also, the stock is up 17 times in last 5 years. What a multi-bagger journey this has been. And last one, Q1 earnings is expected to come on August 11. A little bit of branding exercise has also happened and DI's FIs have increased their stake recently as well. I'm sure you're trying to guess the company, but of course the company in focus is Hirect. Earlier this was known as Hind Rectifiers. This is the new company. There's a little bit of branding change also, but why is this company in focus right now? The key questions we'll be asking to the management will be the recent award wins. You know, Vande Bharat theme is there and then new segments they are entering. We'll try to understand that. And not only that, US orders are also coming a lot, especially the demand order inquiries. How is the international outlook looking like? There is a story of forward and backward integration as well. But before that, we'll understand what's the business model and moat about them. This is the first time company is coming in KYC at NDTV Profit, and this is the story. Is it both sides? If yes, there's an R&D angle to it. We'll try to understand this, if they are going into a full-fledged ecosystem or not. The capex and expansion plans, that's very much important for the company, and the way industry is having the tailwinds, that shows a good momentum as well. And of course, the basic questions we'll be asking. We'll try to avoid most of the numbers because a lot of numbers in Q1 is going to come in a couple of days, but nevertheless, the B2G angle is also there, especially with their exposure to railways. So we'll try to get that clarity as well, the export growth and how many expansions are taking place in this segment. Of course, the management will be with us where they will give us their entire views. But let's try to understand the company. What does the company actually do? Hirect, or formerly known as Hind Rectifiers. This is the company we start with, but this company is quite old. The establishment was there, you could say, in the year 1958. That means almost, you could say, 65 years plus of history is there. Moving on, let's understand more a little bit about the history. It was established in a partnership with Westinghouse Brake and Signal from UK. So the roots are pretty old and having foreign exposure. They manufacture power electric components, to simplify it, but as you go in deep into it, you'll understand which industries and where the application happens. These are the products: transformers, rectifiers, control electrics and power converters. This is like an ecosystem of this segment. Of course, inverters, motors and HVAC system also comes in. But where are these products applied? That's also very much important. There are traditional places like railways, defense, but new age spaces are also there. Power, hydrogen, that's where the market might be giving a very premium valuation to this counter. Chemical, paper is also there, but these are largely commoditized. Interesting story, right? Let's go deep into it. This company is backed by ace investor Mukul Agarwal. Almost 1.4% stake he's having in this company, and this quarter itself DIs have increased. I'm going to give you those numbers, but you have to wait with me. The company has two manufacturing plants. One is located in Nashik, another in Bhandup. Both of them are in Maharashtra. Also, they export to over 30 countries. You know, they have offices in Sweden and UAE as well. Some recent filings suggest they have. Of course, speaking about, their growth strategy, let's talk about the next important point, and that is the recent orders, spate of orders are coming for the last 7 to 10 days. IGBT converters for the mining industry. This is from US. Second order win. Let's have a look at what the company is doing. This is the first order from Memu Trains. MEMU for this is type of a wagon, and this is the entry into the next gen rail systems. Remember, they have secured the first order on traction motor assemblies as well. So this is what we could see, a different order wins are coming in different sectors. Also, the first Vande Metro development order also the company is getting. So the company is going through verticalization as well as horizontal movement in terms of the product segment. Maintenance electric multiple unit, I'm sure earlier MEMU which was there, or MEMU, this is the full form for the uninitiated, but nevertheless important order wins coming in for Hirect. But how does the order book look like for Hirect? It's rail. So if you add all these three up, of course the majority of them come in the railway segment, but there is of course spares and industrial products also where the company is having exposure. Moving on from the order book mix, let's see what else is there for Hirect. When we talk about the overall about the company, the key clients, look at that. We have Indian Railways, Tata Group, Reliance. Also, let's look at the other set of clients. This includes IFCO, Siemens, NTPC. So fair share of government, private players and MNCs are there for Hirect, and that is actually good. The diversification risk come down. But how is the India's rail sector looking like? The demand for total number of locomotives expected to 3x by 2031. Let's look at the second important point, and that is the adoption of regenerative braking, HVAC. Of course, this is the energy efficient part I'm talking about, and the power converters as well. So a lot of usages coming in. Electrical equipment market, that's expected to be valued at almost $90 billion. You can imagine how big this market is, and we have largely or hardly we have penetrated the actual surface. Also, high-speed rail push, that's also where the government is there. But of course, whenever there's a government push, there's also the B2G risk. But I'll explain you that in a short while. Stay tuned with us. But moving on from the rail sector, what may work for the company? The DIs and FIs have been increasing their stake recently, and smart money is moving in this counter. Second reason is the revenue visibility of orders that is showing strength in the company. Third important or a positive point I liked was Q1 is expected to come with strong numbers. This is what analysts are factoring in. Very few of them though. The global expansion and the backward integration, when both of these things are playing out, then a lot of benefit starts coming in for the company. This also includes operating leverages. Strong return ratios and the cash flows is something which I liked, and they have been growing it over the last 3 to 4 years. It's a good trend. But what may not work? The valuations are not attractive. Stock is near its highest levels. The lack of analyst coverage is there. That's where a little bit of concern comes for me. And the profit booking likely may come at these levels even if the numbers are strong in the Q1. The global macro risks are definitely is going to be there, but there's another angle to it also. That's the B2G risk which I'm talking about, especially on the receivables, and at times lumpiness comes in the earnings. So this is the entire picture for Hirect, but let's understand the KYC ratings which we get in a company in our analysis. This includes the income statement, balance sheet, cash flows, and of course I'm going to get to the return ratios, which includes both ROC as well as ROE. Over a short period, long period, we are going to see how shareholding and the street cred has evolved. And the valuation part, if we talk about it, we'll compare that over the 5-year period. And last but not the least, the most important rating to track is the future. That is the outlook. So that's what we'll be focusing on. But let's talk about the first rating parameter, how things have changed. Largely income statement, you see the revenue that has almost gone up by, you could say, 80 to 90% in the last 3 years. The CAGR numbers are good, almost touching the 1,000 crore part in the revenue, and largely the PAT numbers have been a decent as well when it comes to growth, but not major moves coming in. And of course the margins front, there is a little bit of variability here. It was 8.7 in FY25, it went to 10.8%, then minor correction coming in 8.5%. So net the income statement as of now is neutral because margins are a little bit mixed. Let's move on to balance sheet and see what's happening here. Is there a story at play? Largely, we see the borrowings has gone up, but remember the company is undergoing capex and expansion, but it's decently managed right now. There's no major concern. If you look at the debt to equity ratio for a company in this industry, it's roughly at 1, so that is manageable. So if it is manageable, I'm going to give this a neutral rating as well. We spoke about income statement, we spoke about balance sheet, but the magic is in the cash flows. That is where we are seeing whether it's lumpiness or not. This is a very strong cash flow coming in if you compare that with FY25 or even if you compare that with FY24. Looking at the conversion also, that's also where I feel alpha is there, especially on this cash flow conversion. So definitely the cash flow has been, you could say, the king over the last 3 ratings which we are discussing. So I'm going to give this a thumbs up as well. Return ratios, let's talk about that, and this is where I had stated that company has been doing well. These numbers, of course, you look at it before FY25, they were near that sub 20 mark, but then they have been increasing, and look at that, from 26 it has touched the 30% mark for ROA. ROC also the story remains same, a good jump coming in from the levels, almost 24%, and a business like this having almost 20% plus ROC and ROE is definitely very positive. So I'm going to give the return ratios a strong thumbs up. Shareholding is important. No major change happening in the promoter quota, but ace investor Mukul Agarwal has 1.41% stake in the company. But look at it, DIs were literally no exposure in FY24, but suddenly in a matter of just 3 months, this is where the magic has happened. DIs have taken position, 3% stake here, and FIs have minor increase in their holdings. Interestingly, smart money has started flowing in even after the March numbers. That means the June quarter numbers also, there might be some positive momentum. So yes, of course, this is the June quarter and the most recent numbers. So shareholding, I'm going to give this a thumbs up as well. But let's talk about street cred. What's happening here? How much numbers have come in? What's the stock momentum looking like? And then of course we'll talk about valuations also. If you could just show us the street cred from Jan lows, the stock has already doubled 2.3 times, but the magic is not there. If you are a long-term shareholder, it's a multi-bagger for you. Last 5 years the stock has returned 17 times. Can you imagine? That's the multi-bagger impact has come in the small and mid caps, and these are the companies we get you first ahead of everyone at KYC, so that you understand what's the story. Be it 1 year, 2026, a good momentum has been there. So all around everybody has made money in this counter. So I'm going to give this a strong thumbs up as well when it comes to street cred. Always remember, when the stock has run up, the valuations get very questionable, and that's what has happened here. 5-year peak, it's a 210 12-month trailing P ratio. Can you imagine how expensive it is? Compare that with the current numbers, that's also in triple digit, almost you could say 100 times, and the 5-year current average levels, that is at 82 times. That means almost 20 to 25% premium the stock is trading from its long-term average multiple. So right now valuations are not good. I had mentioned you profit booking also might come in this counter. So as of now, I'm going to give this a thumbs down when it comes to the valuations front. But let's talk about the outlook. What's the story looking like? And largely strong order flow is expected. I mentioned about the revenue visibility. Second important point, let's talk about the outlook, and this is the global expansion initiatives. There is a lot of order flows coming in the US, so we'll be looking for those announcements as well as asking the management about the story. The indigenous propulsion system development program, how helpful it is it forward integration or backward integration? We'll get that clarity. And manufacturing footprint increase in the European markets as well. Some offices and warehouses are made there as well, and the backward integration coming in for the C2C copper conductor facility, and if that happens, operational leverages does kick in. So this is the entire outlook picture, and I really liked it. So I'm going to give this a thumbs up as well. But let's revise all the ratings which we have given for Hirect, and where does this company stand? Largely income statement, balance sheet is neutral, but cash flows and return ratios have been really good for the company. And looking at the shareholding in street cred, smart money is lapping up. The stock is at its highest levels, but because of that the valuations are not attractive. And the outlook, however, medium term, long term remains strong, and we'll be looking on August 11 for the earnings as well. The total KYC rating comes to 6 out of 8. It's largely on the positive side from our average generally which we give to the company. So yes, good set of numbers coming in. But let's also understand the management cred. We have Suramya Nevatia. He's the chairman and MD of the company, and little tidbit about him is he's a 4th generation industrialist and the entrepreneur, and also he has joined this company in I think 2015. He is appointed as the CEO as well, and largely he enjoys playing pickleball and adventure sports. So we'll have a conversation on that as well. But Suramya, it's always a pleasure to have you with us. Good afternoon, and a 2nd gen entrepreneur, or 4th gen in your case. It's always a pleasure to have a chat with you. But a lot of order flows are being announced here. The first from Vande Bharat and all this. Can you just explain us what are these orders like, and by when these orders will materialize?
Sure. So firstly, thank you for having me. It's great to be invited here. Talking about the orders, yes, we have received orders for Vande Metro. It is the complete electrics, including the propulsion system for the entire Vande Metro train. This is the first ever tender floated by Indian Railways for this new design of Vande Metro, and we are truly privileged to be included in that vendor for getting the order. We've already disclosed this, so the order is valued at 60 crores. And we expect to have the product ready in about 10 to 12 months, after which we will do the testing and the field trials. So that is the outlook for Vande Metro. The second one was the MEMU, which is basically the main line electric multiple units. We have received an order for that also for 60 crores. That includes 4 different sets of the MEMU. And that is also for the entire propulsion and the full electrics. So this marks a really big step forward for us because we've been mainly working in locomotive segment, and this this breaks through into a new segment which is globally attractive. So we are really looking forward to this, and the same timeline, about 10 to 12 months for the product readiness, after which we will do the testing and the field trials.
Now, Suramya, you spoke about globally, and that's where my interest came on your US orders also. A lot of first order announcements have started coming in. So I'm wondering, what are these, important order outlook? You don't need to speak about these orders, but how's this outlook looking like from US, and the demand inquiries? Are they picking up?
Yes, actually, the US rail network is bigger than the Indian rail network. They are still very much traditional. It's not really electric, it's diesel. We've been working for the last 6-7 months to get a breakthrough, and now we've received breakthrough prototype orders for traction motor assemblies and the IGBT converter. The traction motor assemblies, of course, is for rail, and this is just the starting point. I mean, the opportunity is significant, unrealistic, to be honest. And the second order that we have is IGBT converter, but for mining and not for rail, because we have been endeavoring to diversify and spread our risk and not just be fully dependent on rail. So it's a new application, a new industry, but also a new geography. And that's what we've been working towards. And finally, we've received these breakthroughs. Again, even for the mining, the segment is huge. And we expect to deliver these orders very quickly. Perhaps within 6 to 8 months, and then we expect the floodgates to open for this.
Fair enough. Now let's talk a little bit about your industry also. How is your business model fitting in the industry, and what's your actual moat? Because a lot of viewers are seeing your company for the first time, and so we wanted to understand, if you had to explain us in a very simple manner, what's your business and what's your moat?
Sure. So we are a power electronics company. We basically work with private industries and rail, more towards mobility and rail side. And power electronics basically means IGBT related converters, inverters, high power, so different kinds of systems that make the train move, and the associate products with it, such as traction motors and transformers, HVAC systems. Our moat is that we control the technology. Everything that we deliver is designed by us in-house. We don't have technology partnerships. We don't have any tie-up with any foreign company. We don't owe anybody any royalty. We don't owe any mandatory import of electronics. And when the government or when the railway decides that we want to move from, let's say, specification 5 to specification 6, we can do it pretty much very quickly because all the technology is in our control. So up until now, we have been a manufacturing company, but now we have transitioned to being a technology company with manufacturing expertise. So that's the competitive advantage that we have, and that is the USP that we bring.
Put, Suramya, but let's get to a deeper into it. There is a forward integration happening. There is a backward integration happening. What is this? And any kind of future plans, we can expect more on either sides?
Yes. So we are continuously either backward or forward integrating. We've done the copper backward integration because it was very challenging for us to keep procuring CTC copper conductors. There is a shortage for this segment because the transformer industry is booming, and copper conductors became a shortage. Now that was affecting our traction transformer supplies to the railways. We had to import copper from outside of India, and that was making it very expensive. So we took a decision to bring it in-house to help us control the supply chain, the quality, and the cost. That's just one example. We've done a bunch of different backward integrations, even on the electronic side. And coming to the forward integration, the train sets orders that we have received is a natural forward integration step because all the products that we make, all these a la carte pieces that we have now gets integrated into one big direct system. So that is forward integration that we are doing. And yes, we will keep doing it continuously, whether it's backward or forward. We will keep looking at the problems that we are facing and how to overcome them by vertically integrating. So yes.
Right. Ramya, I want to understand the capex and the expansion numbers in the long-term basis. Are there any numbers which we should be tracking?
Yes. So as you know, we're in the silent period now, but I can tell you what is publicly available.
Yes.
That about 50 CR of capex is what we have planned, and that's what we are looking at. Our infrastructure currently is capable to accommodate our growth for the next 1 or 2 years, but then we will be looking at expansions in manufacturing capability as well.
Fair enough, and this is enough which we can get in the silent period, and we respect that. But let's try to understand the client demand trends and the confidence, Ramya, how things actually pan out. Right. So I just wanted to understand that the client demand trends and the overall confidence, going ahead.
No, of course. So there is continuous demand from railways. We have done the electrification of the entire Indian railway network. Almost 99.6% is now electrified. And now they're bringing out the electric locomotives. They're trying to increase the different SKUs of trains. So currently it is 1,500 electric locomotives every year that Railways is building. Going forward, they're going to gradually start reducing the electric locomotives and start increasing the different trains, like your Vande Metro, Vande Bharat, all different these SKUs of Vande Bharat that they have. Electric locos primarily will be used for freight and goods. And then for the passengers, I think it will move more towards these futuristic modern trains, which will provide more comfort. So demand exists. In fact, it's growing. And we don't see any change in that happening anytime soon.
So demand and revenue visibility is strong. That's what the management is talking about. So Ramya, I want to understand the B2G risk also, because in your business there is a government exposure also. At times receivables get delayed or the payment cycles get impacted. But interestingly, your cash flow has done really well, at least for FY26 and the Q4 numbers. How do you mitigate this B2G risk? Could you just explain us?
Sure. So firstly, coming to the cash flow side, I think that's a misapprehension. From Indian Railways, at least, there is absolutely no issues regarding payment. The payments do come on time because the ticket size of our billing is so huge that if they don't pay vendors on time, how will vendors, maintain their cash flow and build for the next month's production? So the payments do come on time. And yes, there is a risk attached to having just one big customer. So for that reason, we've started taking these steps of getting into different segments, such as mining. We are trying to get breakthroughs in India as well, but somehow, fortunately, we were able to get a breakthrough in US before India. I think that credential will help us to enter India in a stronger way once we supply that. And we are continuously looking to diversify that risk. But having said that, we know for a fact that the growth rate of rail is so tremendous that even if you do diversification into other segments, it will not catch up. But yes, there will at least be some sort of balance between rail and non-rail, or government and non-government.
Enough, but the export growth for the European markets, we spoke about the US markets, we spoke about the Indian markets, but the Europe markets, what's your strategy there for growth? Is there some kind of an acquisition, but it's clearly not in your DNA for these acquisitions because you do everything in-house to simplify it. So I wanted to understand, there's a warehouse. How do you plan this Europe strategy?
So in Europe, actually, we acquired a company last year. It is into electronics, robotics, and printed electronics. For Europe, we are looking at more on the industrial side of things, such as maybe data centers, maybe something in the defense side, maybe something in renewable energy side. Maybe not so much on rail, because Europe, to a certain extent, is saturated towards the rail front, and there are way too many established players in Europe any which ways. But it's more towards industrial and more private segment that we can cater to in Europe, or even as tier 2 for the rail segment.
Right. And so, Ramya, one more question, a short one. New product lines, which you are looking at. You spoke about these new age sectors also, but any other product lines around this new age, if you could explain us, should be a bit easier, simple, not so technical if possible.
So we are continuously developing new products. We have 42 products in R&D at the moment, but they're all around power electronics. We don't want to, sort of navigate away from our core, because we really understand this. So within power electronics, we'll keep developing newer products for different applications, different ratings. We are looking at a whole bunch of things, and we'll keep doing that R&D.
Right, so Ramya, it's always a pleasure to have you with us, and of course, best of luck for your Q1 earnings, which is coming on August 11. It's always a pleasure to have the next generation leaders holding the mantle for their companies. So thank you very much.
Thank you, Sharad. Thanks a lot. Pleasure to be here. Thank you.
Yes. So that's the management of Hirect, formerly known as Hind Rectifier, stock at all-time high levels, and at a pivot, you could say that company is moving towards new age sectors. Interesting story, right? So for all these interesting stories, stay tuned to NDTV Profit and keep watching KYC weekdays at 11:30 a.m.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल।
बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV
Good afternoon, you're watching Markets at 12 with me, Shreyanshi Singh. This is the show that we get you updates on the top buzzers at and news updates, of course, at noon. But first things first, a quick look at how the markets are faring right now. And when you talk about the Nifty 50, you've seen some bit of volatility really come in. When you talk about Nifty 50 as well, even when you talk about Sensex as well, that's a little bit of volatility that you're really seeing coming in. Still holding on to those 260 odd point gains as well, that Sensex for you at this hour as well. Let's also quickly pull up the sectoral indices and take a look at what they're up to, because largely it's looking like a mixed sectoral picture right now. So when you talk about something like auto, media, metal, realty, as well as rural, some of those sectors holding on to a tinge of red at the moment. What's doing resiliently for itself is India Defence or even oil and gas, pharma, PSU banks, some of those sectors that are doing quite well for themselves. Let's also quickly take a look at the Nifty 50 top losers and gainers as well. In terms of the picture that you've got there, of course, from the broader universe, there's a whole bunch of stocks, the likes of Tenneco Clean, or something like a Saregama India that are holding on to some bit of, losses also coming in. Naveen Fluorine, that's doing quite good for itself right now. And something like a Newland Labs on the back of its earnings, also 10% odd uptick also coming in there. Even the defense pack very much in focus as well. So it's HAL that's doing quite well for itself. When you talk about the list of top losers and gainers from within the Nifty 50, it's actually something like a Reliance, which is doing quite well for itself. Look at that 3% gain coming in. And when you talk about some of the benchmarks, they're holding up quite well, which is why you're seeing that bit of resilience really come in when you talk about markets. But let's also decode this further. Getting Feroz Aziz, joint CEO, Anand Rathi, well, to explain all of this in terms of what to be expecting in trade today as well going forward. And Feroz, first things first, a very good afternoon. Just wanted to kick off the conversation by starting the chat with the curious case of CAS as well, and the way that you've seen that really unfold for the markets. The last few minutes, to say the least, are quite volatile as well. How are you looking at that, and do you also see that settling in eventually as the market also gets used to it?
Good afternoon, Shreyanshi. I'm very, very happy and positive about it. Because what I, as a derivative treasury person for the last couple of decades, I've been mentioning this, maybe in your channel, I would have mentioned to Alex a couple of times. The derivative cash market had become the derivative of derivative. Derivative derives its word because the value of a derivative depends on the cash market, is why it's called derivative. Unfortunately, हो क्या रहा था कि cash market was deriving a price from derivative. So that's why you see an attempt to make sure that the manipulation reduces. Now, is this the first attempt? I'm very happy that the regulator is doing an attempt. When you see to naked eye, several transactions which were brushed aside saying it was a fat finger. So I read that, okay, itna loss kar diya, it was a fat finger, it was an erroneous trade. Those were not erroneous trades. Those were intentional losses created in the cash market so that a person can make 5 times more the money in the derivative market. If I want to lose 100 crores in cash market, and if I build position such that I make 500 crores in the derivative market, that's what was happening. And we were just calling it fat finger and saying that koi dealer ne by mistake apna loss kar liya. Nahi, loss profit ke liye kiya tha. So is the regulator agile, vigilant, is doing an attempt? In the first 3 days, will you get super normal output of a new attempt, an innovative attempt? The answer is no. I'm very happy with the intent, and I don't think people are being as positive as you should be, because intent is more important than the 2-3 days of its efficiency and the market. And you are seeing arbitrage funds giving supernormal return for 2-3 days, and people are making reel after reels, and the return aa gayi, wo wapas bhi chali jayegi jab futures and cash market have to converge on an expiry.
No, absolutely, and that intent is right. Some bit of teething pains that you're seeing right now come in with the efficiency. That's the word coming in there. But, just also wanted to try and get a sense of what you think about what's been happening with oil prices, and whether or not market is actually, do you think that market has completely sort of digested that as well? It's growing a little more, resilient in terms of those oil price fluctuations. That bit of screen is not being monitored closely enough, or do you think that it's just some of those range bound levels, and once once it breaks out of this range, you'll see that story completely change and unfold in the ways that we've seen it unfold previously for oil prices?
The oil prices are one of the easier things to predict. And those have to be predicted on the long variable, which is the right variable. People predict where will oil go. It doesn't matter to a country where oil will go. What will be the mean price for the financial year? What will be the median price for the financial year? That's the projection people need to do, because you're not going to buy all the oil you need at the peak value or the trough value. A country is going to import oil, which is our largest import, is oil, right? So I'm going to be importing it in a staggered fashion. So what's the mean? What is the median? Currently, the mean is 91. And our expectation is that the mean will be 85 for this financial year. And this I had said when oil had touched 120, because oil is not a scarce commodity. If there is a supply shock, the supply shock always corrects itself. If you look at in the last 50 years, there have been 14 times oil rose 50%. It came back down 12 times out of 14 times. Every time there is a supply shock, oil comes back down. If it rose 50%, it comes back down 29%. Okay, only 2 times it has not come back down within a year is when the global financial crisis के बाद की जो demand recovery थी, या COVID के बाद की demand recovery थी. These were the only 2 reasons why oil didn't come back, because that was genuine demand which rose prices, not supply shocks. So supply shocks can't keep oil higher. This is no rocket science. And if you look at the futures market of oil, when it was peak, it was very evident the peak was behind. And I had said that on the peak day of 124, that you will not see further peaks. So I think oil is rightly at that place. The mean level of oil for the year is going to be 85 in my judgment.
All right, then. So need to be asking different questions then when it comes to oil prices. Thank you so much, Feroz, for taking time out and joining us this afternoon with the outlook as well. And, some of the pockets of value that you could be seeing emerging as well if you ask different questions as well. But let's also move on and talk about something like an Aadhaar housing finance. And overall, it looks like a strong set of numbers. In fact, Puneet is joining in with just that update, and we'll also get a chat going with the management as well shortly.
Well, most certainly. I mean, the net interest income growth for Q1 has been quite strong. It's up almost 20%. The total income is also up by around 17% odd. Operating income continued to show some strong positive momentum in this particular quarter. So that has grown by almost 19%. What's also something to watch has been the profitability that has grown by 19% on a YOY basis, while the AUM growth is at 18.2. Now, here is where that there's a slight more interesting part coming through, because the company actually mentioned that they've gone through a change essentially in the way they are going to be disbursing now. So it'll be more check when it gets in hand of the consumer and essentially their customer. Only then they'll start charging in. So that could have some margin impact, but it's basically what was one of the key reasons why there was a 300 crore impact for Aadhaar in this particular quarter, and hence the company mentioned that they could have disbursed this more in quarter 2 is when they will recover a lot of it. So it's important to get the perspective of the management on this as to why the change now. It's also something they've spoken about over the next 3 years, big targets to go to 50,000 crore in AUM. They are at almost 31,000, but it will require them to grow at 20%. So the key question being, if all of this gets addressed, and to talk exactly about that, we are being joined by Rishi Anand. He's the Managing Director and CEO of Aadhaar Housing Finance, now joining in. Mr. Anand, very good afternoon to you, sir. Thank you so much for joining in. As I mentioned, why the disbursement change now essentially is the first question I want to ask you, and whether you can guide if a lot of that recovery essentially will be done in Q2, or will it be more spread in the next couple of quarters?
Okay, yes, you're right. We've gone from the regular way of doing business of check handover and disbursements to now check realization. And then you're right. As far as we are concerned, it is always customer first and governance at the top of it. Keeping that in mind, we were contemplating for the last couple of quarters to move to something called check realization, which effectively means that I will charge the customer interest from the day he takes my money, and not from the day he takes my check, which is generally a gap of 5-7 days. So, why take that 5-7 days of extra interest from the consumer? Yes, so from a purely high governance standards, we have moved to charging from check realization. Have we lost any business in this journey in the quarter 1? Yes, I would say about 300-400 crores of business. And I will not term it as loss. I will term it as carry forward business, which effectively means that we are going to recover that business in quarter 2, quarter 3.
Got it. And fair point, Mr. Anand, point taken. But, you also mentioned and maintained that, for FY27, the AUM growth will be almost 20%. So you have had almost 18% this quarter because of this fundamental change you mentioned. So the question being, why the fundamental disbursement change now? I know you mentioned about the last couple of quarters, you've been thinking about it, but how is that recovery expected to maintain that 20% PAT as well as the AUM growth target for this year?
Okay, so first let me tell you why it will be seamless and why we are so confident. If I were to do a like-to-like comparison of disbursement to disbursement versus what we did last year, quarter 1, and what we've done this, it's a 19% growth on disbursement and about 18.5% growth on AUM. Now, this 19% growth on disbursement actually has translated to a only 3% growth that you see in terms of numbers, because we moved to realization. So the carry forward business gives us that confidence that, the guidance in the medium term of 20% growth on AUM, 20% on disbursement, 17-18% on disbursement, and about 20% on profit is going to be, current year looks very comfortable and confident.
You also have a strategic target to reach that 50,000 crore assets under management by FY29. My question largely being, what are any other changes that you need to do within the organization, within personnel, if any, to reach that level?
So I would say, where this confidence comes from is, our distribution network, which is at the forefront. Today, we stack at about 628 branches, adding 50 branches every year for the next 3 years. So this year, for example, we're going to be adding about another 45 branches in the next 3 quarters. That enhancement of branches and our model of urban emerging markets, a little more trying to balance out the emerging market and the urban market business. I think that gives a little confidence of the 50,000 magical figure that we've been speaking about over the next 3 years.
Also, sir, in terms of, the loan against property share, now that has increased to almost 27% in quarter 1. Was I think 14 to 15% that was back in FY20. Now, you of course had a change in that process. Where could this target go in the next 2 to 3 years? Because there is that 70% home loan share that you want to maintain. So if you can give us some perspective as you go to that 50,000 crore mark.
See, purely from a regulatory perspective, we work on something called the principal business criteria, or the PBC as we call it, which allows you to go, in a layman language, allows you to go to 70-30 kind of number, 70 being retail home loan and 30 can be anything else, which has to be tagged as non-housing. Today, at the book level, we stand at about 73-27, and we are at a very comfortable range. We don't want to be close to the breach point, which is 70-30. And if you look at the definition, it says that 60% of your balance sheet, including cash in hand, has to be retail home loan. So from that perspective, you're right. We have grown the loan against property business over a period of time from a 17-18% to a 27% today. And that's where we are going to be. Incrementally, we might be a 70-30, but on the book, we will always be I would say a 72-28 kind of number.
Good. Well, Mr. Anand, we leave it at that. Thanks so much for joining in, giving us perspective about the company as well as what quarter one led to. We look forward to our next conversation. But Shreyanshi, that's the bit on Aadhaar housing, a quarter that was marked with the governance change, but a strong one indeed.
Absolutely, and even the commentary for the medium term especially is looking quite bright as well going forward. But let's also move on and talk about another strong quarter for Pidilite with resilient performance as well. You do have Mahima who caught up with the management. Let's go across and listen in to a slice of that interview.
Pidilite, of course, is in focus. Yet another strong quarter and a resilient one for Pidilite. Overall volume growth was at 11%. Margins have also seen a good uptick. To understand as to how things are shaping up and what FY27 is going to look like, we're now joined by Sudhanshu Vats, who is the Managing Director of Pidilite, joining us now. Sudhanshu, thank you so much for taking out the time. I think my first question to you is going to be that, quarter on quarter, we've seen resilient performance coming in from Pidilite, right? Just want to get a more sense now from a broad perspective of demand, because volume growth is at double digit, which is a step up as compared to where we've seen historical trends, right? Where is this demand coming from? What do you make of the trends? Is it the housing demand, premiumization, market share gains, channel expansion? What is it that's working for you?
So, Mahima, first of all, good morning and lovely to speak to you. I think, we've delivered a strong set of numbers in quarter one. And I think, and you've captured it in your question, partly the answer. See, I'll tell you, three things happened in the quarter which basically helped us deliver the numbers we've delivered. I think one is demand is intact and demand has remained quite steady, which is very important. And that's why we delivered underlying volume growth of 11.3%. And I think this demand, as you rightly pointed out, has different components. So I think premiumization is continuing. Some of our premium innovations are doing very well. Whether it's NeoPro, which we had done for our tile adhesive in the joint venture Grupo Puma, that's doing exceedingly well. Whether it is some of our newer innovations in Fevicol that they are doing well. Whether we've done something in the area of Dr. Fix-It. So therefore, our premiumization journey continues to be good. Channel expansion, PKDs are now sort of expanded and are touching nearly 25,000 number. So therefore, and marketing campaign, if you were to look at last quarter that went by, we did on our big brand Fevicol, Kursi Pe Nazar. And I think, the campaign did very well, Mahima, and there were quite a few memes on that as well. So we were very, so basically very cultural. So we worked on all elements of demand generation. Fortunately, demand remained very intact. What helped from the margin point of view as well is that we basically took up prices in a calibrated fashion but at the same time very proactively and timely. Our pricing philosophy is based on replacement margin. So therefore, what is the cost of raw materials today, in a manner of speaking? Whereas if you look at the actual margins that flow through in the quarter are consumption margins. So because of some of the carry forward of low-cost inventory from the previous quarter into this quarter, we got an additional advantage in this quarter. So I think that's another piece which has come through. But overall, as the demand is staying intact, our premiumization, innovation, marketing, channel expansion are continuing. We are confident of continuing to deliver good volume growth with good margins.
The inventory, the low-cost inventory that you talked about, Sudhanshu, do you think that inventory is now completely sold out, or do you think there will be more spillover in quarter two? And considering that, this was also one of the reasons as to why your margin was above the guided range that you've given. But overall, just from the fact that your margins have also been very resilient despite of the input cost inflation that you've seen, within that guided range, do you think that for FY27, it will be at the higher end of the guided range of 20 to 24%?
Mahima, actually, in today's day and time, it's very hard to say.
Yeah.
But having said that, if the situation remains relatively, this entire volatility remains relatively benign, if I can use the word, it's paradoxical, but if it remains a little bit more stable, our sense is that with the strong start we've seen to quarter one, we will basically, it'll taper a little bit, but we should be in our guided range of 20 to 24. And it is quite likely that we will remain from middle to higher end of our guided range. You're absolutely right. Having said, on the second part of your question on the low cost inventory, almost all of it is used up in quarter one. So in quarter two, therefore the margins, and I've never said that we should look at margins in a quarter. I mean, you've always heard me. We should look at margin for a year. Even now, FY27, if you were to look at a first half FY27, you will see quarter two tapering without doubt, because there will be the high cost inventory which we bought will come in. You will also see that it's a smaller quarter, so leverage is smaller. The quarter one also is one of the biggest quarters, the biggest quarter or one of the biggest quarter. Quarter one, quarter three tend to be big quarters. So quarter one, basically that leverage also comes in. So if you were to look at, because of huge raw material inflation, our gross margin did suppress a little bit. If you look at our numbers, it's about 70 bips if I'm right. So 70, but because of the leverage and our control on other costs, barring the demand generation advertising spend, which we did, we always do things for the long term. So that we did. But because we managed the costs in that bracket, we got a lot of leverage in EBITDA. And I think that flew through.
Interesting. And because you mentioned that, it could be in the mid to high range of your guidance for your margins, I wanted to ask a follow-up on that. Because if I'm not wrong, in this quarter, across categories, the price hikes have been between that 2 to 12% mark. Going forward, considering how raw material inflation pans out, how much more headroom do you think you have to take those price hikes? And that, combined with, what kind of volume growth can you expect for the rest of FY27?
Yeah, so Mahima, we've always talked about a double-digit underlying volume growth. So we will continue to work towards that. That's part of volume growth. As far as pricing is concerned, what is happening is that basically raw material is quite volatile. So if raw material comes down, as you know, and in some cases it is coming down, to be honest with you, from the peaks we saw in the month of April and May, it has sort of come down. So basically, we may have actually, on the contrary, we may be passing rebates in a few categories if needed. Because Pidilite has always believed in win-win philosophy. We would like to do what is right for our customers. At the same time, we also have to keep a premium. What is the pricing premium we should enjoy over our other competitors? So we are very conscious of that. So we will continue to maintain what is right for us in the long term, and also a win-win philosophy. So you will see so it's very hard to say. It's not a secular movement one way. It's basically, it's extremely volatile, particularly this time around. So I think it goes up, then it comes down. So having said that, the pricing which we have taken, we will, wherever needed, we'll pass a few rebates. Whether there is additional pricing will only depend on if the raw material further goes up. At this moment, there seems to be no specific evidence of the same.
Understood. With regards to competition, because I was listening to Asian Paints, and they've also they are expanding their presence in the adhesive space, doing backward integration, etc. Just want to get more sense of what do you make of the players entering into this category, the already established players who are expanding into this particular category, and by any chance, do you? In terms of where competition goes, are you looking at any change in terms of where market share goes?
No, we've had competition for quite some time.
Correct.
I think the company you spoke about has also been in adhesives for quite some time now, at least about a decade.
Right.
So I think it's not, so this is not new to us. Our philosophy is to do the right thing, continue to do demand generation, continue to work with our users and applicators in the right way. We will continue on that path. Competition is not new to us, so we will basically continue to work in that space. Some of the backward integration is their philosophy. We believe that as far as VAM is concerned, particularly, I think buying VAM smartly from the market and managing the cycle of VAM from a procurement policy point of view, I think has held us in good stead. we feel that will continue. We've looked at, India as a place ourselves and also as with our key partners and vendor partners who are some very large companies who do this business globally. I think in our judgment, India doesn't offer a competitive advantage for this particular raw material.
Got it. And it's reflected in your numbers. Yeah, absolutely. And it's reflected in your numbers as well, Sudhanshu. They do the talking itself. But just one last question from an export point of view, because geopolitical disruptions is where, it's overall impacted your international business. But you've said that overall the contracts remain stable. There's nothing gone there. But from a recovery perspective, what are you expecting going forward?
So I think the moment the situation stabilizes, and particularly in West Asia, but I'm saying let's see when that happens, and let's say Strait of Hormuz opens, I think we should be able to get all our exports back. We are confident. We are also, and in the future, if you look at it, as some more FTAs open up for the country, and there is work happening on that, you are aware. So we will continue to look at opportunities where they are right opportunities for us to expand our export base further, particularly in B2B business. And as far as our branded exports are concerned, they are concentrated a lot more in Africa and Middle East. And because of this West Asia conflict, I think basically there was the challenge with logistics as well. Some of that will automatically correct as we go forward.
Alright, and there you go. So that's the word coming in terms of the challenges also when you talk about Pidilite. Raw material cost is, of course, something that they've highlighted. And you do have some stocks like Cummins India and some other counters that are buzzing, that are under a little bit of pressure after their results as well. Quickly, let's also pull up some of the stocks that are holding up quite resilient, though. So something like Reliance, Shriram Finance, Eternal, some of your defense counters doing quite well for themselves, by the way. About 1.8% uptick coming in. And you do have Goldman Sachs that's quite bullish on some of these counters as well going forward, especially BEL, and that's one counter that's buzzing away in trade. Moving on, let's also talk about some of the other counters as well that are in focus as well. So you do have a bunch of counters, the likes of Powergrid, Trent, Hindalco, NTPC, some of those counters that are trading with a little bit of downtick at the moment. So largely it's the defense pack that's doing quite well. Some of your earnings reaction, something like a Naveen Fluorine that's standing out with that 10.7% gain coming in. Also Newland Labs with that 9% gain, and you do of course have the strong quarter that you had for this particular counter, robust revenue growth as well as margin expansion, and that's seeming to be helping the stock as well. Let's also talk about Aegis as well. 5.5% uptick coming in for that particular counter at the moment as well. And that's also one counter to really look at on the back of some of the news flow that we've gotten for it as well in terms of the earnings as well. So that's also one counter to really look at as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from fact.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit. Suslan studio with me, Hiral Datia, and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. A pretty, narrow range, I would say, in terms of today's session is what we are seeing. The question is, where is all the action?
But fair enough, Hiral, and yes, I'm also actually not trying to find any trend as such. Look at Nifty, there is a volatility happening and we are almost at the flattish levels here. However, if you pull out the Nifty Bank chart, a little bit of recovery is there, but will it sustain or not? That's the big question. Let's pull out the Nifty Bank and see what's happening there. Yes, we are near the day's high level, a little bit better, settlement coming in, but overall the volumes are on the lower side today and it's a lackluster day of trade. Let's understand, how things are coming across. The Nifty is still volatile right now and you can expect that going ahead, but Sensex, you should be keeping an eye on it as well. Nifty Bank, a technical recovery, but a resistance, a very narrow resistance we can expect going ahead. But today is the first Sensex expiry under cash, so you should be looking at Sensex if any trades are there to be made or not, but the volumes are very less, so that's the caveat. So that's is happening across the segment, so you can expect a little bit more volatility in the closing session. Also narrow range of trade sectorally, but the defense segment, that is outperforming, so good rotation is happening off the money here. Small caps, Hiral, is the star. Value buying for the third straight day. So no matter what's happening in the large caps indices issue, there is a good buying in the small caps. Majority global asset classes are in a tight range right now as we are seeing geopolitical developments which are happening. But let's talk about the new listings, what has happened. Bumper listing for both of them technically at their listing gains coming in for both MV Electrosystems and Juniper Green. But today earnings is also in focus. Let's look at the key earnings which should be in your radar of Hero Moto, Trent and Britannia come up with their numbers. Also looking at the mid caps and the F&O names, it includes Lupin, LIC and Blue Star as well. So very stock specific approach. Apart from defense, all the sectors Hiral are in a very tight narrow range and the volumes are on the lower side.
Absolutely, volumes are narrow, though it is Sensex expiry, so it's going to be interesting. But thank you so much, Sharad, for that. One stock that is in focus today, Datamatics Global Services. Let's pull up that one on the screens and see what the stock is doing in trade on the back of earnings. 1.5% is the kind of downtake that you're seeing right now. Revenues are down 1%. Your net profits, however, has seen a growth of around 63%. Margins have also dipped slightly. 15.3% versus a 16.9% is what you're tracking. And there has been a 40 crore fair value change in the fourth quarter of FY26 in contingent consideration for subsidiary acquisitions as well. Rahul Kanodia, Vice Chairman and CEO Datamatics, joins in. Rahul, welcome to the show. Always a pleasure to speak to you. If you have to decode the first quarter in terms of what has actually happened, because good profit growth. So what has led to this kind of a profit growth, number one? And two, if you have to take cues in terms of the mild flattishness that you're seeing in terms of the top line and that correction that's coming in terms of margins as well, what would you allude to in terms of those numbers?
So the revenue flattish is not a concern at all for us because if you see the last 4 years, Q1 is always a little lower than Q4 for us. The reason is that we have a spike in Q4 every year. So therefore, we are not concerned about that. Our projection is still about high single digits for the year, and we maintain that. In terms of the margin, because we've had increment cycle, Q1 gets hit because of the increment cycle, and then obviously we have the last year's payouts for the bonuses and the incentives that we give out to people. But that's a very temporary phenomena. I think next quarter we'll claw back and we should be okay. So that's not something that concerns me at all.
Okay. And so you're saying next quarter you should see something that would be okay as well. So clearly, if you have to talk about the operational improvements versus the one-off factors that we're seeing as well, how much of the growth has come in from operational improvements which are sustainable versus one-off factors?
And there are no one-off factors really in the bottom line improvement. It's mostly all operational efficiencies that we brought in. So there is no spike that we see or no one-time transaction.
All right, sir, of course, trying to understand, how things are panning out on the longer scheme of things. What's the guidance looking like, especially on the revenue and the margin front going ahead for FY27?
So on the revenue side, as I said, we had projected about a high single digits. We'll maintain that. On the margin also, we should have, maybe we had about a 19% EBITDA margin, maybe a 0.5% improvement further on that is the range we're looking at. In the recent past, this year at least, in this financial year, if we see the kind of deals that we are getting, about 60% of our wins are on the back of AI, heavily AI driven. So that's good because our AI first strategy seems to be delivering, where bulk of the wins are AI driven. And when I say AI driven, I mean a large part of it is AI, not just a small AI component in it.
Okay. Can you quantify that for us? Because we're talking about validation of the AI strategy. What percentage of the new deal wins today have an AI component versus a year ago?
Well, I would say a year ago, probably 5 or 10%. As I said, this time it's upwards of 60% of the wins are all AI driven. And when I say AI driven here, I'm saying it would be a 70 to 80% AI component in that transaction versus 5 or 10 or 15%. Because today every deal has some AI in it, but it may not necessarily be a 70-80% AI component. So these are all very heavily AI driven.
So Rahul, can AI become a meaningful standalone revenue contributor to business of Datamatics Global, or will it be a primary driver of high wallet share within the existing service lines that you have?
The market, we have to re-engineer all existing services into an AI driven. AI cannot be standalone because ultimately it's doing the same work. So if you're doing an insurance claim processing, you're still processing insurance claims. So that's not changing. It will replace people to some extent. It'll make things more efficient, faster turnaround, more accurate, things like that. But it will be heavily AI-driven. The deal sizes also that we are seeing are expanding in terms of earlier we were seeing a lot of proof of concepts. They shall continue. But now we're seeing real projects and the deal sizes are increasing. So there's a scope increase in all the transactions that we're doing. And AI can never be standalone. AI can never be standalone because it has to integrate into all the enterprise systems.
No, but that's from a business model that you have, right? I mean, there are companies who are solely dependent on AI-driven revenues. Yes, probably not in the Indian context. If you have to look at digital operations, digital technologies, and digital experiences, from the three segments, operations is the largest revenue contributor, strong growth there. Technologies, it remains central to your AI as well as cloud positioning as well, from what I understand. And it's digital experiences which has seen growth challenges in the past as well. Are you where would your synergies then lie now between the three segments?
So we are seeing actually large deals coming in the digital experiences space right now. The digital technologies is really the heart of AI, because that's where we incubate all the AI technology. And that then gets transported into both the digital experience and digital operations as well. So these are actually merging into one. You can't really have them as three standalone. Increasingly, they need to operate as one, because the operations team understands the operations of the customer, and the technology team understands the operations of technology. And when they work together is really where we really deliver the maximum value.
Okay. Let's talk about acquisitions and integration. The TNQ Tech integration is now complete.
Yes.
So beyond TNQ, are there any inorganic growth opportunities that Datamatics is actually chasing, to strengthen capabilities in any of the segments of business? And two, when I talk about the Dextara-related merger and restructuring activities, I think that is ongoing as well. So on the acquisition, on the integration front, what are the outcomes that you're expecting in the next 12 to 18 months?
So we are in dialogue with some companies also from an M&A point of view. These are more in the area of data and cloud, because data becomes very central to the AI strategy for any organization. So these are more in that space. To your point on Dextara and TNQ, both the integrations have gone extremely smoothly. In Dextara's case, also the kind of deals we are getting are much larger than what we had in the past, pre-acquisition. So that's also very comforting to see that, clients are giving us those kinds of deals. So both of them are working very smooth. They've both grown. They've both delivered good margins. So I think we're in a good place on that.
Okay. So if one has to track a Datamatics from an investment perspective, I'm talking for an investor, what should that be now from here on?
I think really one is looking at how we are in the process of reinventing ourselves and really going with an AI-first strategy. The key question is really what happens on the AI, because that's going to be the future frontier for all of us to compete on. And the faster we pivot, the faster an organization captures that market, the better off we'll be. Initial years, one may still, and every company will, invest heavily. So you might see a little margin pressure, you might see a little revenue, but the pivoting is the most critical component, I think, for any tech organization.
Okay, so it's going to be interesting to watch out for how that pivot actually functions. But thank you so much for joining in. Always a pleasure to speak to you. In fact, we are seeing a mild bit of a correction that's coming in on the stock as well. I think it is at the day's lowest levels right now as we speak, a 2.3% downtick coming in. In fact, the stock is seeing a correction after we've started this conversation with the management and the commentary that we're picking up so far. In fact, let's also go to our guest who's joining in. We have Rupesh Solanki, Technical Research Analyst at Latin Manharlal as well. Rupesh, welcome to the show. Always a pleasure to speak to you. I want to talk to you about a Datamatics Global Services chart right now. Right now, there is some little bit of pressure coming in, but in the last 1 year, not done much. It's a complete downturn of 18 to 19%. Someone who's holding the chart, would you still advise to book profits, or do you think it's best to average out at current levels and hold on?
Yeah, good afternoon. Looking at the daily chart of Datamatics, I am seeing a steady uptrend ever since the stock formed an intermediate bottom around 630 level on 1st April. The stock has been in a steady uptrend, continuously making higher tops and higher bottoms. As of now, we are seeing the stock holding a strong support of its 50 DMA, which is around 820. And yesterday, the stock had formed a strong bullish candle and reclaimed the 20 DMA as well. Technically, I think once the stock closes above its prior swing high, which is around 920, then we may see further upside till 1000 level. So overall, chart setup seems bullish, and I will advise to hold on to stock with a stop loss of around 800 level, and I expect a target of around 1000 in the short to medium term.
But let's move on to the rapid fire round. Rupesh, the first stock will be Navin Fluorine. A very strong set of numbers coming in, and we're seeing a good momentum. Good time to take a little bit profits off the table, or do you think the momentum will continue in this counter?
I think the risk reward ratio doesn't favor fresh long positions in the stock. I would advise to wait for some pullback around 8,100 or 200, then maybe we can add some fresh position.
Right. Next stock, Newland Labs, brokerages and the earnings both have been very strong. There's a bullish views from them. Stock is up 7%. Is on the monthly charts at least. How does the technical levels look, Rupesh?
Yeah, technically, the Newland lab is in uncharted territory, and today morning we saw a huge gap up of around 8%, and thereafter we are seeing some profit booking, which I would rather say it's sell-on news. Overall, the upside gap is still intact, and I would advise to hold on to the existing positions with a stop loss of around 19,000. We may see around 23,500 in the short term.
Right. Next counter, JMM Fowler. Is there any good risk reward ratio for a trade here?
GMM Fowler, I think it's run up pretty hard today. As of now, the risk reward ratio doesn't seem favorable. I would rather advise to wait for some pullback, maybe around 900 to 920 zone would be a better price to enter.
Next stock, IKS. Of course, they have a limited trading history, but numbers were largely in line. Street was expecting some higher numbers. Stock is down almost 6%. Good time to chip in and buy some, average it out if somebody is holding a position in this.
Yeah, definitely one can average it out because it is now trading around 1740, which happens to be a good support area. So I would advise maybe average it around 1,740 and a stop loss of around 1,700. Maybe we can expect 1,920 levels in the short term.
Right, let's pull out the chart of Godrej Agrovet. Rupesh, is there a trade to be made here in this counter, or would you like to stay away from it?
Godrej Agrovet, I think it's pretty much underperforming the overall markets, and as of now, it has reached its previous swing low of 540. So I would advise to stay away from the counter.
Right, and the next stock is Shelly Engineering. Let's get that stock also on the screen. Of course, stock is up 7% in trade. Some good buying happening. What are the levels one should be watching out for? Anything on the support side?
I think one can hold the stock with a stop loss of around 5%. Maybe it can show up swing of around 15% in the short term.
HUL, the next stock we are talking about. HAL is the stock. Let's talk about that. Sorry for that. Hindustan Aeronautics. Just pull out that stock. After a long time, the defense stocks are buzzing in trade and stock is up 6%. Do you think this momentum will continue? Because this is just the one spike which has come in after a long time.
HAL, sorry.
It's HAL, yeah.
Hindustan Aeronautics. Today's price action, we have seen the stock price crossing its previous swing high, which was around 4,800, and seems a decent swing breakout on the daily charts. So I think the upside can continue from here on, and it can challenge the June 2025 swing high of 5,080. So I think I would advise to hold on to the stocks, and if the stock closes above 5,080, then we can see the stock challenging its all-time high, which is around, I think, 5,520 level.
Right, and a quick view on the last stock, Saregama. Your views on that?
Saregama technically seems good. It is in a great momentum. As of now, the stock is just in a small correction mode after hitting a high of 570 yesterday. Overall, the chart setup is bullish. I would advise to hold on to the stock with a stop loss of around 490. Maybe we can see 600 levels in the short term.
Well, that's the end of the rapid fire round. Over to you, Hiral.
Okay, thank you so much for that. In fact, stay with us. Before we talk about any other stocks, Milky Mist IPO actually would open on the 11th of August with the issue size pegged at almost 1,500 odd crores. The price band is fixed at 133 to 140 per share. My colleague Nimit caught up with the management to discuss their IPO offering and growth outlook. Let's listen into a slice of that conversation.
The big question first I'll ask you is about the downsizing of your IPO. Of course, the fresh issue size is compensated from the pre-IPO clearly, but the OFS portion has also been halved. The amount of shares that y'all are selling, you've reduced by half. Wanted to ask, what was the thought process? Is this because the market, which is currently devaluing most IPOs that are looking to list, is this a market response, or is this also something that you internally decided that we'll pull back on what we're planning to sell?
Thanks, Nimit. You see, we have not downsized the IPO. You know, our IPO was the actual IPO size is 2,035 crores, and out of that we went for a pre-IPO. And pre-IPO consists of 357 crores of primary and 125 crores of secondary. So subtracting that, the remaining is 1,480 plus crores. And that is again 125 crores of OFS, which originally we put as a 250 crores.
Yeah, correct. So that's the only portion I'm asking about.
That's the only thing. Okay, so there is no downsizing of the IPO. Subtracting what we have raised through the pre-IPO round, remaining is we are going in. So we have not done any kind of downsizing.
So if I could ask only about the halving of the OFS that you have done, what sort of led to half from 250 you've gone to 125 on the OFS? Just understanding if that is a market response based on your road shows, or is that a discussion that you had internally?
No, 250 crores is the original OFS portion. Correct. Out of which 125 was already done with the pre-IPO.
Oh, okay.
And 125 is now being part of the IPO.
Okay, so there's no downsizing at all. It's purely to do with. Okay, perfect. And talking about the pre-IPO, you valued that very close to the price band that you're valuing today, which offers very little to no discount for the retail investor as compared to your investor Temasek. What is the reasoning behind this aggressive pricing?
See, pre-IPO is done at a certain level, okay, and that was. We continue with the same level of price band. There is no, kind of a deviation from that. So it is the same price band, we have come out with.
So there's no discount you thought about offering? Was there any thinking about offering any discount to the retail investors? Because it's essentially what the investor looks at is how much risk you're passing on to them, and often when the pre-IPO is at the same price as the retail, it's taken negatively generally. There may be another reason for it, which I'll ask you.
As far as Milky Mist is concerned, we have been growing at a 30% CAGR since last many years. So there is a high level of growth, and the margins have improved upon, and there's a huge opportunities existing for us. So I don't see that becomes any kind of a constraint. We are at a better position as far as our technology, plant, growth, and the margins are concerned.
Okay. I also wanted to ask you about the issue we discussed a little off camera also, and that happened earlier this year about the paneer, the puffed paneer issue as such. Now, as you expand, you're very big in South India already. You're expanding increasingly to North India. You have a very strong supply chain and how you maintain safety. But since a lot of it goes through quick commerce now, and that segment is looking to increase, and I'll leave you to speak to that. But how will you maintain the standards that you maintain for yourselves in your supply chain externally to all your vendors and partners like these quick commerce companies? Is there a plan for that to maintain the quality?
The first and foremost quality comes from not from the supply chain and all those things, but having the right technology. It's very, very, very important. And as far as Milky Mist is concerned, we brought in the right technologies, completely untouched, the automatic from milk to product packing. Then comes the second portion. For that, we were the first company in the food segment to have end-to-end logistics, right from taking milk from the source, bringing it to the factory, and taking the products from the factory to the distributors, and again from distributors to the retail touch points. So we have a complete end-to-end logistics controlled by the company. At any given point of time, we know what the temperature at a particular place at a particular reason. So we have beautiful controls. So that gives us a kind of an advantage to retain the quality of our products till it reaches to the consumer level.
But I wanted to ask, so that's exactly my question, right? So now a lot of this will not be controlled by you if you are giving it to the dark stores and the warehouses that the quick commerce chains operate, a segment that's growing very fast. How will you ensure that quality control when you pass it on to them, or then is it their responsibility? Because the product that's going out is finally yours.
See, end of the day, the product is manufactured by Milky Mist. So it is the primary responsibility comes to us to ensure that the supply chain is maintained till the product reaches to the.
So any specific plans for that?
No. See, we our partners, Quick Commerce or Modern Trade, we have been, it's a two-way processes that educating their requirement and our the requirement as far as the product storage. We keep dialoguing with them, and they keep creating the facilities. And maybe since some of the portions are growing much faster, there could be a little bit of one or two cases here and there, but we ensure that every consumer who's getting Milky Mist product should get a same quality as it was manufactured in the plant.
That's an interesting take coming in from the management of Milky Mist. And there's a correlation also. The next stock I'm talking about is this Swiggy. Of course, you can order Milky Mist from Swiggy as well. But Swiggy has also come out with its Vision 2031. Mahima, there's an overhang with the management, that's fine. But what is this Vision 2031 for Swiggy?
So tall targets, Shah, that they've given in their investor presentation. They have their analyst meet today, and that's and on the back of that, they've set out a presentation and set out their vision for FY31 for major metrics. Firstly, EBITDA, adjusted EBITDA is what they're talking about here. Targets of 10,000 crore by FY31. I think this is the number which the street has liked, and we're seeing that the stock did react to that, but it's cooled off now. But gross order value is something which they are expecting to be up by 30% to 2.5 trillion by 2031. The other aspect is food delivery gross order value to grow anywhere between 2.5 to 3.5 times by FY31. So that's a good jump that they're expecting for the food delivery business, considering that to a large extent food delivery business now is started to consolidate. Instamart targets over 1.5 trillion gross order value by FY31. So these are the four major targets that Swiggy has laid down for the roadmap to 2031.
It seems like market is taking it with a pinch of salt. These are all these 5-year numbers. So that's something which viewers should look at. But Mahima, stay with us. There is an important earnings also coming in. Trent, what's the preview? What are the numbers looking like?
So for Trent, generally for the revenue number, they already give it in their business update, which came in at 19%. We saw the stock tank when the business update came out because it was below expectation. EBITDA, the expectations are that it could rise slightly above the revenue, so around 21%. And margins are expected to be around that 17.8% versus that of 17.5%. So a little improvement in margins you can expect on a year-on-year basis. And PAT may see a growth of around 25%. So cost savings and operating leverage could play out and show better performance in terms of fair bottom line goes. Revenue growth, like I said, at 19% was below what the street was expecting. Growth less than 20%. This is the fifth quarter where they've done that. And West Side store addition was also on a disappointing front. So an explanation probably around that is also something that we'll be watching out for. Increasing competition and impact of cannibalization is also something that we'll be watching out for as to how that's panned out, and that will overall see an impact on how same-store sales growth and revenue per square feet trends look like. So this is the overall view that how you can expect trend results could be and what we'll be watching out for.
Thanks a lot, Mahima, for that. It'll be a busy day for you. But just a quick technical check, either Swiggy or Trent, either of these two, Rupesh, which would be a good technical pick?
Good technical pick from my side, I would prefer Swiggy. Because in early June, we have seen a good bottom formation in Swiggy around 240 levels. And ever since the stock has started forming higher tops and higher bottom, and every upswing is supported with a healthy rise in volume. Around 4 crore to 6 crore shares are traded on every upswing. So definitely I would prefer buying Swiggy around current levels, keeping a stop loss of around 260, and one can expect a decent target of around 325, which is the 38.20 Fibonacci retracement of the entire fall from the high of 470 to the low of 230.
So Swiggy is the pick coming in. Thanks a lot, Rupesh, for us, and best of luck for the future. And that's the end of the show, folks. From me, Hiral, and the entire team which put together this wonderful show of trending stocks. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myths from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first.
Well, hello and welcome to NDTV Profit. Today's special chat that we are trying to do is based on SEBI's new closing auction session, or as it is popularly or unpopularly known as CAS. And the reason I reserve my comments on that, because the street is split right down the middle. If you've been clutching your phone or glued to your screen during the last few minutes of trade this week, and I know Alex is, then this show is for you, because this new closing auction framework could change, or you could argue has changed, how those final minutes play out. And before we tell you what you need to know and what the changes mean for you, Alex, has anchoring become different in the last 15 minutes?
I must say that it's been a while, and Neeraj, you've been anchoring market related shows and live markets for far longer than I have. But having said that, it's been a decent amount of time. This week I've actually been flummoxed more than once.
No, what I meant for just this, that has this closing show the last 3 days, has it been different?
Oh, for sure, because and especially on Monday, because you were scratching your head thinking, how the hell did this happen? You have a closing at 315, which is supposed to be the reference, and suddenly 200 points on the Nifty 50 up, and then you try to understand, oh, okay, this has happened, so bids have been placed and they've actually gotten accepted at that higher level, and so therefore the components of the Nifty 50 have gone up. These are the F&O stocks, and those are the trades that have taken place. The price is settled at that level, and as a result of which the Nifty 50 itself has gone up by 200 points, and you're trying to scratch your head to think, oh, okay, this is what has happened. Why has it not happened for the Sensex? Obviously because turnover was not there. So therefore you're trying to figure out all of those modalities. It happened yesterday as well. The gap was not as significant as it was on Monday, but there was still a gap.
Yeah, so a few large orders effectively can change, and right now when the number of people participating are less, it is more and more evident. Will it change though, is the question, because in some sense SEBI's introduced this because this is acceptable, or it is a practice that is done in a number of countries as we get to know. And therefore, to talk about that, let's get in our experts. And Mr. Venkatchalam Shanmugam, who's a partner at MCQ, if I'm getting it correct, and Mr. Kamlesh Shroff, who's the national president of ANMI, which is the Association of National Exchange Members of India, join us right now on the show. Thank you so much, gentlemen, for joining in, both of you. And Kamlesh, great talking to you again. I think we're talking, less than a month, and so good talking to you. And Mr. Venkatchalam, thank you so much for joining in. I hope I got the name pronunciations correct. Please excuse me if I didn't.
You are very right. You can call me Venkat. That's fine.
Okay, great. Venkat, thank you so much for that. Okay, so let's start with this. And Kamlesh, for a lot of people who are grappling with this question, why is it that this has happened in the first place? And one of the answers is that maybe there is better price discovery, maybe also because it's a system that is used in a lot of countries across the world. Would that be a fair assessment, or do you think there are something additional to add to this?
No, absolutely. You kind of said it on the spot. It's mainly because most of the global markets function on this cash system. But of course, each market is different. So NYSE, LSE, Hong Kong, some of these big markets actually take the cash system, which is the closing option session, and has worked well. But I'm sure I've read it somewhere that the initial hiccups are also there in these markets too. So the rationale is, whenever a new mechanism comes in, there is some sure learning which is natural, and participation generally grows over time, and then you get a little deeper markets which discovers the right efficient price.
Venkat, weigh in on this, and good afternoon, Alex here. There have been so many interesting notes that have been written already, and I'm curious about what you think. Kamlesh has rightly pointed out that this is followed in several markets, mostly developed markets with significant participation and quite a large amount of depth in the passive flows as well, right? But here it's been purported to say that we don't have enough institutional participation for it to be a success. What do you think?
No, I would put it the other way actually. So they are actually checking how the mechanism is working and what role that we can play. So end of the day, everyone is sitting here for profiting from the trades that they can do. But this is actually a closing market session, right? So actually, because this is a closed auction system, it shuts away the quantitative players, actually, right? So they don't have any larger role in terms of playing in this particular cash process, actually. So the people who would like to or would mandatorily participate is those passive players who are passive funds in the ecosystem who would definitely want to be part of that. But They may come on the mostly on the buy side, but sometimes on the sell side as well. Actually, when there is an index rebalancing happens and things like that. Actually, so having said that, we will have to strengthen the counterparty system, right? The counterparties who come against these passive funds, which is very critical.
Okay.
Okay. We give some time for the market platforms to get it settled down. Yeah. Sorry.
Yeah, well, we lost a little bit of that simply because I think Venkat is mobile right now, and hence maybe some bit of frequency issues. Kamlesh, a quick check. I mean, all of us know a trader, a broker here, there, etc. And in the newsroom, we were talking to a few before this show and asking them. And one curious feedback or one curious response to me was that, and the person was Gujarati, and he said, "Ke Sawatan pachi dhandho j ban chhe." He was saying that there is no business, virtually no business related to what used to be now after 315. Is that one? Do you reckon it's a very isolated case, or could it be true for a lot of members? Part one. And part two, will this last, or will this even out as teething issues go away?
So number one, बात तो बराबर छे, धंधो बंद छे. So practically 915 to 315 is the market, and thus you would have seen the kind of volumes that the cash market is actually the CAS, not the cash as in cash, but the CAS market has generated. Day one was 1200 crores, I think, at the NSE, 1550 crores at the day two, which was yesterday, which is being an expiry day. Gaps have narrowed down, but tremendously low, 8 to 10 crores on the BSE FNO. I think somewhat similar, maybe lower yesterday. So considering these things, the participation is seriously low. Can things change is your second question. With awareness, yes, it can, but it's going to take a little time. Most people thought that, it's about a 6, 8, 10 days pointer, and then we will move on with people participating. So participation comes in with prices, because the biggest mover is the prices. Every trader, every person on the screen is as an old adage goes, Bhav Bhagwan hai, as Rakesh ji had mentioned earlier. And that's exactly what everyone looks at. Prices are the most efficient way of looking at it. So if there is anomaly, not that people will not come back. So they will also start moving in. But because the session has a lot of things which still needs to be understood. A lot of people don't even know that 315, the migration from continuous trading session goes on to a closing on day one, goes into a closing auction session. Then from 320, you can actually put in prices, quotes up to 320.25, and you can delete them also. Then post that, anytime between 320, 330. Of course, this is kept very well so that you don't find the smart batsmen don't just come in at the last minute and hit a six by a big trade and change the pricing or influence the closing price, which is fair. So this is an understanding aspect. I took a little long, but that's what the point is. So I think as people understand, as people get aware, things would change.
Okay. Venkat, I want to read from an interesting note that was put up by Zerodha's Nitin Kamath on X. And this has to do with the whole participation angle, right? I'm reading and it'll make quite a lot of sense because it's a well-written piece. Closing auctions work well when there is a deep liquidity and a large diverse ecosystem of market participants, including market makers and arbitrageurs. Whenever prices diverge between the cash market, futures, ETFs or different exchanges, participants step in and arbitrage the differences away. This ability to arbitrage is much more limited in India. And his contention is that's partly because it is impossible to express a short view in the cash market. Is this therefore a problem that is not necessarily going to be easy to fix?
I would tend to differ, actually. See, basically, as I was mentioning to you, who are the mandatory participants? The mandatory participants are the passive ones, actually, right? And then you have to find the, the sellers is the problem. So let's look at what's the passive fund flow that happens every day. So like we saw that in June, there is a passive fund flow that happened on an average around 550 crores, actually. So these are the guys who would come and participate in the CAS, which is net inflow, right? So they would net buy to around 550 crores. But if you look at the NSE volume during CAS, which is around 1,000 crores, and on each of the last 3 days, actually, which shows that there are people who are participating on the opposite side, actually, but need depth. Depth is what would be required, actually. So what is required is it's not a continuous price discovery mechanism. It's a closed auction mechanism where people would have to know the mechanism, how to put the trades, and what are the implications of the trades that they are putting in. So that's where, as Kamlesh ji has mentioned, we need education and awareness of the participants as to what role that they have to play.
I want to weigh in on this because the suggestion and ultimately it is described to say that unless you have this ability to short, which is unlikely to come through, there is bound to be a structural upward pressure in the markets, which is what we've witnessed in the first two sessions in the week. Kamlesh, that's for you.
Oh, okay, yeah. So yes, of course, and be cognizant of a fact also is that the STTs that are levied at the exchange transaction charges and all put together is quite a cost. So basically, if you are actually getting into an arbitrage of delivery, you should be cognizant of the fact that both sides deliveries plus the futures cost is quite a component for anyone to move in for the next small part of the portion. So our system also works in a way, the tax part of it works a little against higher liquidity in a cash volume.
Okay, fair call. The other, since we are trying to figure out now what to do now that the system is here, and from the looks of it, from all that we've gathered, SEBI is in no mood to change this right now. This is here, it's possibly here to stay, and people will have to work around it. Two things that have happened, and Venkat, I'd like to come to you on this. One observation is that a few large orders can move the price a lot in those 20 minutes. And if the participation stays low, that could well happen. And in some sense defeats the primary purpose wherein people were able to take the prices higher in concentrated ways in the earlier system. So does this get resolved, or does this only get resolved after volumes pick up meaningfully?
Okay, so here, I would want to fundamentally explain what is the closing prices in here in this market and in the continuous trading system, right? In the continuous trading system, you have at 328 one price, 328 some seconds another price that is coming up with the volume, and that is actually multiplied with the price multiplied with the volume. Then you come at an average price, actually. So what is a volume weighted average price? Is someone is a price achieved exactly except for a handful of few who had participated in the market. Here is the market which tells you what is the price that you want to pick, depending upon whether you are on the buy side or what the larger market sees in terms of everybody matching the trades, or maximum of the people matching the trade says actually this is the price, and that is the price people would want to pick it up, actually. And there are people who are willing to pick it up at that price at which the market is closing. I would say that that system is not manipulatable, and not manipulatable to the extent that the previous VWAP system was there, actually. There is a scope for a little bit of a manipulation, but all of this would be fine-tuned over a period in time.
Yeah, Venkat, sorry, I was not even referring to this from a perspective of manipulation. I'm just referring to it from the purpose of what the end result is. If the end result, one of the key reasons was that in the continuous trading system, prices can be taken higher via some strong players. Here, the larger bidder can influence the eventual price, right? So in some sense, how do you resolve that?
Yeah, so that is because, liquidity is not there. So we need to bring in the liquidity.
Exactly.
Yeah.
Okay.
Yeah.
So that's the point. The other point, Kamlesh, and Venkat, thankfully, thank you for the answer. The other point, Kamlesh, is that we don't know if the liquidity difference between the Sensex or the BSE and the NSE will change. And currently, there is an issue there because the Sensex and the Nifty are moving in a different direction because the stocks within there are moving in a different direction. Will arbitrage opportunities at some point of time reduce that difference, or is it difficult to call that right now?
No. So arbitrage opportunities will definitely settle those differences. But yes, this is a problem because both the indices are either, both these indices total volume should be somewhere that the closing price should have a clear mandate that it is average in the sense, average of the cash which is traded on both sides, and then you devise the closing price. Whether that's a possibility, I don't know. But if that is, at least you will get a little better. So what an average of Nifty is in volumes and the Sensex may have a little lower, which is almost 1:10. Then that average price has to be considered, which will bring down the spikes. That's the way. But currently both are independent. In indices, both indices have their own constituents. So what you just mentioned, so a large trade can actually change the equilibrium and thus the price. And the input price of those 30 stocks or the 50 stocks actually goes to make the final closing index. So clearly the answer is yes. If the volumes are lower, a large trade can affect.
The other issue that has been spoken about, Venkat, and let us know what you think about this, right? And we've spoken about the fact that it's used in other markets, cash. But in the US, and I was reading another piece that was put up, you don't have a stoppage of the continuous trading. It continues alongside the cash. Whereas in India, it stops, the continuous trading stops at 315. And so therefore, you have on the chart a flat line, which makes trading in derivatives difficult to do. So is that something that needs to be looked at?
I would say that, so the FNO markets are trading on the probable cash price in future, right?
Yeah.
So that the FNO call, right? So why would they be more concerned about what's going on during the session? Because you have enough of information about the fundamentals of that particular stock, and the only thing is you are not getting the signal from the underlying market actually. So I believe that they are blindfolded for about 25 minutes till the closing price is announced actually. That should not stop them from trading at all actually. So that's an initial reaction, but as the time passes by, they will also come to know how to trade and what to trade.
Okay. Kamlesh,
I hope I've answered your question.
Has he answered your question, Alex?
You've done your best, I can say that.
Okay. The broader question is this, gentlemen, and I would love for both of you to answer it. And we're going to get in a dealer who's right in the ring doing this day in, day out to try and understand her experience as well, right? But the key question is, presumably, SEBI's done this because closing prices were easy to push up or down with the big last-minute trades. Global markets already use auctions for closing prices, and index funds and big foreign investors wanted a clearer picture. Is it to the disadvantage of some of the local participants or not? Both of you, Kamlesh, starting with you.
So yes, for the it is a disadvantage because we don't have the liquidity, and as I mentioned, as long as you don't have the liquidity, you don't have the markets. So if liquidity grows up, this is a much evolved system, but it's just a matter of time if it does. If it doesn't, then we will have to tweak a little and probably keep the same system and then work some solutions around it.
And Venkat, I know maybe you would say that I've said this for the last 20 minutes, but just reiterating the point, do you think local players are at a disadvantage, institutions? Because there are a few who are saying that local institutions, arbitrage funds are not able to participate and therefore they are at a disadvantage. Are they?
No, so I forgot to mention this point out to you. Actually, if you look at the arbitrage funds, actually in the last 2 days they have earned about 6% to 7% as a return in the market. Actually, so that basically some of them could be from the cash session that happened and their participation. And as I said, if 550 to 600 crores is approximately the net inflow, obviously there is someone with about 600 crore, on the opposite side, coming up, and then selling it actually. So I believe it could be the arbitrage and similar institutional players who is coming in into the market and providing that liquidity. So the point is actually, if you're looking at from a larger market perspective, this market has about 80% of the volumes which is coming in from the quant traders and those who take technicals and trade. For them, they only get to see a price and they can't get that price by an instant trade that they make actually. For them, this will be a difficulty, but they will have to adjust their trading strategies and everything. As Kamlesh ji said, you are losing that 30 minutes.
Yeah, water finds its way, but no, market doesn't, because the price still has the ability to change, so it could become a problem. But yeah, gentlemen, both of you, thank you so much for really taking the time out and going into great detail with this. And like I said, we're getting an actual participant who sits in front of a dealing terminal every single day. She heads the sales trading desk at MK Global Financial Services. Manjuri Muzumdar joins us right now on the show. Manjuri, thanks so much for joining in. Excuse me if I've given the description wrongly, but you would be best placed because you've seen the before and you've seen the now over the last 3 days. Are you a happy participant in the current closing auction session, or do you believe that there are some chinks in the armor?
So I think the framework is really very good, and the way I look at it is we have to go that way because that is where the entire Asian markets are. Every market has closing auction. So the framework is very good. Yes, liquidity is a problem, and that is what I think we are facing for the last few days. But these are small issues, I think, which will even out over a period of time. I think it's just question of next 10-15 days when these things will get evened out. Definitely, there are certain concerns because when we look at other emerging markets or other Asian markets where closing auction is there, there are around 2-3 things which are very important. One, they don't have weekly options. Second, they have an extremely developed SLBM market. So, because of which the closing auction price variations don't happen in that markets. Right now, we have weekly options on indexes, and we even have expiries where physical deliveries happen. So these are the two very big concerns right now for Indian markets with closing auctions.
Okay, Manjari, so therefore from that perspective, liquidity is something that everyone's spoken about. But are there any other tweaks that you think need to be brought about? Because there are several that are being circulated at this point, and as we understand it, brokers have met with the regulator. In your opinion, what needs to be done to make this more palatable, more efficient?
So if you look at it, around 3,34,000 crore is kind of arbitrage fund which works in Indian markets, and these are the participants who just can't participate in closing auction because they are liquidity providers for the market. To a great extent, they have to simultaneously do both the legs, and with cash getting closed before and FNO still continues till 340. They somewhere can't participate in this, and that is where I think that is one little problem which happens because of the liquidity issues happening there. Again, this closing auction is extremely good for the passive funds which needed. So whatever you do, the VWAPs will never be able to match the closing price. You can never match the VWAP because generally the way it was happening earlier, in last half an hour, you can have a big trade which comes in, and that would change the VWAP price altogether. So you at no point of time you can actually match the weighted average price on which the indexes used to close. So closing auction is a good move, but the price variation and liquidity becomes an issue there.
Yeah, it's a good point that you raise. And we've seen the way that closing NAVs for arbitrage funds have also moved. It's quite interesting to note. So these are, I guess, you can call them. You have a point.
I have one final question,
please.
though, and Manjari, which is simply this: that if you could, if the SEBI chair was listening right now, and if you could recommend one tweak or one change that should be done to this to make it more efficient, you've spoken about 2 or 3 in response to this. If there was one key thing, what would that be?
One key thing I would look at is maybe to a certain extent little bit narrow the range because that can little bit help with the massive volatility. I think it's very interesting. I would like to point out that today's BSE expiry, weekly expiry.
Yes.
And the option sitting today as of now is around 8 lakh crore notional on weekly options. And if you look at last 3 days closing auction volume on BSE is 10 crores. BSE, the entire day volume is 10,000 crore and last 15 minutes volume is around 10 to 12 crore. Today it might be 50 crore, but a 50 crore volume is going to define 8 lakh crore of closing. How can you actually manage this? How can we even think about it? And so the kind of price variations which are happening. So the most important thing which we have to look at is that we have physical delivery of futures during expiry. So you will have a lot of options which you think will close in the money, but they happen to close out of the money and you don't have stock to deliver. Right?
Wow.
That is a very, very big problem. So overall, if you go to see during the weekly expiries or even during monthly expiries, you have straddles which used to have a time decay and they used to come somewhere around 10 to 15 bips of the spot. Right now, the straddles are trading at 80 bips. There is no time decay which is happening, theta decay which is happening because it has become a black box where the expiry will come.
That's
one way to put it. All right.
It's like a dark room with your eyes blindfolded.
Absolutely. So I'm still not able to understand how a 10 crore or even in NSE, if you go to see the closing auction volume was 1200 crore.
But what's the way around this, Manjari? What's the way around this?
I think we need to have a very strong SLPM market which gets developed before we actually get into this, because till you don't have volumes, you really can't play around with expiries, because the F&O market is 100x of what cash market is.
Yeah, that's true.
So, and as far as someone pointed out on arbitrage funds, I just wanted to make a note on this. The closing price. So when the arbitrage funds NAV is calculated, you look at the closing price of. So arbitrage funds is definitely they are long stock and short futures.
Yeah.
Now, if your NAV gets matched to long stock, which is closing at around 90 bips higher compared to futures, you will always show a gain of 70 to 80 bips on arbitrage funds, but that's not something which can get realized. Because your cash price is getting closed on your closing auction price, whereas futures are not matching the closing auction price. The futures are absolutely trading where it was trading at 315.
Wow.
And that is a price variation you will see in weekly options and monthly options. So like last weekly expiry of Nifty, you will see that the weekly options were random.
True.
But the second week option and monthly options were actually trading at a price of 350. They were just not moving.
Manjari, we invite you to the studios. It'll be great to do this maybe a week or 2 weeks later, wherein we can actually make a set of problems currently with this system and what the simple solutions could be. I mean, the whole SLBM system getting developed is probably some time away, but be that as it may, at least there are simple solutions. But it's fantastic talking to you today. Thank you so much and giving us an experienced hand view of what is currently going on. Really appreciate your time.
Thanks a lot. Thank you. Nice talking.
Our pleasure entirely.
All right, Alex.
So for somebody who's getting a front row seat to how this is working, right?
Exactly.
That's the real problem.
That's the real problem. We wrap it up on this leg of this special show. Thanks so much for joining in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933, बरसों से सरसों। कुछ तो बात है इस दिल में।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit. The Nifty continues to remain largely flat, not much of a movement. On the sectoral side is the Nifty PSU Bank Index, which is up nearly 1.4% in trade, followed by Nifty Small Cap. On the losing side, we have the Nifty Real Estate Index, which is down around 1.1%, followed by Nifty Auto, which is down around 1% in trade. Nifty Metal, that's down around 0.8%. But one number that has come on screen, the Nifty number, trend. Now, if you look at the revenue, it has come in at close to 5,666 crore. The EBITDA number, that stands around, I believe, the EBITDA number stands around 1,110 crore, largely in line with what the street was expecting. In fact, 100 crore beat on that front. Margins have come in at close to 19.6%, and that's a strong number actually on the EBITDA front. But let's listen into what the Biocon management has to say on their Q1 earnings.
How would you actually decode the first quarter in terms of what has worked and what has not worked?
Thank you, Hiral, for having me on your show. Always a pleasure, like you said. This is a resilient performance, is what I would say. Very strong. The first quarter after we integrated the biosimilars and generics business. So it's an important quarter for us as we put these two businesses together. What you're trying to integrate is two businesses where we wanted to see the operating synergies starting to play in. And that's what you've seen in the numbers. Strong, robust growth on the top line on both biosimilars and on generics, which was very good to see. A focus on profitability, which was something very important to make that turnaround that we were focused on. And a very clear signal to see that the lowering of interest costs that we were expecting to see, which is all translated to the bottom line, and hence the 4 times increase in the profit that was reported. So I would say a very strong start, but I would refrain from going that far and say it's a resilient start, and then we'll get progressively better as we get through fiscal 27.
Right. Shreyas, absolutely point taken, with regards to biosimilars and generic business growth as well. However, a couple of points that have been highlighted on the negative side, which would be great to get a clarification from you as well for the investors, is the research service business that has continued to remain weak. When are you expecting a turnaround over there? And in terms of revenue contribution and the strategy that you have there, how are you looking at it?
I mean, what's a conversation if there isn't something that makes the other side look better? So I think it's important to first note that the biopharma business contributes a sizable chunk. It's an 83% contribution in the overall Biocon umbrella. The research services is less than 20%. It's around 17% this quarter. A small part of our business, but a significant one. Syngene's really had a tough quarter. We've talked about it as Syngene went through their earnings call. They are in a bit of a rebuild stage, like their executive chairperson talked about. They've lost their way, as she said in her words, and they're in the process of rebuilding that momentum as it actually gets together to a stronger second half as compared to what they are seeing in the first half. So a new management team in place, new leadership team, focus on doing what is good for the business. I think getting the basics right, just like we've done in the biopharma business, where the generics business had a similar challenge where we were required to focus on the basics. And I think what you're starting to see is that turnaround. So I would expect the services business also to start showing that turnaround towards the later part of this year.
Okay. The other thing that I want to talk to you about is the higher OPEX, the depreciation which has been higher, other income has been lower this time around, and the company has actually recorded a net tax credit during the quarter, because if that was not there, the miss on the PAT with regards to what the street was estimating would have been much higher, right? If you have to summate all of these 2 points and give a reference point as to what's going wrong there, and is there any, I wouldn't say course correction, but is there a trajectory that you're looking at on these metrics?
Yeah, I'll probably categorize it slightly different than what you've done, and probably consensus estimates to where we are is not too far in terms of where we've been clearly on the biopharma side of the business. Syngene, probably there was a little bit of a disappointment in terms of what was guided and what actually turned out. And that was discussed at length when Syngene did their earnings. And since then, I think there's been a while before we've reported numbers as a consolidated Biocon. But there's probably been very limited deviation in terms of consensus expectation to what the biopharma business was expected to deliver. 2, 3 important metric that I would draw your attention to is one of the key things that's happened is interest costs have trended lower than before. So if you were to even account for the rupee depreciation, those costs have trended from 280 or to 210 in that range from crores. And that's when you have a dollar denominated debt payback and you're looking at it from a rupee lens. So that's an absolute reduction of almost 22%. So there's clearly a reduction year on year, which we had projected. We are saying that there would be a 300 crore drop in interest costs, and you would start seeing that. And that's starting to play in the numbers. So that's number one. The other metric you talked about was depreciation. And as we capitalize facilities which will play through, you will see some of these costs come in. And which is why the focus on the generic side, which is where we had built some facilities in anticipation of demand, the focus has been in greater utilization of these facilities on a profitable supply of products. And that's what you're starting to see, which is why the generics profitability has turned around significantly from a EBITDA margin, which was significantly lower to what you're seeing this quarter. So I think the key metric, whether it was on the interest cost, the depreciation, or whether it was on the operational occupancy of some of the capital which was unutilized, I think has started to make a change. Now, I want to remind you that this is still the first quarter after we've integrated the business on the biopharma side. So things will progressively get better. Just to see that in the first quarter and to see things move in the positive direction, I think is a good sign of things to come.
Absolutely. Shreyas, biosimilars and US markets. Now, North America does remain the largest market. So how are the dynamics in terms of pricing evolving when you talk about biosimilars? And are you seeing any signs of competitive intensity there?
Yeah, I mean, I would say pricing is always an outcome of competition, and you would see that, and we've always welcomed it from a very early time. So we're not really looking at competition being a deterrent in that sense. Now, North America, from a mix perspective, we've always been very, very well geographically diversified in terms of our business. We used to be 40% North America, 35% Europe, and 25% in emerging markets. And this keeps changing a little bit. If you look at this particular quarter, growth was driven by sales in North America. So that 40s moved up to 45 this particular quarter. And as a consequence, you've seen Europe drop from 35 to 32 and emerging markets at 23. So you would see these internal redistributions a bit on a quarter by quarter basis. And as you see new launches, which we've talked about, again, we're very, very confident in terms of how these new launches will play out. You could see the North America region contribute a little bit more than what the other regions have. But then as you look at it over a longer window, they would tend to kind of settle down in a well-diversified manner.
I'm sure, the street is watching out for, the traction with regards to Bosaya or Kelso as well as Yesafili. But, now that the business is moving towards higher margin biosimilars which are gaining share, right? Is there scope for further margin expansion, or do you think increased R&D investments could actually offset those kind of gains?
Yeah, first up, I must compliment you for pronouncing those tongue twisters, and those are not easy to do, and that was well done. I think the important thing is, as you bring in new products and you launch them into high margin geographies, you expect them to improve your EBITDA contributions, and that's a fair expectation, and I think that will happen. It will also then offset some of the price erosion that you also expect to see, because when competition builds, like I said, pricing and margins are an outcome of competition, and that will happen. So legacy products will see price erosion, and new product launches will help offset some of that. Now, your question was on pertaining to whether R&D costs will increase, and that this will help offset that. We've always maintained that R&D costs, or R&D investments as we call them, would be in the region of 7% of revenues. And as revenues continue to ramp, and they've ramped up double digit in the past few years from a CAGR perspective, there's a sizable investment we've continued to make in R&D. So we don't see that 7% change significantly to move between quarters, but on a full year basis, 4-quarter basis, you would find us probably in the same range. So it's unlikely that we will see that changing significantly, and certainly not likely to have an impact on our overall expectation of a mid-20s EBITDA margin.
Well, Westside came out with their numbers. Let's get in Mahima to understand how the quarter has been for Trent.
So, Somit, overall, if you take a look at the numbers, revenue numbers, of course, we knew at that 19% growth at that 5,666 odd crore. The stock did touch an high of interesting more than 3% and has come off significantly off the high point of the day. But if you take a look at the numbers per se, prima facie, EBITDA is a beat. PAT is also a beat in terms of where the numbers go. Your net profit has come in at 532 odd crores versus that of an estimate of 501 crore. In terms of EBITDA, the estimated number was 1010, but it's come in slightly better at that 1110 number. And margins is where the real beat has come in from, because that has come in at 19.6% versus that of an estimate of around 17.5%. So, overall, prima facie EBITDA and PAT numbers seem to be, slightly ahead of the estimates, but I think the fine print could be in the numbers in terms of like-for-like growth for fashion portfolio was in low single digits. That's something probably that the street is not liked, because when the numbers came, the stock spiked. But post the presentation, this low single digit growth in terms of fashion is something that probably the street is not liking. The emerging categories, including beauty, personal care, innerwear, footwear, have contributed around 21% to the revenues. Zudio, 22 stores were opened and 3 consolidated in the quarter as well. And Westside is where we also talked about this in Q1, that the growth, the store growth was not up to the mark, and that is why we had seen pressure on the counter, and that could also be one of the reasons as to why we're seeing the stock tanking as well. So this is the first cut of as to how Trent numbers have panned out, but the stock has come off significantly from the high point of the day.
So weak store addition is the reason why the stock has declined from the day's highest point, now down around 1%. But from the day's high point, if you look at the stock, is down nearly 3 to 4 odd % in trade. But moving on to the new kid on the block, Shiprocket is in focus after the company's IPO is around the corner to open for subscription. My colleague Nimit had an interesting conversation with Sahil Goyal, the Managing Director and Chief Executive Officer, and Tanmay Kumar as well, the CFO of the company. Let's listen to the bite.
Sahil and Tanmay, thank you for taking the time. Congratulations. It's been a long journey for you all since it's been over a year that you've been planning this. I'm sure it's longer that you've been planning this. First, let's address the elephant in the room. You've had an OFS cut about 30%. Market experts say that the valuation cut is also about 30% approximately. Was this a sort of public market reset in terms of your valuation and your OFS cut? What happened there from 2025 to now when you're going public?
So, fair question. I think when we think about our company, right, what is our focus? Our focus is on building a business, right? Valuation is a market outcome, right? It depends on what the investors value it as, right? And private valuations work differently from public valuations. But in the life of a company that is thinking about the next 10 years, this is just a sort of a step, right? And our company is cash making, correct? So for us, it's not like we need the money to, necessarily, we're not burning money as a company. So I think for us, it made sense to basically, optimize for the quality and for the long term, right? And the market discovers the price.
So when you went through your roadshow process, you didn't see any sort of, like the market is generally seeing, there's been a public market rebuke of large valuations. It also depends on how you place yourself. You're somewhere in the middle of a physical carrier logistics company and a technology company which you're pivoting towards. How did the market sort of see you? Do they look at you as a tech company? Do they look at you as a logistics player?
See, we have no assets, right? So if we are enabling logistics along with a bunch of other things for our merchants, that is what we are, right? So people can put whatever label they want, that's up to them, right? But essentially we are solving problems for our merchants, right? And there are over 200,000 of them, and in India there are like 6 crore of them. So I think the point is that labels change with time, right? Because anything which is new can be boxed into whatever people can understand today. But in reality, we don't own any assets at all, right? So we integrate into existing supply, right, and make it possible for the small merchant who otherwise was not able to do it. So that's what the company is focused on.
So how do you place yourselves then? Because if you look at your RHP and your financials, about 75% of your revenue still is tied to your physical delivery, right? 25 is coming from your emerging businesses and the new products that you're launching as a software company. Now there are two sets of markets there, right? You're a logistics enabler, of course, not exactly what the shadow faxes of the world are doing, where they own their own assets. Also not the unicommerces of the world, which are pure play SaaS AI products. So how do you place yourselves there, and how does that growth look going forwards? Are you going more towards the 25%, looking for that to grow, or are you still going to be anchoring on the 75%, which is your physical logistical support delivery?
See, I think it's all one transaction, right? So somebody orders something online, they have to run an ad as a merchant, then they have to process a order, and then they have to ship the order, correct? We started with the shipping part, and then over time found that the merchant was having problems across the value chain. That's how the core and the emerging segments have arrived. So, to kind of think about how this happens over time is a function of how merchants start to consume the services, right? So it's difficult to, try and put a number here, because it's one set of orders going through the system, right? And the merchants have problems across the stack. And we started to solve upstream in the stack in the recent years.
Well, shifting focus to another small cap counter, that's SEPC. Now they have announced an order win of nearly 855 odd crore rupees. Now that's quite odd for a company which has a market capitalization of 1,000 odd crore. So what is the size of the order, for what time period, what does it mean for the company? Let's get in path with more details on the same.
Well, the stock has gained over 10% in the last 2 sessions and has touched the highest level in 22 sessions, and that is because of that big order win. They have won an order of 854 crores from Steel Authority of India. The biggest thing is that this order equals to almost 70% of their market capitalization. It includes the civil and structure works for sales pellet plant for their 4.08 MTPA capacity expansion work that they are doing. This order will be executed over the period of next 32 months. If if we talk about the financials of SEPC in FY26, their revenue had crossed 1,000 crores for the first time. Also, their PAT has more than doubled in FY26. Their order book stands at 10,000 crores, and management had highlighted record inflows during FY26. So now with SAIL becoming a key client for the company and their expansion plans in Abu Dhabi as well, let's see how quickly they are able to execute this huge order book.
Right. Well, moving on to Arun, let's get in the executive chairman and managing director of Wonderla Holidays. Sir, firstly, congratulations on a strong set of numbers here coming in. But my first question to start off with you would be on this quarter was led, I believe, by the Chennai park performance. But how can the Chennai park performance sustain going forward?
Thanks for having me on the show. Yes, Chennai Park for us did about totally about 45 crores of revenue and 2.5 lakhs of footfalls in the first quarter, and we are expecting that. That's a very strong start for a new park which is barely 6 months old, almost beating our oldest park in Kochi. So we are very bullish on Chennai, and I think it will continue in the same way and give us a good footfall for the remainder of the year. But having said that, it's still a new market for us. We are still learning the market, and we hope that it will perform up to better than expectations. So far it has, and we hope that it will continue.
Okay. Any new park announcement that we can expect? Any timelines on that front? If you could share some details, sir.
Yes, we are looking at multiple geographies to launch a new park. So top of the list would be for us Maharashtra. We are looking at Gujarat, and we are looking at the NCR region. So we will be announcing something before the end of the calendar year. I think we've been working on this for the last year or so. So I think we will be able to finalize this for the end of the year.
And when it comes to the non-ticket revenue, can you just share with us how much they contribute to the total revenue, and where do you see this to be, say, over the next couple of years?
So non-ticket revenue currently for us is about 30 to 35% of our revenues. We're expecting that to grow to about 35 to 40% as we add more resorts and as we have more means of expanding our NTR. We are on track, and I think it's grown, and it's grown profitably as well.
Okay. And when it comes to mature parks, what is the kind of footfall growth that you're expecting to come in from these ones?
We are expecting a single-digit kind of growth. We have done about, I think, 7% growth in the last quarter. We expect that momentum to continue for the remainder of the year. Some quarters it might change, but I think overall we are kind of bullish on the older parks as well. And ARPU has also grown by another 7%. So between the two, I think we were able to grow about 15% in the last quarter. We hope that will continue for the remainder of the year.
And so if you could share with us any guidance on the full year performance that you're internally targeting for revenue and EBITDA?
We don't do forward-looking guidance. So we are expecting, like I said, about single-digit growth in footfall in our existing parks. And then Chennai should, we are targeting between 7 and 8 lakh footfalls, but it could, beat that as well. So, and this will be on top of the additional, the old parks. And we are also expecting our resort revenues to kind of double this financial year.
Okay, what is the revenue coming in from the resort segment? If you could share that number as well.
Roughly between 5 and 6%.
5 and 6%, and that could go up to 12%, or the absolute number will increase.
The number will increase.
Okay. And on the capital expenditure side, what is the kind of capex that you have targeted for, say, FY27 and FY28 as well?
So FY27, we don't have much capex. We are looking at roughly maybe 30 CR of capex this year. But next financial year, when we announce a new project, and then we have a few other initiatives also being lined up, we might look at adding a new park in a large city. So that will entail a large capex, and we are fairly well capitalized. We do have cash on books. We'll be able to fund all future expansion without any equity dilution. We might take some debt on books maybe later on next year or the year after next. But the way it's going, I don't think we'll even need that. So yeah, we are quite well poised to grow into a new location as well.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
PMark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, and this is, of course, the afternoon edition of the show. Before we start taking those queries, you can send them on the number that is flashing on the top of your screen. Call us on the landline number to speak to our guests too on those stock-related queries. But a very quick check of how the market's doing. It's been a day which has been interesting, dominated by news flows, but you're absolutely seeing no moves, any such at this point of time on the Nifty 50. Pull up the Sensex also very quickly, because today is the expiry for the Sensex, and generally, while we don't talk about it too much, today it's important because you are seeing those new regulations with the CAS coming through, and you are expecting some volatility to come through as well, and hence this index becomes very important today. It's the first expiry with these new regulations that have come through, and hence we will be tracking all those moves. Pull up the heat map for the Nifty 50 also. That is the other important factor, because you've seen some results come through during the day. Trend was one in terms of the heat map and for the Nifty 50, but you're not seeing too much of a runway reaction. You're seeing actually a downtake of almost 2% right now on the stock, while Power Grid is the top loser, for the Nifty 50 at this point of time. Reliance though has surged to a 3% up move for the day. SBI before earnings tomorrow is showing some good moves, and so is BEL at this point of time. Also important is the sectoral heat map. Now, as I mentioned, there's not been a structural trend being formed as such, which helps any particular one sector, but you're seeing some moves come through on the India Defence Fund, and it's also led by what we spoke about on BEL being the top gainer. You're seeing some pressure today on Realty as well as on Nifty Auto. That index is down, while the Nifty IT is down by 0.6% right now. Advanced decline ratio is the other important factor. Very interesting there yet again, because almost the day dominated by 1500 odd advances that were in fray. Slight inch down, but what you have seen is both those converging now at this point of time, and hence the last 90 minutes of the trade becomes very important. So is the mid cap and small cap index, reflecting this NSE stat that we are showing you on your screen right now, and hence very important. So mid cap 150 down 0.15. Yesterday as well it was a similar trajectory, that the mid cap 150 was down, the small cap 250 was up, playing out today as well. Finally, for some individual movers that you continue to monitor, and since we are in the fag end of the results season, you're seeing a lot more results reaction coming through. FSL was one, Sheela Foam was another one where you see some reaction, and PNC Infratech, there was some news flow yesterday that NHK might have that ruling might have some impact because of what we saw in the Kanpur-Lucknow Expressway incident. Stock didn't react too much early on. Clarification came through by the company, now down 6%. Mazgon is the other one, GMM Fodler, as well as Naveen Fluorine, that we'll focus more on in the next show. But let me welcome in our guest, Jatin Gedia. He's at VP Technical Research at Teji Mandi, as well as Jash Shah, who's the Fundamental Research Analyst from Latin Manhala Securities. Gentlemen, both of you, thanks so much for joining in. Let me start taking the first stock-related query. This one comes in, on Poonawalla FinCorp. Our viewer has bought these shares at 380. He wants to know if he should continue to hold this for the long term. Jash, very good afternoon. What's your view?
Thank you for having me on the show. He should hold for now, because all the macros are looking good. The lending companies are good. It should do well.
He should do good. And what could be some of the targets to watch out for? Because he's in good gains right now. So any targets that you have for the next 1 year or so?
At least 20%, but it can go further also, because the cycle is reviving now. So definitely a hold.
Got it. Aswini from Chennai is the next person who sent us the query. Between PN Gadgil as well as Kalyan Jewellers, what's a better stock to enter now as well? Jatin, very good afternoon. Thank you for joining in. Which one would be your pick between the two? We of course saw a very big move on Kalyan post the quarterly update, not so much after the result, but either of those that you like right now?
Technically, I think PN Gadgil has a better structure as compared to Kalyan Jewellers. Yes, recently the stock has witnessed some pullback towards its averages of 635 to 620, but overall the trend is positive, and hence we believe that PN Gadgil can be considered as a buy at current levels. On the upside, we are expecting levels of 720, 735. Stop loss should be placed at 600.
Got your view. The next one coming through, and this one's on Ultratech Cement. Our viewer Anil Nair, who's from Abu Dhabi, has been holding the share at 12,300 odd rupees for the last 1 year, mentioning that it's been stagnant for the last year or so. And Judge, despite good earnings, not seeing too much reaction on the stock. Would you recommend him to continue holding or exit?
I would recommend continue holding, because the infra space is going to pick up moving forward, and we'll definitely see some mean revision in the price as well.
Got it. The next one coming through, and this one's on Borosil Renewables. Sundar, who's from Madurai, is asking this question, wants to know if it's a good time to enter for the long term. Any view here, Jash?
Bullish on the solar theme, but I would recommend to buy on dips, not just enter completely.
Got it. Let's also just address the flash on the bottom of the screen as well. This is the retail sales data. It generally comes in the morning on the particular date, but for today, FADA has released the data just right now. You have seen good momentum come through in the month of July, and that was visible both in the wholesale, but now this is the actual sales that we are seeing as well. So the overall sales have come in at a very strong growth of 26%. Two-wheelers have had a runway growth up 28% just in the month of July. Three-wheelers also post the GST rate cuts have become more attractive, and hence that pile continues, while the passenger car segment has grown by almost 19%. CVs up 24%, and finally the tractor segment also that has shown good growth of those high teens that we continue to monitor. So within those segments, you've seen all kind of good, strong growth. We'll of course get you more commentary that FADA also puts out regarding the dealer survey, so we'll get you those comments too. But for now, the retail sales data for the month, of course, we had some indication led by Vahan, but officially looks a very strong picture for the industry as a whole. Let me go across and take the next question now, and this one's on United Spirits. Our viewer Gautam, who's from USA, wants to know if it's a good time to enter this counter yet again for the long term. What would you suggest here, Josh? How are you looking at this counter?
United Spirits, I think you should avoid right now. The numbers will be good, but there's a lot of the consumption patterns are changing. So I think you should wait and watch and then buy later.
Buy later, got it. Let's go across to Bengaluru now. Kaushik, has picked up the call, given us a call as well. Kaushik, very good afternoon. Thank you for joining in. What's your query?
Hi, sir.
Hi, Kaushik. Go ahead with your query.
Trend stock in 52 stock hold in 2,800 average price. Seller, what's our price? Technical analysis, sir.
Got it. Jatin, we just saw the results come through, and I think hence we had seen that big spike, and that has receded through now. But what are you looking on the charts?
Yeah, so technically the stock trend is in a broad range of 3,400 to 2,800 on the side. So that's a 600-point range within which it is consolidating since the last 3 to 4 weeks. So today, post the announcement, it did see a spike towards 30 to 50. However, it wasn't able to sustain at those levels. So I believe that it will consolidate between 3,300 and 2,900 from a short-term perspective. If he's holding, then continue to hold with a trailing stop loss at 2,900.
Got it. Well, and that's the view coming in on Trent as well. Josh, I don't know it because the results just came through about a half an hour back, but I don't know if you had a chance to look at them. If any, what's your view?
I did manage to have a look. I think it's a good proposition, but the comment I did manage to have given is for the future growth data. So that is why I think the stock has reacted slightly negatively. You might have a better proposition in DMart also, but Trent as an individual also, I think for a longer term is a very good stock.
Yeah, Josh, I think we'll come back to you because I think we lost your audio in the middle. Probably get that checked in, then get your view yet again on Trent. But the next question coming through, and this one's on Wonderla Holidays. Actually, we just had the management in the previous show, but and probably that's why Karthikeyan, who's from Kerala, wants to know about this counter on the technical side of things. Any view here, Jatin? Because it's not a very big mover in that sense, but how is the charts looking for Wonderla?
The overall short to medium term trend is still negative, and in fact whatever pullback that we saw during the week has fizzled out exactly at the 200-day moving average, which was around 520. So until and unless the level of 520 is breached decisively on the upside, we can expect the weakness to continue. So those who are holding, use this pullback to exit the counter.
Got I think we have Josh yet again. Josh, if you can complete your point on Trent, what's your view?
Yeah, so I did manage to see the result. I'm fairly positive on the Trent commentary, and I think for a longer term, it's a very good stock to hold because they have given big numbers in commentary.
Got it. Well, the next one's coming from Kameshwar Rao. He wants to have fresh entry into Indian Bank for the long term. Josh, any view on Indian Bank? How are you looking at the PSU banking space, and does Indian Bank come back into favor in that sense?
I'm liking the PSU banking sector more than the private banks right now. The valuations are also attractive, so it's definitely a buy. You can enter.
You can enter. Got it. The next question coming through, and this one's from M. Ahmad on Techno Electric. He bought these shares at roughly around 1100 rupees per share about a month ago, and wants to know if he should continue to hold an average down. So I think he bought it probably just when you saw the result reaction of Q4 on the company. But Jatin, on the charts, what can you suggest, and what's visible right now?
See, overall, if we see the monthly charts on a higher time frame, the stock is forming a triangle pattern. It is within the last leg of that pattern. I'm expecting a dip towards 900, and thereafter only we can expect the next leg of the up move to resume. So he can continue to hold with a stop loss placed at 880.
880. Got it. The next one's coming through, and viewers, you can call us for your stock related queries. This one is from Prashant, who's holding Gravita, bought at 1713. His question being, he's been holding on for a while, charts are looking weak, but he wants a fundamental opinion at this point of time. So just coming back to you on the Gravita, any view?
I'm not covering that stock at the moment.
Jatin, anything on the charts that suggests some up move, because he's bought it, I think, very recently. It's trading at close to the current market price. So how are you looking at this one?
See, Gravita is in the process of forming an inverted head and shoulders pattern, as I can see on the weekly chart. So this underperformance that the stock has seen is likely to reverse in the near term. A breakout above 1800 to 1820 on the upside would confirm the breakout from an inverted head and shoulders pattern. So my suggestion would be to continue to hold with a trailing stop loss at 1575.
1575. Got it. Well, let's go across to Jaipur now. Mandeep, is giving us a call. Mandeep, very good afternoon. What's your query?
Good afternoon, sir. Thank you for taking my query. I have purchased Sundaram Fasteners after Q1 results at 1014 and 10 shares for a long-term view. At least all-time high is my target. So wanted to know your expert guidance. Thank you.
Well, thanks for calling, Mandeep. Yet again, it's just a smaller counter within the larger auto ancillary space. We've seen multiple moves come in on multiple key stocks. Sundaram Fasteners, any coverage, any view that you have?
I am positive on the stock, but I would say it will remain volatile because we have seen a lot of orders being, they are getting a lot of orders, the valuations, everything is priced in. So I think we'll see some volatility over there. But as a stock, it is good. You can hold on.
Hold on, got it. Well, the next question, it's coming through, and this one's on KNR Construction. Satyam is holding these shares, bought at 240, and stock's been in a downtick actually on the back of weaker results. Today seeing a 5.5% uptake, but he wants to know if he should average at this point of time. Jatin, been a weaker counter. What's your view?
Yeah, see, actually the counter is weak, but it is near the recent pullback that we saw. It is nearing the level of 144, 145, where we have the 200-day moving average as a resistance. So my suggestion would be to only buy or average if the counter manages to sustain above 145, 146 levels, because any pullbacks towards this average are being sold into. So no averaging only above 145, 146 levels.
Okay, got it. 145 or 46 could be a good level to look at this counter. Got it. Well, the next one, and this one's on from Satyan from Palakkad. He wants to know about Kansai Nerolac. Stock, came out with results this week, but he wants a 2-year view. So just coming back to you, we've seen a lot of competition, in that space, right, in the paint space, from both the listed as well as the unlisted side of things. How are you looking at Kansai in that lens?
So most of the paint companies have said that there's a good commentary from the rural side. So the order inflow and the revenue will be up, but all eyes on the crude, that is the raw material. If it is below our $85 mark, it is good. Otherwise, they'll take a good hit on their margins in the future. So I would say be cautious with whatever call you take.
Got it. Raj has actually written to us for Lodha. He wants to take a fresh entry into this counter, Jatin. What would be a stop loss as his question?
Macro tech developers or the reality space is looking good from a near-term perspective. If he has bought at current levels, then the ideal stop loss should be placed at 1120, which is the 40-day average.
Got it. The next question, and this one is a caller query now coming through from Hyderabad. Sandeep has a stock query for us. Sandeep, good afternoon. What's your query?
Yes, hi, good afternoon. I'm regular watching of NDTV Profit. I have a query on MCX. Will the MCX reach 2,700 in next 2 trading sessions?
Wow, okay. Firstly, thank you so much, Sandeep, for being a regular viewer. But Jatin, it's always a challenge to answer certain queries on the show. I think this is one of them. How are you looking at MCX and a 2-day time frame if it can reach that 2,700 mark?
See, from a 2-day perspective, I believe that the trend for the stock is still negative. Yeah, today it is up, but for levels of 2,700 to come, it needs to surpass yesterday's high, which was around 2,678. So if 2,678 is surpassed, then we could see a near-term reversal, which could last up to 2,700 and even above that 2,740 on the upside.
Got it. Well, let's now start with the rapid fire round in this edition of the show. Jatin as well as Josh, request you to keep your answers as short as possible so that we can take as many queries in the next 4 minutes. The first question is on Sigma Advanced Systems. Jatin, this has been a one-way up move, and Nandgopal wants to know if it's still a good time to enter now. What would be your opinion?
This pullback that we have seen considered as is at a buying opportunity. Stop loss 46, upside target 55. 55,
got it. Jatin, because the stock's trading at almost 700 odd, I just want to ensure if we're both talking about the same one. Sigma Advanced System is the one I'm talking about, and let me look up the code as well for you. The code is SIGMAADV on NSE. Stock's trading at 706 odd.
Yeah, see, overall the trend is positive for the stock. Continue to hold with a trailing stop loss at 676. Upside target is 768.
Got it. And no fresh entry at this point?
Yes, you can buy. The overall trend is still positive. Keep a trailing stop loss at 680.
Got it. Next one's on GVTND. Raman from Bengaluru is holding 3 shares at 5,230. Wants to know, Josh, if he should continue to hold for the long term?
Yes, hold.
And can he buy more since his buying price is 5,230? Stock's almost down 1,000 points from there.
I think we can buy.
He can buy, got it. Next one coming through, and this one is from Mohan, who is from Coimbatore. Wants to know, he's already holding shares in Ather Energy, Jatin, if it's a good time to sell out and book some profit.
Yeah, I think he can consider booking profit.
Next one coming through, and this one's on BL. Sampath is holding shares at 400, and if it's a good time to add more right now, what's your view, Josh, on this counter?
Buy.
Buy, got it. Next one coming through on VDOL, again a counter we haven't spoken too much about. Our viewer has actually bought these shares at 1568 and wants to know a long-term view. I'm not sure if you have coverage on this, Josh, by any chance.
No, I'm not covering this stock.
Jatin, on VDOL by any chance on the charts?
I would require the code actually.
Okay, you'll require the code. Okay, the code is VWDOL on NSE. Again, I think it's a counter we haven't discussed too much of, so I understand that you might not have it upfront, but just a quick view.
Yeah, so I think VDOL is consolidating between 1370 and 1500. So overall the structure is still bullish, and we are expecting upside, so continue to hold.
Got it. Next one's on Canara Bank. Anurag from Dehradun holding shares at 138. Wants to know how long can he hold on to this counter, Jatin, or should he book out right now?
No, I think continue to hold. Tomorrow we have SBI results. I think that should have a positive rub-off effect on all the PSU banks.
Next one's on RVNL. Prajwal Gowda is holding shares at 423. So he's currently sitting on a loss, and a deep one at that. Any strategy here, Josh? Should he average down? What's your view?
Yeah, you can average down or also shift to a better railway stock.
Okay, better railway stock. Got it. The next one coming through, it's on Motherson, Sumi, and came out with results earlier today. Josh, Narendra wants to know if he can, still continue to hold his shares.
Yes, I'm positive on that. You can hold.
Got it. Next one coming through on Mazgon Dock. Viewer wants to know if it's a good time to book some profit out of this one.
Is that for me?
Yes, just sorry. Yeah, that's for you.
Yeah. He can. Yeah. Defense. You should book some profits because I feel the valuations are stretched.
Yeah.
You get opportunities.
Also, just because he bought it actually at 200 is what he's mentioned almost 8 years ago. So he's on almost 10x in terms of gain. So you're saying it's a good time to book some profit, retain the rest.
So if he's bought at 200, then I think there'll be a very big capital gains. So if he doesn't need the money, he should hold it.
Got it.
Maybe do maybe average it at a dip or something.
Got it. Well, that got your view, and thanks so much for that. That was the last query of the show. Jatin as well as Josh, appreciate your time. We have solved 86 queries, including the morning and the afternoon edition. So appreciate both of you today and your inputs. But viewers, out of time on this show, thank you so much for sending in your queries and watching us. Stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as
and welcome. You're watching India Market Close here at NDTV Profit from the Suzlon studio. And in the last 1 hour of trade is going to be an interesting one. In fact, 1 hour, 10 minutes, because today is expiry and we'll have to see as to how the entire cash thing kind of takes place along with expiry. And this is a weekly expiry that I'm talking about. We did see Tuesday as well, but it'll be an interesting last 1 hour, 20 minutes to watch out for. But quickly, a look as to how the markets are doing at the moment. The Nifty 50 has come off from the day's low point and is trading around the 24,600 levels. An uptick of around 0.15% is what we're seeing on the Nifty 50. Let's try to pull up the contributors and see if things have changed there, because largely we're seeing heavyweights on the green side, and that's what is keeping the Nifty in check. Reliance topping that chart, but not very significantly in terms of point contribution. SBI, ICICI, Eternal are some of the other names that are doing very well. On the flip side, you have Bharti Airtel, which is taking a knock. Power Grid, M&M, TCS are some other names that are putting pressure on the Nifty. Let's try to pull up the Bank Nifty and see as to where that is trading at, because Bank Nifty has also recovered quite a bit from the day's low point and trading almost at the day's high point. We've crossed the 58,000 levels. So to almost 300 points of an uptick is what more than 300 points in fact of an uptick is what we're seeing on the Bank Nifty, up almost 0.6%. In fact, it'll be interesting to see as to what is contributing to these gains. If you can try to pull up the Nifty Bank contributors and see as to what are the names that are contributing to that up move coming in the Bank Nifty. There you go. On the green side, you have SBI and AU Small Finance Bank. SBI is expected to post its numbers tomorrow. It'll be an interesting set to watch out for, but you also have BOB, Canara Bank, PNB. So a lot of public sector banks doing fairly well. But on the flip side, you have something like a Kotak Mahindra, which continues to be under pressure, and somewhat IDFC First and IndusInd as well. But largely banks are doing well. Let's also pull up the sectoral heat map and see as to what that heat map is looking like and what sectors are trending. Defense has been a clear outperformer today. You have a lot of names like HAL doing very well in trade today, up almost 2.9%, 3% almost. PSU banks, like we discussed, are doing very well, up 2% as well. Oil and gas also doing fairly well, with crude prices largely remaining stable. There's also the BFSI as a pack doing very well. But on the flip side, you have auto, which is seeing profit booking. A good rally this sector has seen, but today there's profit booking coming in. Realty is the other one. This sector has its own fair share of topsy-turviness, because today is seeing profit booking of almost 1%. Yesterday it was doing very well. You also have Nifty IT, which continues to be under pressure today, down by about 0.6%. The broader market, though, the mid-cap 150 has turned into the red and is, though not at the day's low point, but still trading with cuts of about 0.2%. And the small cap 250, however, is holding up by about 0.3%. Let's also try to pull up the BSE 500 and see as to what stock-specific names are being witnessed. A lot of defense name, HAL, Mazagon, Cochin Shipyard, all of these doing very well. Navin Fluorine, which is our stock of the day as well, doing fairly well on the back of strong set of numbers for Q1 FY27. Balaji Mines back in green today, though it's seen a lot of profit taking, but today trading 4% higher. But on the flip side, you have something like a Sheela Foam, which is down 8.7%, PNG Health, which is also down by about 4.5%, Bikaji, Godrej Agrovet, some names from the consumption space not doing very well in the broader end of spectrum. Let's quickly pull up the advanced decline ratio lastly to see as to what that ratio is indicating right now. You have around 1400 advances versus 1200 odd declines, and unfortunately that gap between the advance and decline has been narrowing, and that kind of indicates that there is selling pressure in the markets right now, but still somewhat in the favor of the bull is what we are seeing. So that's with regards to where the markets go. But let me welcome in Pankaj Pandey, who's joining us now. Pankaj, a very good afternoon to you, and thank you so much for taking out the time. And I think we also are joined by Rajesh Palviya. Rajesh, a very good afternoon to you as well. Rajesh, I'll quickly come to you first. In terms of where the levels are concerned for the Nifty and the Bank Nifty, and of course today is weekly expiry, considering the first weekly expiry with cash, what do you make of the indexes right now?
Yeah, hi, good afternoon. So Nifty is showing a muted kind of behavior, but overall the kind of breakout which we have already witnessed in the Nifty comfortably holding about 24,500, which is major put-based concentration. So I think trend is likely to exhibit on the bullish side. Any breakout about 24,700, 750 zone can attract more short covering action, and then Nifty can scale further towards 25,000 also. So as 24, 750, 60 zone is the 200-day moving average. So that level needs to break on the higher side to continue further more upside. Till the time we believe that some more consolidation range bound activity is likely to be there in the Nifty, but stock specific action is going to continue as sentiment is on the bullish side, as Nifty is already sustaining about a breakout level of 24,500. For Bank Nifty, 58,100, 200 zone is the major supply zone. Until Bank Nifty not able to take out 58,200, I think here we may see some consolidation in very tight range of 57,700 to 58,200 would be the range for the Bank Nifty. So, but we are holding bullish view for Bank Nifty also. But yes, it's going to be very first day for Sensex weekly option expiry, and it's going to be very interesting. Again, the kind of adjustment post this auction session we have seen in the last 3 days. Nifty has moved up around 0.50% to 0.60% in last three trading sessions. So if the same happens with the Sensex also in today's session, I think again the option writers, option buyer will be end up with the losses. So that needs to be need to watch very carefully, and I think one needs to close their position before 325 when this bids are kicks in for this cash session, so that can prevent
Rajesh, it's been described by one of the people that we spoke to, and good afternoon to the both of you, Rajesh and Pankaj. It's been described by somebody as saying that if you're a derivative trader after 315, it's like being in a black room with a blindfold on.
Correct.
So therefore, it's better to not venture into something like that. Accidents can take place. But having said that, individual stocks that you're liking?
So two themes where we are focusing at this juncture. One is automobile, second is pharma. So from pharma space, I think one can focus on Biocon. Stock is showing a strength post earning, and the way stock is now negotiating with its multiple supply zone, there is a possibility of this breakout to takes place and possible upside towards 455 to 460 we may see in the near term to short term perspective. So Biocon is buy with stop loss of 434. Another stock where we are focusing on the automobile side is Ashok Leyland. Very strong bullish candle in the previous week as well as in this current week also. Looking at the reversal from the lower level, we expect Biocon may extend gain 185 to 190. We are projecting target. On the downside, 172 needs to keep as a stop loss.
Okay, so those are the picks that Rajesh has on his radar.
We should ask Pankaj what he thinks
sure.
as well, because Pankaj, long-term fundamental investors and analysts like yourself as well are mostly sanguine about this, saying that hardly makes a difference, doesn't it?
Correct. But see, I also look after the technical as well.
Okay, then you have problems.
The kind of liquidity which it carries is puzzling, and hopefully let's see how it sort of pans out. But price discovery becomes a challenge. The kind of gap what you see in between bid and ask is significantly high.
Yeah. It is. Okay, but having said that, and before we get into the stock of the day, just an initial view on which earnings have caught your eye. I want to check whether we've managed to capture the stock of the day right. So in case the stock that you have identified lands up being the stock of the day, I'll be very happy. It's to you. Post market hours yesterday, the earnings that have come through, which in your opinion has stood out?
So we are liking, say, the earnings of, say, for example, Timken India, because now this company has expanded capacity. The expanded capacity is operating at 40% kind of a level. and expected to sort of take it to 70 to 80 odd percent kind of a level. So our sense is that from here on, overall, we would expect progressively every quarter numbers should improve. And this stock has seen a fair amount of consolidation. So that is one which is what we're liking. Sadly, a lot of stocks which we track are down, so less on the upside side.
All right. Timken is the one that Pankaj is like, but the stock of the day that we've chosen is Naveen Fluorine, and of course, it has to be the stock of the day because it's trading at the high point of the day, up almost 13%. And we have Puneet joining by to give us a perspective of what's worked this quarter for Naveen Fluorine. Puneet.
Well, thank you for that. It was stellar results for the company, and it's something that we discussed in the morning as well. We've seen a good, almost a 44% uptick in terms of revenue in this quarter. Margins have also sustained through at 34.2% versus 28% on a YY basis. So you've seen a big margin uptick coming through on a YY basis, while profitability also has almost doubled in this quarter to 243 versus 117. But there are multiple aspects about the company that has worked as well. Margin expansion we spoke about, but there has been a structural, segmental, wide growth that we've seen for the company. Now, we've seen that, in terms of the high performance products, which is up 33%, specialty up 48%, and the smaller but newer and exciting division of CDMO up 82% on a YY basis. But you have to also look out for what the company is expecting. They are seeing a 33% kind of a margin profile going forward, plus or minus 1% for the year. And that is again good news. They've also announced a 90 crore capex for the advanced material products. And I just want to focus on this business for a second because the business might scale to the size of the current CDMO scale as well. So hence, you could see another growth vertical form within the company in a very short span of time. They've also mentioned specifically in terms of new capex that will be coming in, and Jefferies actually had a positive view that calling it's another growth engine in the medium term. Finally, they've also actually hiked the target price, and amongst others, other brokerages that have also done so, where they are feeling that the earnings upgrade cycle is continuing for this counter. They are actually mentioning that the valuation, which is a focal point for Naveen Fluorine, is below its average, and hence there could be some more runway growth. Finally, what you have to watch out for is the pipeline. 13 to 14 molecules are in fray for the company in FY26 itself that was commissioned. 30 to 40 in the medium term is what the company has highlighted. And finally, they are also seeing some 10 of those which are in late stage development will be in the business in the next 8 to 12 months. And stocks also up 50% for the past year. So there has been some runway being captured, but a lot of analysts and the street estimating that this runway growth will continue led by earnings.
All right, thanks so much, Puneet, for laying that out for us. Piyush, Pankaj, what would you think about this? Naveen Fluorine, there's a strong set of numbers. The margins have actually contracted on a sequential basis, but really a very good set of numbers in the fourth quarter. So you can't really blame them. 40% or thereabouts margins, if I remember correctly, and they've come down to 35 odd percent. It's still an improvement year on year, and they're adding capacity that would benefit them down the line as well. So is this something that you would consider getting into right now, considering that it's gained quite considerably over the last 6 months?
So, Alex, I forgot to mention Naveen Fluorine is something
that was a test, Pankaj. That was a test.
Yeah. So, see, on the some of the verticals, say for example, HPP vertical. Now, this company is expanding their R32 gas capacity by about 15,000 ton. And our sense is that the gas prices have moved nearly 70-80 odd percent and likely to remain at elevated levels. So benefit will start accruing from say Q3 onwards. CDMO is something where we are expecting about $100 million kind of a revenue going forward. That is what the management has guided. And even on the specialty chemical side, things are looking quite constructive. Yes, the stock has rallied, but our sense is that it has furthermore room left. So we continue to remain very constructive. Given the fact that, see, in the R32 case, it was China who was sort of supplying most of it. And I think the Chinese quota will keep on coming down and Indian players will sort of find favor there. And realizations are expected to be higher. And so all the segments of this company are sort of doing well. Plus, they are venturing into newer segments also in terms of semiconductors. So I think everything is in place for this stock to sort of do well, except for the fact that when you look at from a valuation perspective, I think it's somewhere about 45 times on a forward basis. But our sense is that given the growth rate it is going to maintain, there's still some upside left in the stock.
Still some upside left in the stock despite of that 13% up move that we've seen today at the day's high point, like I said. But moving on, State Bank of India is the one that's expected to report its Q1 earnings tomorrow, and is expected to be a mixed set of numbers. Let's get in Piyush to understand as to what the key expectations are. Piyush?
Well, that's right. We are seeing that SBI will likely report a double-digit sort of a growth in its advances. In fact, higher teen, 17-18% sort of a growth in advances, particularly led by personal loan, which they call as express loans. Then gold loans, RAM segment is expected to do well. So overall advances in 17-18% YOY sort of a growth. Deposit growth to slightly lag that. OPEX growth will be slightly lower, so it will help that PPOP. Treasury gains will also help the overall profitability in Q4, but because of the seasonality effect, the agri portfolio may see some slippages. So credit cost may see a certain rise. Now, financial metrics, if we see the Bloomberg consensus, the NI is expected to grow at around 13% year on year. The PPOP is expected to be flat almost YOY at 30,403 crore. The NIM is expected to be at 2.77%, which is lower than 2.90% in the same period last quarter, and even lower than the last Q4 FY26 as well. The GNPA ratio and NNPA ratio are broadly likely to inch up by 10 bips and 1 bips respectively YOY if we see. And the key monitorables will of course remain on what is the guidance on margins, net interest margin, how will the banks see the transition to ECL model, and finally how much deposits has the bank garnered under the FCNRB deposit scheme.
Quite a few points to pay attention to. Piyush, thanks so much for joining in and for giving us that heads up. Nyanada Vaidya, a research analyst at Axis Direct, is joining us right now to talk about the expectations. The stock at the high point of the day in anticipation of those numbers. Nyanada, from the numbers that my colleague Piyush just laid out, do they more or less match with your own expectations, or do you have a divergent view on any of these?
Hi, good afternoon. So from a credit growth standpoint, we believe that SBI should deliver credit growth largely in line with what the system has delivered, at least by end of June. So 17 to 18% is what we are built in. Deposit growth will definitely lag. Somewhere between 10 to 11% is what we're looking at. A contrary view would be on margins. We've built in slightly stable margins. For this quarter, Q4 saw an exceptional drop in margins, because of which that also weighed on the stock's performance. Overall, a decent set of numbers. Margin would definitely remain a key monitorable. We don't see much stress on asset quality either, at least from the West Asia standpoint. But of course, seasonal agri slippages will be visible in this quarter. Yeah.
Okay. The other, hi, Mahima joining in. You mentioned about the margins. That's where, largely a lot of other analysts are also concerned about. But do you think that the pressure on the margins that could be witnessed should be bottomed out this quarter, or there's more pressure to, kind of continue going forward in going forward, Q2 and Q3 as well? What do you make of that?
Right. So the pressure on margins was mainly because of the thinner spreads that we saw on corporate loans in this quarter. At least for the larger banks, we've seen corporate growth has held up fairly well. So possibly any pressure that's coming in on margins would be from that front. However, the bank has consciously trying to make a move from the thinly priced loans to more MCLR linked loans, where that should support margins to an extent. Of course, CASA will remain a key monitorable, but Q1 we don't expect much momentum on CASA from SBI either. But overall, fairly decent growth in corporate book as well as better growth in the retail book should support margins is what we are looking at for SBI. Yeah.
And Nyanada, what according to you would be a disappointment on the margin? Obviously, we'll talk about a range, But what, according to you, would be a disappointment? Below a certain range, obviously, it would be a disappointment. So, what would that comfortable range be, and what would an outperformance be?
Right. So, of course, a 10 plus basis points contraction in margins would definitely hurt. And it's also hurting the 1% ROA delivery for the bank, because we don't see much support from treasury. Income would be better on a sequential basis, but that's not somewhere we see that a lot of support will come from. To an extent, fee income and credit costs would support, but margin compression of greater than 10 basis points would definitely hurt. Also, that will also kind of derail the guidance that the management has been providing on the domestic margin front of maintaining domestic margins at 3%. So Q1 going down there, it seems like a bigger risk. Yeah.
On the valuations, finally, just to draw this to a close, Nyananda, what's your opinion about how things stand? Because I'm just looking at the year-to-date performance. It's not. I mean, it's up about 10% or so, 10.5% or so. Do you think that there's still room at this level?
Yeah. So on the core book, the stock currently trades at 1.2x. So we believe there is some scope for an upside in SBI, especially given that at the current juncture, we believe that the 1% of ROA delivery will still continue. So for that, we still see some upside. We definitely see some upside in the stock here.
All right. Okay, Dhyananda, thank you so much for taking out the time and giving us that perspective. Key numbers we'll be watching out for. Of course, tomorrow is when SBI posts its numbers. But coming to you, Rajesh, quickly on the charts for SBI trading at the day's high point, do you think there could be a possible entry into this one right now, or wait for the results to come out?
I think ahead of number, the kind of buying interest which we are seeing in the SBI and stock managed to view breakout on the falling trend line on the weekly chart. So it's a sign of, confidence is there on the, trader point of views. And looking at the call concentration, the major call concentration is placed at around at the money strike at 1090. So any move beyond 1090 post number can attract more short covering action, and then stock can extend gain towards 1120, 1130 kind of level if something comes on the positive side. But on the other hand, the put writers are taking bets at 1050 zone. That's going to be act as a major support area for any kind of dip comes post earning. So looking at the chart, we hold bullish view till stock is trading above 1050 level, and I think one can hold the position with stop loss with the same stop loss.
3% up, close to 3% up, the second top performer on the benchmark Nifty 50. If you're wondering which that is, stay tuned till after I ask Pankaj what he thinks about SBI, or maybe look at your phone. But having said that, Pankaj, what do you make of SBI at this point? It's 3% higher right now. Is there, in your opinion, room valuation-wise, and what is your anticipation from the numbers?
So Alex can't specifically talk about SBI numbers, it's in compliance, but our sense is that in banking, banks which have lent more on the corporate side have seen dip in the margins. That is what the case we have seen in case of large private sector banks. So for example, HDFC and Axis witnessed an NIM compression of 12 to 14 odd bips, whereas Kotak did not do much of a lending on the corporate side, so their margin is sort of stable. I think smaller banks have been able to preserve margin by lending more on the gold side. Overall sense is that PSU banks might sort of have participated in general on the corporate side. So some bit of a margin compression can't be ruled out. But I think it's more of a technical factor because a lot of commodity prices have gone up. So it's a quarterly phenomenon. Our sense is that BFSI in general is looking good, whether you look at private or PSU counterparts. What we like specifically in PSU Bank is Indian Bank, which is maintaining ROAs of 1.3% and pretty good growth rate and very little volatility on the margin side.
In fact, the entire pack of PSU banks has gotten quite a bit of a tailwind. Union Bank of India is leading the pack up as much as 3.5% higher, close to 3% gains for Indian Bank, followed by State Bank of India and BOB. But I do want to talk about Reliance Industries, which is the top gainer on the Nifty 50, and quickly get a check from Rajesh. Rajesh, on the charts, 3.3%. It's a pop that you're seeing in this heavyweight counter after quite a while. What are you seeing on the charts?
So after a long consolidation, finally stock has shown some uptake, and the kind of move Reliance Industries displaying in today's session. There is a breakout on daily chart. The stock is now surpassed 20-50-day moving average. Looking at the short covering in today's session, I think if it's a sustainable 1300 mark, another 2 to 3% kind of up move we may see in the continuation of this up move. So 1350 to 1370 would be the next level where stock can further scale up. So keep stop loss at 1300 if you're on the long side of trade.
Okay, Somit Sarkar joining us now to tell you about what he's hearing in the dealing room. Somit, a couple of stocks buzzing ahead of the earnings as well. State Bank of India, one of them. Maybe some technical factors at play here. The stock is at the high point of the day. What else are you hearing?
Well, when it comes to State Bank of India, the street is anticipating a good set of numbers, and that was part of our segment few days back as well. And the stock is up 3% just ahead of the numbers. So it will be interesting to see, specifically on the NIM front, whether there's an expansion or if there's a decline, how big is that decline. So that will be important to track, and what is the commentary coming in. But apart from that, few other stocks that dealers have highlighted in trade. Firstly, it's Indegene. There's a block deal of close to around 2 crore shares that took place in trade today. Now dealers indicate that the seller was a private equity fund, while on the buying side, multiple mutual funds have bought in this block deal that came into market today. Credit Access Grameen was the another counter. There was a block deal in this counter as well. Now the buzz on the street is that the promoter was the seller in this case. So keep an eye out for Credit Access Grameen. The bulk deal data would be something important to track in trade today. Then there is Titan and Lupin. There are buy flows on the large HNI and the PMS desk on both these counters. Buzz on the street is that the Q1 numbers could be quite strong for both Titan and Lupin. And when it comes to Shadowfax, there's a buzz of a potential block deal that could happen in this counter, and this block deal could well be a cleanup trade as well. And lastly, when it comes to Cohen's Life, despite a weak set of numbers, the stock is gaining in trade. Now dealers indicate that a large prominent HNI has been accumulating shares in this counter, so keep an eye out for Cohen's Life as well. It could be a turnaround quarter for the company.
Got it. So quite a few on that list. And remember, State Bank of India as well was on the list a couple of days back. So you'll come to know soon enough about how those earnings come through. Let's talk about Goldman Sachs. It has upgraded HAL to a buy and has downgraded Data Patterns to neutral. Interesting updates, both of those. Parth joining in to talk about the key reasons behind that change in stance. Parth?
So two major changes that Goldman has done. They have upgraded HAL to a buy rating and they have downgraded Data Patterns to a neutral rating. On the HAL side, they have said that the execution risks will start easing from September 2026 onwards. And on the Data Patterns side, they have said that Data Patterns has already hit their target price and there are very limited fresh catalysts from now on. They now prefer HAL over BEL in the large cap space, and in the mid cap space Goldman now prefers Astra Microwave over Data Patterns. Let's pull up a rating changes table to get a full context of what things have been done by Goldman, and in the table you'll be able to see that HAL has a new rating of buy, Astra Data Patterns has a new rating of neutral, HAL with a target price of 5,870 rupees, upside potential of 27%, while on the other side Data Patterns has an upside potential of -6%. Now let's understand why HAL has been upgraded by Goldman. Goldman has pointed out that 5 Tejas Mk1A jets are ready and deliveries will start from September 2026 onwards. On the other side, General Electric has committed 20 to 22 engines by December of this year and 30 more next year. So that is going to bring in more revenues for HAL. Also, the new production line that has been set up to fix that engine bottleneck, and that will drive in more orders coming in as well. Also, apart from Tejas, Street is underestimating earnings from HAL, and it will give HAL more numbers coming forward in the quarters. Now, why Data Patterns has been downgraded is that the Q1 EBITDA margin has fallen sharply sharply to 27% from the range of 38 to 40%. So a big downgrade is what we have seen in EBITDA margins. Also, management has cut their guidance in data patterns from 38 to 40% to just 35 to 40% from now on. Also, because of the higher defense PSU orders, the margin expansion is very unlikely going forward for data patterns. In the order book side as well, that is below 1 times the trailing 12 months revenue, so they don't have enough visibility going forward as well. And the stock has already gained 69% from October last year and has already hit the target price of Goldman, so that's why they are now neutral on the stock. And the Q1 EPS estimates that also data patterns underperformed by 49%. So these are the triggers why data patterns has been downgraded and HAL has been upgraded in both the large cap and mid cap space.
Thank you so much for getting us those details on both HAL as well as data patterns. Pankaj, do you agree with this with regards to the margin concern in data patterns for HAL? Do you think the street is kind of underestimating the way it will execute this quarter? What do you think? And what's your view overall on the defense pack as well?
So overall, we like the defense space quite a lot, both private and PSUs. But when you look at the valuation gap between, say, private and PSU, that is significantly high. So, for example, you have HL trading somewhere about 28 times, Bharat Electronics somewhere about 30 times. Compared to that, you have Solar Industries, which is trading 60 times. You have data patterns trading somewhere about 55, 56 times. So obviously, there is a good amount of valuation gap which has been there. I think one thing which is finding favor or which will favor the PSUs more is the overall execution side. So, for example, when you look at HL, I think this year they'll start getting 2 engines on a monthly basis. And that is how the execution will pick up, because this company has been sitting on 2.5 lakh crore kind of order book, nearly 7 times of their sales, last year's sales. So execution is expected to pick up, especially for the fighter aircraft, which is Tejas Mark 1A. Similarly, for Mazagon Dock, now the order book for them is somewhere about 18,000 odd crores. Our sense is that probably some months down the line, we might hear something on the final approval coming for the Project 75I, which is some 90,000 crore kind of order book. So Mazagon Dock can sort of find favor. Bharat Electronics has been already sort of doing well in terms of order inflows plus execution side. I don't subscribe to the perspective of looking at margins or revenues on a quarterly basis, because defense is a bit cyclical from that perspective. So while we like data patterns as well, but yes, the valuation gap plus the better execution on the PSU side, I think will make them more favorable.
All right, so that's the view on the entire defense pack. But Rajesh, what do you make of Titan? It's buzzing ahead of its numbers. Tomorrow is when it's expected to come out with its earnings. But if I'm not wrong, on a parallel channel, not a parallel channel, but a rising channel, it's also given a breakout on a weekly time frame. Do you think it's time to go ahead and buy Titan right now?
Yeah, definitely. It's a trading at all-time high trajectory, and already breakout took place on the channel. Also, weekly, monthly channel already broke out on the higher side. Looking at the breakout and the kind of flow which we are experiencing since last couple of months, stock is making higher high-low formation on monthly, weekly chart. It's a sign of sustained buying action. Possible upside towards 51, 50, 5200 we may see for Titan. So those who are already on the long side of trade and those who wants to buy can buy with stop loss of 49.20.
Okay, all right. So that's the view coming in on Titan. But Brigade Hotel is the other one. It's been a steady quarter with resilient domestic travel demand. That's been the case for all hotel companies. But in fact, I caught up with Nirupa Shankar, the MD of Brigade Hotel Ventures, to discuss how the quarter has gone by, what's the outlook ahead. Listening to what she had to say. My first question to you is going to be about the RevPAR growth that has come in. Largely is driven by pricing. Just want to get more sense in terms of how the new supply that is going to come across for you, because you have a large pipeline lying ahead of you. How much more headroom do you think you have in terms of going more towards the pricing growth? What is the outlook going forward?
Hi, Mahima. Really happy to be on your show and to be speaking with you. So yes, we have had a resilient quarter, all things considered. It's not been without its challenges, I would say.
Right.
But the good thing is we were able to show a 7% ADR growth and a 2% growth in occupancy. So the portfolio is quite stable from an occupancy perspective because it's at around 76%. But I'm really happy that despite the fact that, a lot of the foreign tourists or the foreign travelers could not make it into the country, we lost a bit of business there. We were able to displace that business with domestic demand and still increase the prices by about 7% on average for the portfolio. In terms of the new supply of hotels, see, I think the market has been, or rather the hospitality industry has been extremely resilient because we are so very dependent on all the global macroeconomic environment with people traveling. So there has been a decent amount of disruption, especially when it comes to, say, large MICE businesses. But despite that fact, I still think there's a lot of room for growth. According to me, when it comes to occupancy, for instance, portfolios or hotels should stabilize in the mid 80s. That's a very healthy number. And I would say at least 5 out of our 9 properties have average occupancies in their 80s. So there is room for improvement with the other 4 hotels. And I think a mid 80s percentage is good from an occupancy perspective. From an ADR perspective, of course, it's very demand driven. When the demand is strong, when there's a lot of strong MICE, then of course you can always increase your rates. When there's more foreign travelers, again, they are usually paying higher rates. But I would say there is always room to increase rates because supply doesn't come in very easily. With our new supply, we are entering different micro markets and different cities, so it's not really going to impact our current portfolio. But there is always room to increase. And I'm seeing this whether it's in the leisure markets or in the business markets. The prices are back and demand is slowly reviving. So there is headroom for growth from an ADR perspective as well.
Got it. And speaking about growth, Nirupa, because you plan to double key count over the next few years, right? Give us more perspective as to how, that plan is shaping up for you. In terms of stabilization, also timelines, margins, what will you be expecting over a period of time? Let's say, because FY29 is still when you still go and, expand further, but you'll be also ramping up whatever you're expanding into, right? So give us more sense as to what that plan looks like.
See, currently, if you look at it, first I'll talk about the margin bit because that's something you refer to. So I'm happy to say that even in this Q1, we were able to increase our margins by about 140 basis points compared to the previous Q1 of FY26. See, currently as a portfolio, we're at 35% EBITDA margins. The ADR average is around 7,200. So considering what our ADR is, because a lot of our hotels are in tier 2 markets like Mysore, Kochi, Gift City. So they're, pushing the ADR greater than 7,500. We are inching towards it, but that's our end goal, is to slowly push it up above 7,500 for each of the hotels. But it will take a little bit of time because, those markets are a little softer than the tier 1 markets. However, if you look at it overall, once we start developing, our hotels are getting developed as we speak, but once they start coming into the market, a lot of our portfolio is going to move to the luxury and the 5-star segment. If currently we don't have anything in the luxury segment as it is classified. We have a 5-star deluxe, one 5-star deluxe property, or in some ways it's classified as upper upscale. But our portfolio is going to shift a lot to the luxury and the high-end segment to the extent that, 40% will be in luxury and another 25% will be in the 5-star deluxe category. So almost 60 to 65% will move to the 5-star and the luxury category. So what happens then is you will be able to increase your ADR. And the moment you start increasing your ADR, there's a flow through of at least 80 to 85% to the EBITDA.
Okay.
So when that happens, profitability increases, margins increase, EBITDA increases. So we are expecting the EBITDA to go beyond 40% when the new luxury 5-star hotels come into the portfolio.
Wow.
So we are already starting to add to the portfolio. This year we're adding a smaller property. It's a smaller 45 key property in Chennai as part of the mixed use development. Next year we should be able to add another couple of hotels to the portfolio. And 29, 30 we will start adding more. And we have 9 more hotels coming up. So we're doubling up the portfolio apart from new business development. and they will all start coming into the portfolio majority towards the end of FY29 and FY30. But we will start adding. This year, like I said, we're adding one. Next year, we should be able to add two. Then FY29, we'll be able to add a couple of more. So like that, we will see growth coming into the portfolio FY28 onwards.
Got. All right, so that was Nirupa Shankar of Brigade Hotel Ventures. In fact, by FY29, the premium or the luxury portfolio will go to almost 22% of the overall keys, and 30 to 40,000 average room rate is what is expected on that. So, interesting one to watch out for. The stock is almost flat, but it's time to step into a very, very short break. On the other side, we're going to have a conversation with Nagaraj Shetty and Avinash Gorakshakar. Do stay tuned in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26.
Welcome back. You're watching India Market Close, and you just heard from the management of Brigade Enterprises. We're now joined on this side of the break by Nagaraj Shetty, Senior Technical Research Analyst, HDFC Securities, as well as Avinash Gorakshakar. Gentlemen, good afternoon to you, and thanks so much for taking the time. Before I come to either of you, let's listen to the management of Cummins India, because this is a stock that has taken a bit of a battering in trade today. Of course, it's come off the low point of the day. Listen in.
Now, yes, we have, at the beginning of Q2, we have taken some price increases, and price is quite dependent on market conditions and how market accepts some of the price hikes. We do continue to adjust pricing. We have taken one, and we will continue seeing how the market adjusts to this price increase, and then see how best to manage the cost inflation and the price increases going forward.
But do you think from Q2 onwards we will have the gross margins coming back to the historical levels, almost like we have done in the past, 36-37%? So do you think that this pricing action will result in the impact from Q2 onwards, or will it be a slow grind or reversal on the GPM?
I think the commodity increases at this point in time are very unprecedented than ever in the past. And freight, by the way, as well, has also been a challenge. Freight costs have been increasing. There are continuous supply chain issues that we see and continue to manage. So some of these issues will continue. Price, as I mentioned, we will see how the market reacts to it and they then take some more if needed. Will the margins reach historic level? What I can say is our ability to manage commodity increases, inflation increases, and also trying at the same time to manage our costs. We are getting better at that. So will we be able to improve our margins? Yes. I will not be able to say whether we will hit historic highs or not, because these are unprecedented times in terms of commodity increases and inflation coming at the same time.
Okay. Thank you, Shweta. I just wanted to wish you all the best. I think under your leadership, you have delivered phenomenal returns to the shareholders and created wealth, and hope it will continue post your departure. I wish you all the best.
Thank you so much.
Thank you.
Next question is from the line of Jonas Bhutta from Birla Mutual Fund. Please go ahead.
Okay, so it had a bit of a rocky start to trade, but it has since made up quite a bit of ground. Cummins India. Avinash Gorakshakar with us. Let me just get a view from you, Avinash, on Cummins and indeed the rest of the pack as well. If you were to approach investing in this pack, what is your consideration and what specifically do you think about Cummins?
I think good afternoon, Alex. I think numbers which have come out, Alex, are slightly disappointing, both on the top line as well as on the profitability front. And, from the management commentary, one could get a sense that it's a commentary with guarded optimism. So I think, we'll have to wait for the July to September quarter numbers and see how the company does both in the domestic market as well as the export market. Net, the stock may have, recovered. But the day the numbers were announced, the stock corrected. And I think even today we have seen the stock is under pressure. So I think the markets would like to evaluate, what kind of growth commentary the management has given. And then reassess the kind of earnings numbers which are expected for FY27. So I think net, I think the second quarter and the third quarter is going to be very important. We have a hold on the stock. Longer term, we believe it's a very strong structural story. But in the short term, margin pressure could continue.
Okay, all right. So that's the view coming on Cummins India. Nagaraj, a very good afternoon to you as well. I'll quickly take your outlook on the indices and of course your top picks as well, considering that we do have weekly expiry today.
Yes, good afternoon, Mahima. Yes, market has been in a choppy trend. After a stellar move, last 2-3 sessions, market is consolidating. We have seen declines during the day and sudden market shooting up towards the end during the option session. I think nothing has changed so far, and the trend has not damaged with this kind of a decline last 2-3 sessions. So I'm expecting the near-term trend of the Nifty remains positive, and eventually we could see Nifty heading higher towards 25,000 levels, and at the lower levels, 24,400, 24,300 is going to be a good support. I have 2 stock picks on the longs. First one is from auto ancillary front, Jamna Auto. Jamna Auto has witnessed a sharp breakout of the downsloping trend line technically of the consolidation and gradually moved up over the last few sessions. Currently trading around 144.50. One can look to buy at current market. The immediate target would be around 153. One can place a stop loss at 140. Second one is from a defense side, BEL. Bharat Electronics Limited has witnessed a sharp decline over the last few months, has moved up very well recently after forming an important bottom reversal somewhere around 385 levels. Currently placed at the edge of moving above 400 resistance, just hesitating. I'm expecting a sharp breakout in the short term and currently trading around 399.50, 400. One can look to buy at CMP. The immediate target would be around 422 and one can place a stop loss at 380.
All right, so those are the picks that Nagaraj has on his radar. But Trent is the other one that has posted its earnings, where largely prima facie, if you take a look at the numbers, EBITDA, PAT as well as margins have been, slightly ahead of what the street was expecting. Margins even better than what the street was expecting. But the like-for-like growth is where there was muted growth. The store addition was also on a disappointing front, the West Side store especially, that we gathered in the business update as well. But now we have the store count as well. For fashion portfolio, the like-for-like growth was in low single digits, and that's probably one of the reasons that the street is kind of disappointed, because it went all the way to 3.5% higher. It did come off to negative -5%, and now it's negative 1.5%, and now it's trading around negative with cuts of about 0.5%. In terms of emerging categories, that's been gaining scale, and it'll be interesting to watch out for as to how that segment pans out. Star grocery business has also continued to improve, so that's a silver lining there. But in terms of numbers, revenue 18.5% growth in terms of standalone numbers. EBITDA an uptick of 32%, margins at 19.6%. Though the question really here is whether this kind of margin is sustainable or not for Trent, and net profit a growth of almost 26%. The demand, largely has remained stable on account of, despite of the geopolitical headwinds that we've seen. That's the whole and soul of what's happened with Trent. Nagaraj, quickly,
before you get to that,
on the charts. Okay.
Before you get to that, we just have to mark the fact, and we should get used to this now.
Oh, yeah.
The cash effect, effectively, right? You have the cash closing for F&O stocks, which is kicked in at 315, and the last price or the last value for the benchmark Nifty 50. This is something that we will show you over the course of the next half an hour or so. 24,627.95 is the last tick. Pull up the heat map for the Nifty 50 if we can, and just so that you can see the way that things have closed. Reliance Industries in ascendance, and followed by State Bank of India, BEL, as well as Eternal Titan, Shriram as well. These are the stocks that are gaining ground. Among the heavyweights that are losing ground, you have Tata Consultancy Services, you have Bharti Airtel, both down about 1.5%. You have Bajaj Auto, and quite a few names in the automotive pack that have lost a little bit of ground today. Power Grid Corporation of India losing as much as 4% in trade as well. So that's the long and short of it. You were making a point.
Yeah, so trend is what we were talking about, and largely, the numbers were. It was expected that it is going to be like this, but margins is where the surprise came in from. But Avinash, I'll come to you on what do you make of trend Q1 numbers, and do you think that this year is going to be a year where they do expansion and the growth is going to be around that 20% mark in terms of top line?
Yeah, I think clearly, it looks like, looking at the Q1 numbers, if you look at the top line growth, it's about 15%. The profit after tax has also grown quite significantly. And most importantly, EBITDA margins have improved if you look at it on a YY basis. So my guess is that, yes, I think the second and third quarter, we could see a little bit of more aggressive growth and some more, launches in terms of new outlets. I think that was the negative point in the earlier quarters. Market were expecting strong, kind of outlet growth, which did not happen. So my guess is that these are not bad numbers. In this kind of market, clearly, I think the first quarter is always a slow moving quarter for Trent. The second and the third quarter are quarters where you'll see a big jump up in revenues and margins. So we are positive on the stock. I think, from a longer term perspective, clearly, I think the growth potential in India for the retail business is very large. We'll have to see how the company scales up its opportunity and obviously maintains these margins. As you rightly pointed out, if the company is able to maintain these margins, then I think it's a very good thing. The market should definitely be happy about this.
Okay, all right. So that's the view coming in on Trent. Swiggy is the other one because, today is their investor day and they've laid down their vision for 2031. They're expecting their EBITDA to go to almost, this is the adjusted EBITDA that I'm talking about, to 10,000 odd crores by FY31. Overall, even in terms of where the guidance goes, in terms of the overall growth for gross order value, the expectation is that the gross order value can see an uptick of 30% to 2.5 trillion by 2031, of which the bifurcation between food delivery and Instamart is that food delivery, it's expected to grow anywhere between 2.5 to 3.5 times, and for Instamart the target is to reach 1.5 trillion by FY31. So that's where Swiggy goes, but it's seeing a downtick of around 1%. Avinash, quickly, any view on Swiggy? Because, overall in terms of where the stock performance go, it's continued to be under pressure. But do you think this guidance given by them will kind of make any change in terms of where investors' eyes lie?
I think, the guidance looks very impressive, but the bottom line is that whether they'll be able to actually put out these numbers, because actual execution is going to be important. So guidance is definitely very promising, very aggressive, but I think the markets, the way they are and the kind of competition which is expected, like Zepto is also preparing to come in for an IPO. Flipkart is also planning to get into the QSR service. So I think clearly more competition is going to come in. Growth may come in, but I think margins are something which we'll have to keep a close watch. And as of now, they're burning cash. So, the market would first look at the signal that when are they going to be operating profit EBITDA positive, because that would be a signal that, they have covered their costs significantly, like what Blinkit has done. Blinkit is now growing very rapidly after its initial launch. So market should look at these data points very closely before, they decide to re-rate the stock going forward.
Okay, Nairaj, what's the opinion on some of these platform companies? Let me throw in a Paytm as well, because ultimately there is a conversation about the MDR, and I know that it's not really related to what Mahima was just speaking about, but we're talking about technicals here. So let me toss in a couple of these new age names as well. Nykaa posted numbers not too long back. It's an interesting stock to track. The stock is down about 1% or thereabouts right now. So Nykaa, Eternal, Swiggy, Paytm. What would you say?
Yes, Alex, Paytm has, we have seen some good amount of up move even after the result also, it has maintained at higher levels. On the other hand, Nykaa showing some marginal profit booking from the highs. We have seen some good upside momentum, stellar up move in Nykaa recently. But in Swiggy, it is showing some high volatility after the result. The trend has bounced back from the lower levels. The stock price is just making a base to move up. I think more upside is likely Swiggy in the near term.
Okay, all right. Let's now talk about Hero Moto as well. It will be posting its Q1 earnings today, and I think we've Puneet joining by to give us as to what can you expect from Hero Moto's numbers. Puneet?
Well, thank you for that. While the results are expected to be good in terms of revenue, a 30% strong growth that we're expecting, you could see some margin progression on the downside, and hence that guided range of the company of 14 to 16% might actually be breached. So these are going to be important set of numbers for the company. EBITDA margins are expected to fall by 130 basis points to 13.1% versus 14.4%. And this will be below that range of 14 to 16% for the company. It might be the first time that they'll be breaching that mark, and hence the results as well as the commentary that comes through will be important. Profitability hence will rise only 11% versus a 30% revenue growth led by raw material cost impact. But this has been driven largely by volumes, so sales are up 23% for the company at 16.7 lakh units for the quarter, and that has resulted in the 30% revenue growth that we are progressing. Margins, I mentioned, will be under pressure. There's also been a very adverse mix of higher sales of the lower CC models, and hence that continues to. Finally, we will be watching out for the commodity impact as well as the commentary on the range as well, but they are expecting a high single-digit growth in terms of the industry volume. So second half there will be some slowdown, but essentially on how the company progresses on raw materials as well as what's happening with the scooter side of things, the EV has done well. On the ICE scooters, those will be some of the key other talking points to watch out for from this result.
Right. Thanks so much, Puneet, for laying that out for us. So Hero MotoCorp clearly one to track. Of course, it's lost ground. Remember, actually, you've never seen this, so I can't ask you to remember. You should actually look at that coloring on the chart, and you will see this for all of the F&O stocks. That yellow band that you see is where trading has halted or paused for now. Just to give you a delineation about how things will take place, right? 315 is where that action stopped. And once you have the price that it settles at, that's when you will actually see the move of the graph. But Avinash, on the fundamentals, two-wheeler manufacturers have actually come back to the fore. Quite a few of them posting very good set of numbers. What do you say about Hero though? You're on mute.
Yeah, sorry. Alex, I think the markets are definitely expecting some pressure on margins. But if you talk about the volume growth, I think volume growth for Hero Motor has been quite good. I think one basic, kind of negative or, weak point for them was the weaker monsoon this time. But I think July monsoons have started. So hopefully the second quarter could see a little stronger demand from the rural market, which is a strong point for Hero Motor. But otherwise, in terms of the overall volume growth, if you saw the July numbers, all the two-wheeler companies have done well. And I think this momentum will continue. So typically, with the RBI also holding on to rates, I think in terms of the volume growth, I don't think there could be any obstacle. But yes, we'll have to see the numbers and the kind of commentary the management says. And if there is any margin pressure, I have a feeling that they might in fact increase prices because demand on ground continues to be quite strong. So structurally, we are positive, but we'll wait for the numbers to get a better sense.
Okay. Kush Vora joining us right now just to navigate the last few minutes of trade. Kush, we were speaking about this earlier today, and it'd be interesting to find out what you have identified in your study of some of the options trading that has taken place. So what strike have you identified, and what was the price of this option that you have identified around that 310 mark?
Hey, first of all, very good afternoon, Alex. This is turning out to be extremely interesting, and I'll tell you why. Because for today's Sensex expiry, if you look at the 78,700 call option, the price for this one was at 360. Right now, we are in the post-closing session, and guess what the price is reflecting right now? 500 already. maybe the market is already sensing that yes, there will be an uptick in some of these or the index itself. But actually now it's again cooled back to 370. So this is the kind of volatility that we are perhaps starting to get used to. So yes, this the 78,700 call option, which was almost at the money, from a spot perspective, not the futures perspective, by the way, had actually shot up to 500 plus, is now back to 360. I think in another 5 minutes or so, we'll know where it finally settles, and it'll be interesting to see if it does indeed have that kind of spike that we saw when the Nifty expired. We saw a lot of options jump as high as 70, 80, even 100%.
King Kush earlier today, and the conversation was about the challenge that would be faced with regard to delivery of derivatives. Because in a situation where your closing is unpredictable, that can cause problems. Can you describe what you're seeing right now and why that might pose a challenge?
Alex, it's a very serious issue because a lot of traders, what they tend to do is they just tend to leave their options assuming that it'll go it'll go out of the money and hence zero. If because of this volatility, they expire in the money and you actually have to give delivery, it is going to be a serious challenge for a lot of traders. Hence, since Monday, we've been suggesting that, don't let your options expire at all. Just square them off, anytime between 3 to 3:10, not even wait till the last, minute or the 11th hour. What I would hope is that since we've got time till monthly expiry, and that's when the physical settlement will be required, which will give us a good month into this closing system. Hopefully, a lot of issues will be ironed out, and this might not crop up. But if it does, it is actually going to pose very serious issues, and especially the retail traders are going to have a very hard time meeting those delivery requirements.
Okay, and what about the Nifty, Kush? Because 24,600 is where there is more action, no more volumes being indicated. What is it that the derivatives data is suggesting?
Mahima, I would say ignore Nifty for now because today is the Sensex expiry, and that's where the option prices will settle, right? So there's a possibility that yes, you could see a bump up in Nifty as well, like we've been seeing in the last three sessions, but it will not really affect much. The prices will remain the same for options, for futures. The Nifty cash, spot rather will see a bit of bump up, but then tomorrow morning, as we've seen in the last 2-3 sessions, it'll sort itself out. So not worried too much about Nifty today, by the way.
Any particular stocks where you're seeing significant spike or significant downtake? Any particular name that's coming in your radar?
Yeah, that's exactly what I'm watching out for, Mahima. I think we'll have to wait for the final closing rates to come in to see what kind of pump up is there and in which stock. So currently it's very difficult to predict.
Just to describe what is happening, and now we have a little bit of clarity, Kush, is ultimately between 320 and 325, you had the auction process that has been concluded. You have limit orders after 325, and randomly there is a close before 330, after which the order matching takes place. And order matching generally takes place fairly quickly. So within the span of the next couple of minutes, you should have the closing, correct?
Absolutely. Absolutely. I don't think we'll have to wait till 3:30 also, or perhaps just at the stroke of 3:30.
We've already seen a change. I think we've already seen a change. Let's pull up the benchmark Nifty 50 if we can. It's 24,636. All right. And yeah, so it's not too much of a change from, unless it changes further, which I don't anticipate that it will. 24,627.95 was where the Nifty 50 closed briefly at 315. 24,636 is where it is seemingly closed at the end of that window. And I wonder if there's a dramatic shift in any of the underlying stocks, and I doubt very much if that is the case. The Sensex at 78,785 has actually closed slightly below. Actually it's 78, no, it's above. Okay, 78,954 is slightly above 78,862. Okay, so 862 was where it closed at 315. It settled slightly higher. There's not as much of a shift that you've seen during the cash window as you've seen in past trading days. And we've got actually, Kush, are you seeing what I'm seeing? And so therefore you can second what I'm seeing, right?
Alex, if you ask me very honestly, this is actually this is fantastic in a lot of ways, because the gap that we've seen from day one up until now is actually starting to shrink. At least on the Nifty, you've got that. But like I said, we have to be mindful of the Sensex expiry. That has seen a bump up, but not the kinds that we've seen over the last 2 to 3 sessions. So I think the system is finally perhaps starting to find its feet. I may be speaking too soon, but this is a good expiry if you ask me. Not that the option prices have moved so dramatically as they did on Nifty expiry, say by 70, 80 or even 100%.
If we have those graphics, can we pull that up for the benchmark Nifty 50, for the Sensex and for the Nifty Bank? The value at 315. Yeah, okay. So no, these are the top CAS F&O gainers, and this is, by the way, okay. So just so you understand what we're presenting to you, this is a value at close of 315. That is when the cash market for F&O stocks is paused. 320 is when, remember, the cash auction starts. 330 is that closing price, right, effectively. So the change that you're seeing is on your right in rupee terms. And quite a few of these stocks underlying have actually seen a change. Bosch is quite significant, but remember the ticket price is quite high. If we have the value similarly for the benchmark Nifty 50, for the Sensex and for the Bank Nifty, if we can pull those up, then you will see what I'm talking about. I have that on my screen right now. The Bank Nifty had actually closed at 58,007 or 008, and it's about 50 odd points or thereabouts that it has changed with. I've got Sharad standing by just to talk about some of the trends that he's seeing in the F&O space. Sharad, I think you can take heart from the fact that today there's not a dramatic shift in either the underlying securities in the F&O space or in fact in the indices.
Alex, you are right, and of course the main thing is the participation is there, and the difference which was there, first day 200 points, second day 160, third day was 60, and now between the Nifty, spot and futures, we are seeing around 20 points difference or something like that. Okay, it's around 100, it's keep on changing, but nevertheless it's still on the lower side. It's at least half on what the average is which we are seeing. So definitely we are seeing a good price discovery happening in. Of course, Sensex is having a slightly lower volumes, but Nifty Bank, you see, just 116 points. So yes, we are going towards the price discovery as of now, and it seems like the system is catching up and learning right now. But of course, we need one more trading session to understand what the clear trend is going to be. And let's look at the open interest, how things are panning out. And now, yesterday we had seen this large candle. It's still there at 25,000. But at 24,600 and 24,700, this is where the congestion levels are there. Largely, Nifty is closing flattish, and the variance, interestingly, has come down. Is it because of lower volumes, or is it because of higher participation? That's what we're going to look at the data today at the end of the day. Open interest gainers are also some there. Of course, the cash impact is there, which Alex had mentioned. Kind of, you could say, for Blue Star, Kalyan Jewellers, this is where we are seeing some kind of a momentum, a long build-up at least happening in Kalyan Jewellers also. Let's pull out the open interest losers to show you how things are panning out, especially if you look at stocks like LIC, where the earnings will be coming up, a little bit of long unwinding coming in the positions, and a sell-off after their fundraise as well. So yes, there is variation, but the range is narrower right now.
Thanks so much, Sharad, for laying that out. And Kush, before we got the final price for the Sensex at 78,955 or thereabouts, we were talking about that 78,700 strike, right? The call. What is the experience that you would have had if you had managed to get that call?
No, it would not have been a profitable trade today, because like I said, at 315, the price for that call option was 350, 360 rupees. And given the intrinsic values, finally settled at 254. So like I said, this is still, if you ask me, an aberration, but not the kinds that we had seen on Tuesday. Tuesday, what happened was, we saw a big bump up on the Nifty, and then a lot of options went, in the money, and the premiums actually went, significantly higher and settled higher. Here, the premiums actually kind of reduced. So it's behaving a little differently to what it did on Tuesday, and would not have been a profitable trade even if you sort of took the Tuesday trade as your model and went into buy the option and then let it go into expiry. I think the sellers will perhaps be a little more happy today.
Kush, what about the 79,000 call option? Because that's where there has been more volatility. What do you make of that?
So, Mahima, that's even with the kind of closing that you're seeing right now, 78,954, that's an out of the money call option. So that is going to go zero. I don't think anyone's complaining about that.
Okay. Because it has from a 320 to almost zero. Correct. Is what we've seen. Correct. So that's the reason. I think if we have Nagaraj also with us, it will be okay. We don't have him. But Kush, lastly, in terms of what Sharad was pointing out for stock specific action, because a lot of them seeing long build up, especially for something like a Kalyan Jewellers, which did see a 5% uptick. Anything that you're spotting stock specifically because now the prices have settled?
Again, I would say ignore these moves for now, because we have seen these moves play out or rather get rationalized the moment markets open the very next day. So for me, this is not a big concern. And it's a very logical thing right now that, since we've not seen a very big bump up, it's a good thing that, stocks like Reliance, HDFC and, ICICI, the heavyweights have not seen this kind of a bump up. So relatively smaller, trade or rather lesser traded stocks have seen this kind of move. And this will sort itself out tomorrow morning at about 9:15, 9:16 itself.
Is an at-the-money strategy still possible at this juncture?
I'm afraid not, because markets, they're learning very quick as they usually do, right? So, even if you would have deployed an at-the-money straddle, long straddle, you would have lost money. I think the market is now starting to get back into the favor of options sellers, which in a way, if you ask me, is a good thing, because, they're generally the market maker. So you want, you don't want too many aberrations on the, on the option premium on the short side. I mean, you don't want the sellers to get penalized. Anyway, the risk reward ratio is not in favor of them while writing.
All right. Kush, thanks so much for joining in and explaining that to us. I think what we will do now is just give you a sense of how we've traded today. And what you're seeing on the screen, of course, is the benchmark Nifty 50. Where do we close? At 24,637 or thereabouts. Pull up the Sensex as well, and you will see that because it's Sensex expiry, just a tad bit more of a spike that you've seen for the Sensex at the end of trade. We've closed at 78,955 or thereabouts. And we'll get you the internals of how much participation you saw in that cash window for the Sensex expiry in just a bit. But before we do, let's talk about the broader markets as well. And that's where you've actually seen a closing of the gap over the course of the session between the advances and declines. You've ended at the low point of the day for the mid-cap index, down about 0.4%. The small-cap index also cooling off just a tad bit, managing to stay in the green to the extent of 0.2%. So that is certainly a positive. In terms of individual stocks, just pull up the heat map for the Nifty 15. We'll see where we close. In ascendancy, you have Reliance Industries, State Bank of India, BEL, Eternal. State Bank of India doing particularly well ahead of the results. There is expected to be a positive number on the NIM front. That's certainly something to look at. Power Grid, Tata Steel, JSW Steel, and a couple of the automotive names not doing well today. But I think it's been an interesting day of trade, particularly that close on account of the cash. But it's been an absolute pleasure bringing it to you. Thanks so much for staying tuned to India Market Close. Do stay tuned though. Lots more coming up over the course of the day. This is NDTV Profit.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch.
Hello and welcome to NDTV Profit. You're tuned into Crypto Minutes by Coin Switch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains range-bound between the $64,000 to $65,000 mark. India's tax authority issues guidance formalizing crypto reporting. Interestingly, SEC Commissioner Hester Peirce remains upbeat on crypto reforms. And lastly, S&P gives BlackRock tokenized reserve fund top stability rating. Today, let's understand one of the most important habits that separates the disciplined traders from the emotional ones: stop loss and take profit discipline. Now, whenever you enter a trade, don't just decide what to buy, decide when to exit. A stop loss is the maximum loss you're willing to take on a trade. If the price falls to that level, you exit. This helps protect your capital and prevent one bad trade from turning into a much bigger loss. For example, if you buy Solana for 10,000 rupees, you can set a stop loss at 9,000 rupees, and if the market crashes, the system sells your Solana at 9,000 rupees, saving you from a massive drop. A take profits level is the price at which you choose to book your gains. Markets can be unpredictable, and waiting for just a little more often leads to giving back the profits. A predefined exit helps you lock in your gains, at least systematically. Now, for example, if you buy Solana at 10,000 rupees and set a take profit at 13,000 rupees, the trade closes with your 3,000 rupees profit the moment Solana hits 13,000 rupees, even if the price drops right after. Now, the biggest challenge isn't setting these levels, it is sticking to them. Fear often makes traders hold on to losing positions, hoping they'll recover, and greed makes them hold on to winning positions for too long. Now, they expect the prices to keep rising, but both can actually hurt in the long-term performance. Now, looking at the professional traders, know that the success isn't about winning every trade. It's about managing risks consistently. A small planned loss is always better than an uncontrolled one, and a booked profit is always better than a missed opportunity. Now, whether you are trading stocks, derivatives, or crypto, having a clear stop loss and a take profit strategy and following it with discipline can make all the difference over the time. Now, trading isn't about predicting every market move, it's about having a plan and executing it consistently. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best election coverage of the year, West Bengal election coverage. Best podcast show of the year, NDTV Control All Defense. Best primetime anchor of the year, Syed Suhail. Best female anchor of the year, Vasudha Venugopal. Best on-ground coverage of the year, Operation Sindoor coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest
watching Market Express with me, Shreyanshi Singh, and this is the show that's going to get you a snapshot in terms of everything that has happened, be it the trading session or news and updates from within the country as well as across the globe. First things first, let's take a look at what the markets were really up to, and especially when you talk about the Dalal Street that ended on a rather quiet note as well, with benchmark indices largely range bound through the session. The Sensex managed to gain over 300 odd points as well. The Nifty also closed near the 24,600 mark, but overall, if you take a look at it, the entire session as well, some little bit of restraint is something that you saw coming in, especially towards the end of the session. When you talk about sectoral trends, largely remain mixed as well through the session. Realty and auto stocks also ended under pressure, while PSU banks and oil and gas, some of those names actually provided a little bit of support to the broader market as well. But moving on, let's talk about something like a trend that was buzzing away in trade, and you did have the revenue, profit and operating margins all coming in ahead of street expectations as well. When you talk about the stock, 7-10% downtick coming in, but the robust margin expansion is something that you're looking at that really stood out. Analysts also flagged muted like-for-like sales growth and slower store additions that you were looking at. So some areas of concern really, and that seems to have been what the stock focused on the positive side. Emerging categories also continued to scale up, while the Star grocery business that showed further signs of improvement as well. Let's also move on and talk about something like a Navin Fluorine though. That's reported a strong set of numbers in the June quarter. Revenue and profit and operating margins actually rising sharply on a year-on-year basis. When you talk about the stock, about 13.5% uptick coming in, and performance largely driven by operating leverage, higher volume offtake and broad-based growth across its businesses. The CDMO segment, when you talk about that one, that's the one that's leading charge really, with more than 80% growth, while specialty chemicals and high-performance products also delivered a rather robust show, on the back of which the stock was buzzing away with that 14% uptick. Let's move on and talk about something like the Chalet Hotels that announced a major expansion of its Ativa branded hotel pipeline as well. So adding about 381 keys, and you're looking at about a 3% odd uptick coming in for the stock across Hyderabad and Pune. They've added some of these keys, and properties are going to be developed under a lease model in partnership with Mindspace REIT as well, reinforcing the company's asset-light growth strategy. You're looking at the company also planning to invest close to 450 crore rupees, and that's towards fit-outs, with the Hyderabad property also targeted for a launch in FY29, and the Pune project also expected to open in FY31. Let's move on and talk about something like an Aegis Logistics that reported a standout June quarter as well, with revenue rising 37% on a year-on-year basis. The big highlight, in fact, that you were looking at was the operating performance, as EBITDA nearly tripled and margins more than doubled as well to over 30%. Strong operating leverage also lifted the bottom line, with the net profit also surging to 480 odd crore rupees, reflecting some of that robust execution across businesses. Let's also move on and talk about something like a Goldman Sachs that has rejigged its defense stock preferences, upgrading Hindustan Aeronautics to a buy rating. 6.5% uptake also coming in for a stock like HAL. while also downgrading data patterns to neutral. Let's talk about that one as well. So the brokerage really is believing that execution risks at HAL are going to begin to ease from September this year, improving its growth outlook. In contrast, Goldman in fact is saying that data patterns has already reached its target price with limited near-term catalysts. The brokerage now prefers HAL over something like a BEL or Astra Microwave for that matter over data patterns. Let's also move on and talk about Biocon that reported a strong start to the financial year with consolidated net profit rising more than 53% on a year-on-year basis, about 3% uptick coming in for this particular counter. The improvement when you talk about the results was driven by robust growth. When you talk about the biopharma business, that's where the total income has actually increased to over 4,300 crore rupees during the quarter. The stronger than expected performance was well received by the market, with Biocon shares rising around 4% in early trade as well. Investors are going to be watching out in terms of whether the company can really sustain this momentum over the coming quarters. Let's move on and talk about something like a Bajaj Electricals. And this one's also reported a sharp improvement coming in the June quarter performance. Look at that 10% uptick, and that should tell you why the stock was in focus, largely led by a strong recovery in profitability when you're looking at this quarter. And consolidated net profit jumped to nearly 49 crore rupees from less than 1 crore rupees a year ago. So you're looking at EBITDA also more than doubling. The revenue growth, when you talk about that one as well, remained a little bit modest at just over 2%. But operating margins, that's where you've seen some expansion come in to 7.1% from 3.1% last year, reflecting a significant improvement even when you talk about the operating efficiency. Let's also move on and talk about something like an SCPC that extended the rally in terms of the shares, 3.5% thereabout uptake coming in. The company has really bagged an order also coming in from sale, about 800 odd crores order there, and you're looking at a contract that is valued at nearly 70% of its current market cap utilization as well. So you're looking at a big order coming in from this particular company. The order really involves civil and structural works for the company's pellet plant under its 4.08 MTPA crude steel expansion project. Project is scheduled to be executed over the next 32 months. So that's really the timeline that you're looking at here. Let's also move on and talk about Meta that has really disclosed that one of its AI models was able to connect to the internet and gain unauthorized access to another organization's systems during an independent security test. Now, the company said that this particular incident was caused by a misconfiguration in the testing environment and is now under investigation. The disclosure follows similar incidents, in fact, involving AI models from OpenAI and Anthropic as well, renewing some of those concerns over the cybersecurity risks of increasingly autonomous AI systems. Let's move on and talk to you about some national news then. The protest over alleged irregularities in Jharkhand's JPSC and JSSC recruitment examinations is set to cast a shadow over the monsoon session of the State Assembly. The student-led agitation, in fact, is now into its 13th day. It's gained momentum with 6 aspirants continuing an indefinite hunger strike. Protesters are demanding the cancellation of the allegedly tainted exams and a fair, transparent recruitment process as pressure mounts on the state government to respond. Let's move on and talk about resident doctors across Maharashtra as well, who've launched an indefinite statewide strike, escalating their opposition to the state government's proposal to grant Maharashtra Medical Council registration to certain homeopathy practitioners, while emergency and casualty services will continue for the first 24 hours. The OPD services, routine duties and academic activities at government medical colleges will remain suspended. Doctors are saying that their concerns over the BHMS CCMP policy have not yet been addressed despite several rounds of talks. Now the strike is coming in as the members of this association continue their protest at the Mumbai's Azad Maidan as well, demanding the government rethink the proposal. Let's move on and talk about former Tehelka editor Tarun Tejpal, who's been sentenced to 10 years in prison in the 2013 sexual assault case. The verdict comes more than a decade after the alleged incident, marking a significant development in the long-running legal battle. Reacting to the judgment, Tejpal claimed he was a victim of political vendetta. The case is expected to move to the appellate stage as the defense explores further legal options. Let's move on and talk about Defence Minister Rajnath Singh chairing a meeting of the Parliamentary Consultative Committee for the Ministry of Defence in the national capital as well, with a focus on the Territorial Army. Senior defence officials briefed members on the force's mandate, operational role and key achievements. Committee members also offered suggestions to further strengthen the Territorial Army and enhance its effectiveness as an important support force for the country's defence preparedness. Moving on then, let's talk about Iran, that has warned Gulf states that any fresh US military strike on its territory could really trigger retaliatory attacks on critical energy infrastructure across the region as well. In fact, according to sources, this particular message was conveyed through high-level diplomatic contacts after US President Trump threatened to target Iran's energy network. The warning highlights Tehran's efforts to really raise the cost of any future military action by putting Washington's regional allies on notice. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।